Hello.
Welcome back to Worldwide Exchange. Investors are preparing for one of the more high-profile IPOs this year. CoreWeave is set to price its offer later today and begin trading tomorrow. Christina Partsenevelis has more.
Well, Frank, CoreWeave's storming towards a $2.5 billion IPO, maybe even higher, with some eye-popping numbers. You got 300,000 GPUs across 32 data centers, $1.9 billion in revenue just last year alone, and a forecast of $4.6 billion in 2025. It's really the fastest growing company to go public in years, renting out NVIDIA-powered compute, or GPUs, to AI giants like Microsoft, for example, which contributes 62% of its revenue, and OpenAI through an almost $12 billion deal that was just announced. But here's the catch. NVIDIA, the chipmaker fueling CoreWeave's rise, might be eyeing a $150 billion server rental business of its own. This, according to the information. With its DGX cloud platform and about $36 billion in data center revenue in its last quarter already, NVIDIA could shift from supplier to rival, controlling the GPUs CoreWeave depends on. Meanwhile, CoreWeave's burning through cash, $15 billion projected for 2025, while sitting on $7.9 billion in debt and $15 billion in lease obligations, all of these numbers according to its IPO prospectus. Those NVIDIA chips, though, might not stay revenue gold mines forever, especially with hyperscalers like AWS and smaller players like Lambda Labs crowding the space. The IPO lands in a jittery market, testing if CoreWeave's AI compute empire can really outpace NVIDIA's shadow and its own balance sheet. Frank?
CoreWeave's IPO, just one of the big stories in the tech space this week. Alibaba's chairman Joe Tsai warning of a potential spending bubble around AI and data center construction, just raising some fresh worries about the sustainability of artificial intelligence demand. You also had CEO of the Sam Altman-backed nuclear tech company Oklo suggesting that President Trump will likely slash regulatory red tape for nuclear power to help fuel rising electricity demands around AI. One company at the center of all this, it's Equinix. We're joined now by John Lim, the company's chief business officer. John, good morning. Thanks for joining us.
Thanks for having me, Frank.
Let's start off with those Joe Tsai comments. Kind of shook up the market. We were tracking some data center stocks, including yours. They traded lower after Joe Tsai's comments about a potential bubble around data centers. What are you seeing when it comes to demand right now? And I want to can you compare it to pre-DeepSeek, DeepSeek, and after DeepSeek?
Absolutely. Well, first I'd say the overall data center picture for demand is quite strong and robust. And AI is only a portion of the workloads that are being housed by data centers. Data centers are powering everything we do every day. You're watching the news, you're ordering lunch, you're trading stocks, you're anything that's happening across the entire economy and infrastructure.
I got to be fair, John.
Centers.
We get that,
Yeah.
but has demand declined post DeepSeek? Are you starting to see it peak? It's one thing for it to be growing, but has the growth rate of demand that's coming in, I know this is kind of a nebulous number, but has that slowed down a bit? Are companies seeing that they are believing that they need less capacity?
We haven't seen that manifest so far. I would just say, again, demand is very robust. I would say we're pretty much constrained more around delivery of capacity off of the overall supply chain, utility being one of the key constraints.
All right. Speaking of utilities, power, that's one of the key components of a data center. Oklo had its earnings. They kind of put out there that there's a lot of demand for for energy coming from data centers. You're working with Oklo, but you're not going to get that power anytime soon. Kind of lay out how you're working with them, what contracts you've signed, and what are your expectations from that company?
Yeah, overall, the utility and power requirements, in particular for data centers, is going to be one of the limiting factors for us looking into the future. And so we're pursuing a strategy which is we want to make sure we're stimulating all of the players that are out in the market generating new capacity for us. And Oklo is one of those. And so our ability then to sign a contract, give them certainty that we're going to be there when the power becomes available as an off-taker, and that they'll be having revenue off of that, is important for them to continue their development.
So I was looking at a Goldman Sachs report earlier this morning. According to Goldman Sachs estimates, the data center power demand is going to increase by 165% by 2030. Do you believe that Oklo is going to be able to provide you with some power by then? And if not, where do you get it from?
Again, we're hopeful working with the administration that we can get forward progress on some of the permitting issues that are one of the largest barriers for broader adoption of nuclear energy. But again, we're working with everybody across the entire landscape for all abilities. Certainly, natural gas as a bridge solution to that is an option that we're pursuing.
You use nuclear right now. Like what percentage, roughly, what percentage of the power that you use right now comes from nuclear facilities?
Probably less than 10% on a global basis. Again, it's just part of the mix of the grid.
All right, it's part of the mix. Big event coming up this week, the CoreWeave IPO. CoreWeave is a customer of yours. What does this IPO mean, not only for your business when it comes to numbers, but also sentiment?
I think overall it's a great validation around the AI use cases that are out there and like the broader adoption of, hey, this is getting very, very real and delivering revenue and out to the market and impact for enterprises. And so I think that that's an important momentum builder for us. What we're doing for CoreWeave, it's really about bringing their capacity and technology to the rest of our customers. Our focus is around interconnecting all of the service providers around the world along with the top enterprises, helping their data connect into AI.
So with this IPO, do you believe that investors are going to see the success of the IPO as kind of a window into your business? I mean, this is a company that's certainly testing the limits. Christina Partsinevelos did a great job kind of laying out the company and some of the issues it has with debt and also GPUs that it uses, they're fast appreciated. So investors are paying close attention to this company for the quote-unquote AI trade. Do you think this is going to be, for investors, something that gives a window into the sentiment of how they see your business?
I don't think so. I look at CoreWeave as, again, an important customer of ours in terms of part of the mix of service providers that are out there. All of the hyperscalers are customers. You look at Amazon, Microsoft, Google, along with hundreds of other service providers across the entire landscape.
So if it jumps, you don't think your stock jumps along with it? I mean, they're a customer of yours, and it's kind of a signal that AI demand is strong. You don't think it benefits you?
I think there's momentum trade associated with that, but I think there's a broader macro picture that investors are looking at.
One of the quick questions, we were talking about it. A lot of steel and aluminum used in data centers. How will these tariffs impact you?
Well, we look at that certainly from a cost perspective and how we'll be able to translate that downstream into our customers. Again, our customers are able to absorb that generally. The data center portion is a pretty small total component of their overall spend.
It's kind of like you're passing it along to big customers like Amazon, Alphabet, et cetera?
That's right.
All right. John Lynn, Chief Business Officer of Equinix. Really great to have you here. Thank you very much.
Appreciate it, Frank.
Still on deck here at Worldwide Exchange, it was a contrarian call back in January when Citi's Beata Manfi was on the show recommending that investors buy European equities. Since then, the German DAX and the Stock 600 far outpacing the S&P 500 and the MAG 7 by very wide margins. Coming up, we're going to speak with Manfi once again to see if she is still standing by her bullish call, if her team says it could be time to turn the page. Stay with us. Exchange. Even with today's red arrows, Europe is tracking for one of its best quarters in recent memory, especially compared to the U.S. Quarter to date, the Stock 600, German DAX, and the FTSE 100 are on pace for their best quarter since 2022. The German DAX sitting just below an all-time high. Hammering that point home, hat tip to our Steve Sedgwick, looking at the MSCI Eurozone EZU ETF compared to the MAG 7 year to date. But debate has been bubbling if this rally is running out of steam or if it's primed for more gains ahead. Joining me now is someone who called this Europe breakout months ago right here on Worldwide Exchange, Citi Global Equity Strategist Beata Manthi. Beata, good morning. Good to see you.
Morning, Frank. Likewise.
All right, so I think here's the real question. We're seeing some economic slowdowns here in the U.S. I've talked to some traders. They think that slowdown just goes to the rest of the world and kind of slows down the economies and the markets in other parts of the world. Do you agree with that thesis, or do you see Europe continuing to outperform?
So our view is that the US and Europe could be on a completely different trajectory from the economic perspective, right? US economy has been booming for years, while the European economy was at the borderline of recession, in a deep slowdown, battling all the energy crisis and slowdown in demand and sentiment due to Ukrainian war. Right? So what we are seeing now is slowdown in the US, which I would argue on a relative basis in terms of US investors moving back to Europe, it could only emphasize this move. While in Europe, now economy is still at low levels, so that means fiscal multipliers should work better when you're coming from the low levels. We are getting these seismic policy shifts and huge amount of stimulus that will make its way into the European economy with some delayed effect, right? So we don't expect big numbers this or next year. Perhaps you have full impact of the fiscal multipliers from defenses and this broader infrastructure spend in 28, 29, but but we know that that's coming, and there is a silver lining from this delayed effect, because actually there'll be no inflationary pressures from the stimulus in the very short term, which means the ECB still has go ahead and continue cutting as they have been in the near term.
Okay, so you're expecting more cuts from the ECB. What about here in the U.S. as we continue to see some signs of a slowdown here in the U.S., maybe not in all the hard data, but when we talk to a lot of companies, you're hearing that from them, and certainly here in the U.S., the consumer is quite a bit stretched. If we see rate cutting, at least one rate cut by the U.S. Fed, what does that mean for the U.S. markets in your mind, and what does that mean about the U.S. markets potentially closing the gap?
So when it comes to the U.S., the big question is it just a slowdown? Or is it actually a US recession that we don't see and there is more weakness underneath the surface? Of course, if it is a recession, you'll get a stronger reaction function from the Fed, but it's not. It is going to be painful if that was to happen. For now, our view is just a slowdown. Soft data is rolling over, and that means that on the relative basis, the rest of the world starts looking more interesting. And when you look at the equity markets, given the expensiveness of the US equity, so we've been arguing for quite some time, they've been priced for perfection. The slowdown tells you that perfection is no longer present, and on the top of things, we have this unwind of mega cap tech valuations. We call it the DeepSeek effect. It doesn't question the earnings story. AI is going to continue to be an important theme in the market. However, it's questioning the PE story of that theme, right? So that's also another leg of investors perhaps diversifying away from these high valuations to parts of the market like Europe that has potential to grow from subdued levels, which from these levels it's easier to get these positive deltas, right?
Understood. We say often on this show that investors seem to have found religion when it comes to valuation. Before we let you go, Europe, certainly not a monolith. Is there one part of Europe that you see as the most attractive? I would imagine it's not automakers, especially not today. But is there one part of the market or one of the bourses that you think is more attractive than the other?
So let's look at it from a bit longer term perspective, right? Because we've been always arguing that this month is going to be volatile. Actually, in our allocation, we did some defensive tilts. However, over medium to long term, we are arguing that the seismic policy shifts that are coming through and the stimulus will find its way to longer term growth trajectory from the EPS perspective. Therefore, potentially re-rating Europe over longer term, that could add 2 PE points. And when you think about sectors that could be more vulnerable in a positive way to the re-rating, there are 3 factors that come to our mind. Number 1 is you want to be in cyclicality over longer periods of time. Number 2, value has more room to re-rate. And number 3, and that's very important, you go down the cap scale to mid caps. Now, the dust has to settle with tariff risks and so on, but over longer term, we think this is where you want to be because that's the part that will most benefit from what is happening in the economic front.
All right, Beata Manthe from Citi. Great to have you, as always. Great insight. Really appreciate your time. All right, coming up here on Worldwide Exchange, former U.S. Assistant Attorney General Jonathan Kantner, and why he says President Trump's tariff push may be on some shaky legal footing. We'll be right back. Stay with us.
Will effectively be charging a 25% tariff, but if you build your car in the United States, there is no tariff. And what that means is a lot of foreign car companies, a lot of companies are going to be in great shape because they've already built their plant, but their plants are underutilized, so they'll be able to expand them inexpensively and quickly.
That was President Trump escalating his global trade war with new 25% tariffs on autos. The president keeping up the pressure this morning, threatening allies and others with more action as world leaders fire back. Welcome back to Worldwide Exchange. I'm Frank Holland. Coming up this half an hour, more on the president's latest moves and why his call to ship auto production back to the U.S. that could be easier said than done. But first, we're going to get you ready for the trade day ahead. A lot to get to. We begin with the U.S. markets. Major indices in the Russell 2000 closed lower after the president announced those new auto tariffs. Take a look at the futures this morning. We see we're in the green. It was kind of mixed and lower earlier. Now in the green across the board. The Dow looks like it would open up about 50 points higher. The S&P and the NASDAQ both fractionally higher. Again, turning positive a short time ago. This action as investors, they try to digest comments from the president that tariffs will be permanent.
What we're going to be doing is a 25% tariff on all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff. We start off with a 2.5% base, which is what we were at, and we go to 25%.
So again, the market's reacting to that announcement. Taking a look at the NASDAQ 100 laggards first right now. These are some of the worst performing stocks in the NASDAQ 100. The pre-market, Cognizant Tech at the top of the list, up down about 2.5%. AMD, Diamondback Energy, Palantir, also on semiconductor, pulling back about 1.25%. This is a supplier for many auto companies. These are your worst performers on the NASDAQ 100. Then we have the NASDAQ 100 gainers. The other side of the coin this morning, PDD Holdings moving up almost 1% higher. CoStar Group, Gilead Sciences, Starbucks, and Keurig Dr. Pepper rounding out the top five. Keurig Dr. Pepper, a staple, kind of a defensive trade, getting a boost right now. Shares up over 0.5%. Also, we're going to do a check of U.S. auto stocks after that tariff announcement that was actually applauded by the Auto Workers Union. Elon Musk also tweeting that Tesla would be impacted. Taking a look right now, Tesla, those shares actually positive right now, up about 1/3%. They were lower earlier today, but other auto stocks you can see moving lower. General Motors shares pulling back 6.5%. Ford down 2.75%. Stellantis pulling back more than 4%. We also want to take a quick check of foreign automaker stocks right now. Taking a look at those. Our Juliana Teitelbaum hit those earlier. Also under quite a bit of pressure. Hyundai shares pulling back more than 4%. This is even after the announcement of an investment here in the U.S. earlier this week. BMW pulling back about 2.5%. Mercedes pulling back about 3.5%. Toyota down just about 2% as well. And we want to check auto part suppliers that are also impacted by this. Taking a look, Magna International, those shares pulling back 2%. Lear 3%. Dana Inc. down here at the bottom pulling back almost 3% as well. And we want to check the ETFs tracking Canada, Mexico, and China, excuse me. As we mentioned, the president posting on social media earlier this morning, kind of a warning to those countries about any actions in response right now. We're seeing the MCHI that tracks Canada pulling up about 0.75%. The Canadian ETF just pulling back fractionally. The Mexican ETF, the EWW, pulling back about 0.5%. We also want to check some of these other international ETFs as well, tracking the ones. Well, actually, we're going to move on to Treasuries. Treasuries, we're seeing the yields tick up just a bit right now. Ticking up. We're looking at the benchmark at 4.38, moving up a few basis points, somewhat on some recession concerns and some other concerns about the economy. And we want to check the metals complex this morning as well. The president also considering tariffs on copper this morning, taking a look at the metals complex in the pre-market. And we are seeing, we're going to show it to you in just a second right now, seeing this action. We're going to move on. That's your setup for the morning. New this morning, President Trump threatening to impose far larger tariffs on the EU and Canada if they unite to combat U.S. tariffs. And a post just a few hours ago on Truth Social we were just talking about. The president says if they work together in order to do, quote, economic harm to the U.S., large-scale tariffs will be placed on them to protect the best friend that each of those two countries has ever had. That's a quote from the president. After the president announced yesterday he will set 25% tariffs on cars made outside the U.S., set to go into effect on April 3rd. The White House says the tariffs will apply to foreign-made cars and light trucks and are on top of tariffs already in place. In addition, there will be a 25% tariff on auto parts made outside of the U.S. starting no later than May the 3rd. President Trump saying these new tariffs will be permanent. Let's get more reaction on the president's trade and tariff policies. Joining me now, Jonathan Cantor, former Assistant Attorney General for Antitrust. He's also a CNBC contributor. Jonathan, good morning. Good to see you.
Wonderful to see you. Thanks for having me.
All right, so we talk a lot about policy on this show, but we actually brought you on to talk about the legality of all this. You said there may be some legal questions about these tariffs.
Absolutely. So while the tariffs are likely to be cheered on by labor and other parts that of the political sphere that don't normally align with President Trump, on the other hand, there's going to be a lot of opposition. And that opposition is going to question the legal basis for these tariffs, which the president is implementing under Section 232 of the Trade Expansion Act. And that requires a report assessing whether tariffs are necessary in order to further national security. That report that the president is relying on was done in 2019. Opponents of the tariffs are going to say that the report, Section 232 requires that the president implement the tariffs or announce them within 90 days of the report, and then implement them within 15 days of the announcement. And so there's going to be a legal question about whether the basis for these tariffs is a flawed process that would require the president to go back and enter into public comment, to enter into a new analysis using the Department of Commerce.
Well, Jonathan, a question for you. I mean, let's say he does have to go back and do that and do a new analysis. Wouldn't the analysis lead to the outcome that he would want it to because it's his, it's one of his secretaries that's going to be leading the analysis?
Absolutely. It's highly unlikely that the outcome will be any different. Instead, it'll just buy some time, which I think is the important point here. The president has been quite clear that these tariffs, he believes, are in the interest of national security. And these tariffs, perhaps unlike some of the others that have been announced or at least threatened, really do go or appear to go more toward the core objective of trying to boost U.S. manufacturing. Of course, it's going to take a long time for U.S. manufacturers, even if they have the intention of, car manufacturers, even if they have the intention of ramping up their production in the United States, it could take years.
Yeah, fair enough. Our Phil LeBeau on our air saying yesterday that even if a company started today, it would take about 2.5 to 3.5 years, and that would be at lightning speed. So a fair point there. I do want to ask you, if there are legal challenges to this, does the president, does he have some footing to say moving manufacturing back to the U.S. is about domestic security and homeland security, just because we need more things made here in the U.S., and sometimes we have our data stolen by foreign actors or our technology stolen by foreign actors, and this is very similar, maybe just in reverse, to the export controls from the Biden administration. Is there a legal argument to that?
Yes, there is, and it is potentially compelling. Courts tend to give a lot of deference to the president on questions regarding national security, and if they follow the proper process, or a court deems that they have followed the proper process, then I think that deference is likely to result in, just as you say, an assessment that we need domestic manufacturing, including core industries like automotive, in order to make sure that we are protected in the event of a national security crisis.
Jonathan, one last question about the legality of all this. I remember during the first Trump administration, there was a lot of talk about forcing carriers like UPS and FedEx to actually know what was in the packages that are being shipped. There was talk about it. And FedEx actually sued the federal government. Is there any chance that automakers, they may sue the U.S. government this time around? I'm seeing some things cross the wires. Valeo, a French auto parts supplier, saying they're going to have to raise prices. Is there any window or opportunity for U.S. automakers, or maybe even foreign automakers, to sue the government here in the U.S., citing that 2019 report you're talking about, saying that it's kind of an unfair tariff, an unfair duty on their business?
I think it's highly likely we're going to see lawsuits. Again, whether they succeed or not is a separate question, but it likely will be based on, among other things, the shakiness of relying on that report.
From companies, though? Do you expect companies to do it, or would it be nations?
Oh, it will likely be companies. Nations would have to pursue most likely a different process, one that is unlikely going through the WTO or other sort of international bodies. So this is going to be companies having to take on the administration, which is a daunting task to begin with.
Jonathan Kanter, great to see you. You got to come back on the show. You're clearly an early riser, man. You look wide awake. Really appreciate your time.
Right on.
Appreciate your
Opening
time.
day. I'm excited for baseball season.
I'm a Phillies fan, so I'm pretty excited too.
All right, let's go Mets.
You had me, then you lost me, Jonathan. On a serious note, thank you for your time and your insight. Great stuff.
You bet. Take care.
Coming up here on Worldwide Exchange, playing catch up, the new pessimistic view on one NVIDIA rival, sending shares lower ahead of the open. You can see shares of AMD pulling back about 2.5%. The details coming up after this break.
what's ahead.
Welcome back to Worldwide Exchange. Time now for your morning call sheet. Jefferies downgrading its rating on AMD to a hold. This says the data shows the chip maker is still chasing NVIDIA's Hopper chips, and that gap will only increase around the Blackwell and Rubin chips. Bank of America downgrading its rating on UBS to underperform. BofA says regulatory pressures will likely continue to drag on the Swiss banking giant. RBC upgrading Northrop Grumman, moving its rating to outperform. It cites a positive shift in sentiment around the stock and says there's more room to run. All right, coming up here at Worldwide Exchange, getting investment access to private companies. Our Kate Rooney pulls back the curtain on these investment options and the high risk that may come with them. We're back right after this break.
Business.
All right, welcome back to Worldwide Exchange. Taking a look at futures right now. We're seeing futures, I guess mixed. The NASDAQ was positive, now moving very fractionally lower, almost flat. The Dow up just fractionally as well. Similar story for the S&P 500. With that, we're going to track the laggards and the leaders on the S&P right now. First, the gainers, WEC Energy. Those shares moving up about 4%, followed by Pinnacle West, CBRE, and Centene, running out your best performers. Then the other side of the coin, the S&P laggards. Not surprising here, you see General Motors. Those shares down about 6.5%. Ford also on the list. Those shares down almost 3%. Trimble and Celanese, your other two laggards on the S&P. All right, Chinese investors, they're reportedly gaining access to SpaceX through a secret backdoor strategy. According to ProPublica, routing funds through the Cayman Islands or other offshore hubs to buy their stakes. That raises potential national security concerns because of the company's Pentagon contracts. Investors here in the U.S., they've been getting more and more access to investing in private companies through special purpose vehicles, but the potential for high rewards, it also comes with some very high risks. Our Kate Rooney explains.
Hi, Frank. So yes, these SPVs are now ubiquitous in Silicon Valley. They're popping up in every mega funding round we've seen lately in private markets, and the structure is really different from what you'd see in a traditional venture fund, which invests in dozens of startups at a time, and then they really diversify their bets. SPVs, as they're also known, invest in a single company and take a concentrated bet. A fund manager will go out and raise money and then recruit smaller investors to get in. Flashback to 6 years ago, SPVs only made up about 7% of private shares, at least on the Forge Global platform. Today, It's around 64% of all shares traded. So what are some of the dynamics driving this? Well, there's more dollars staying in private markets as companies wait to go public. You've also got employees cashing out and selling shares in these secondary rounds, which is how a lot of the SPVs actually get a chance to invest in these companies. And the value, a lot of times, is being created in private markets. The private market index for Forge is up about 32% in the past 3 months, well outperforming the S&P and the Qs. So you get into an SPV, you still got to be an accredited investor and meet certain net worth minimums, but there are smaller investing platforms, think of AngelList, that are making this more accessible. I did hear a ton of warnings around SPVs in some of my reporting. It is really buyer beware at this point. Transparency is one big issue, and because these are only accessible to accredited investors, regulators do assume that these people are capable of doing their homework, which they really should be. There's a lot of hidden costs and layers of management fees that can pop up that can really dilute the value of any sort of private investments. And then you are taking a concentrated bet. As I mentioned, you're investing in one company at a time instead of an entire venture fund, which bakes in the expectation that 9 out of 10 of these startups are going to fail. There's also longer lockups and holding periods, so it can be unclear when the actual returns will show up until an IPO. Some do see the rise of SPVs as a sign of the top in private markets too. I have talked to some late-stage startups who, as a policy, will not take money from SPVs. They worry about the quality of investors, things like CFIUS concerns, and then there's worries about information rights as well. Frank?
All right, coming up here on Worldwide Exchange, the defensive player, our next guest says, could be a good way to hedge against a potentially slowing economy. That stock up 20% this year. We'll reveal it coming up next. Stay with us.
Greatest potential.
Welcome back to Worldwide Exchange. We close on the 6 a.m. hour. Check on a few of the big stories that we're following this morning. President Trump says he'd be willing to lower tariffs on China to close a deal for TikTok's parent company to sell the app's U.S. operations. OpenAI reportedly close to finalizing a $40 billion funding round led by SoftBank that would value the maker of ChatGPT at $300 billion. Apple is naming a dedicated head of its global retail stores, and Vanessa Trigub. She previously ran locations in the Western U.S., also handling retail operations. And Apple CEO Tim Cook paying a visit to China's AI hub in the hometown of DeepSeek and Alibaba. Cook meeting with developers. Apple is also making a $4 million donation to the city's elite university. While investors are still grappling with fresh tariff moves and threats from the president, taking a look at futures right now, we kind of saw them mix with the NASDAQ just fractionally lower. Taking a fresh look at it right now, the NASDAQ back to being positive, again, very fractionally higher. Similar story for the S&P. The Dow looks like it would open up about 70 points higher. The president making fresh comments about the country's top trading partners, Canada and the EU as well. And while futures are higher, auto stocks are still sinking. That's with the exception of Tesla. Tesla shares actually moving to the positive not too long ago. For much more on the trading day ahead, let's bring in Degas Wright, founder, CEO, and CIO of Educator Capital. Good morning. Good to see you.
Good seeing you, Frank.
First, I just want to start off with your thoughts about the impact of tariffs and just how you're viewing auto stocks. I know you're not an auto expert, but when you look at investing in auto stocks, what's your view right now?
So ultimately, we have an underweight to auto stocks because they're a consumer discretionary, and we saw a slowdown in the economy. So we expected automobiles to be impacted. Now with the tariffs, that's increasing exposure to European car companies such as Toyota. We do hold Toyota, and we're looking very closely at that, but we're seeing that the tariffs can have a negative impact on the automobile consumer discretionary sector.
All right, what about the overall markets? What's your word of the day? How do you see today shaping up, or just how do you see the current environment?
Yeah, so the word of the day is opportunity. Given the increased volatility, we see opportunity in defensive sectors such as healthcare.
All right, so you're liking healthcare right now. Are there any other parts of the market you're liking? I mean, we saw things like consumer staples kind of catch a bid yesterday. People were putting money in there. There are other defensive areas of the market, or maybe even areas that aren't defensive, but you still see having a lot of upside in this current environment, which, as you mentioned, has a lot of volatility.
Yeah, so some other sectors that we like is consumer staples, as you mentioned, utilities. We're looking for those companies that will not be negatively impacted by the downturn or the slowdown in the economy. So those are the sectors we like. And then this is also a stock picking environment, so you can find opportunities in other sectors also.
All right, so you're seeing opportunities in other sectors as well. I want to know, as we look at this economic slowdown, some people worried about a recession. In fact, Ernst & Young coming out saying they see a 40% chance of a recession coming up in the next 12 months. As you look at these other sectors, do you think they're going to be impacted, the markets, individual sectors, by the second read of GDP coming up later today? We've been talking a lot about the economy and GDP, and I know you're somebody who looks at the GDP now number that's put out by the Atlanta Fed quite closely.
Yeah, so that GDP now, back in February, it was at 3.9% growth. Since February, it has dropped significantly down to a negative 1.8 growth. So negative growth for the GDP going forward. And so what this means that we are definitely in a slowdown in the economy. Also, the possibility of a recession has increased significantly. You know, we're right about 40% probability of a recession.
So with that thought of a 40% probability of recession, you're agreeing with EY. What's your pick for today? You're saying you're seeing opportunity, so exactly where?
Yeah, so we see opportunity in Catalyst Pharmaceutical. It is a mid-cap biotech firm that has a very unique business model. That business model is that it acquires late-stage orphan drugs. It's referred to as orphan drugs because these drugs treat rare diseases but have a small use case. And because of the small use case, most pharmaceutical companies cannot be profitable. So, and hence they abandon these types of drugs, hence the name orphan. And so the Orphan Drug Act of 1983 actually provides cash incentives for these pharmaceutical companies to invest in orphan drug. And so,
Degas, we got to leave the conversation there. I apologize for cutting you off. Got to leave the conversation there. Your pick for today, Catalyst Pharmaceuticals. Really appreciate it. Thank you very much. Great to see you as always. One more quick look at futures. We mentioned we've seen some fluctuations when it comes to futures now. Once again, solidly in the green. At the half an hour is the solidly in the green, back in the green right now. Looks like the Dow would open up about 70 points higher. That does it for Worldwide Exchange. Squawk Box starts right now.
Good morning. As you know by now, President Trump opening a new front in his global trade battle, announcing 25% tariffs on cars made outside of the United States. Auto stocks getting hit around the world, and Elon Musk says Tesla is also in the crosshairs. We'll show you what's moving right now. And, yep, get out to Cracker Jacks. It's baseball's opening day. But the business of airing games on TV, not what it once was. We're going to talk about the uncertain future of broadcasting rights for the sport. It is Thursday, March 27th already, 2025, and Squawk Box begins right now.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernan.
Again with the...
Oh, we matched again.
Crazy. I guess it's just...
Mind meld.
familiarity, yeah.
Yeah. Andrew's off today.
Familiarity breeds contempt.
Yes, I know. Let's take a look at the U.S. equity futures at this hour. You're going to see right now we are up across the board. Dow futures up by about 75 points. The S&P's up by close to 5 points. NASDAQ up just fractionally, up by about 3 points. We did have down day yesterday across the board. The NASDAQ was the biggest loser. Dow was only off by about 0.3%, but the NASDAQ was down pretty sharply. You're admiring this.
Someone thought a lot about that.
About this jacket?
The whole outfit, yeah, the whole...
Oh, I put this together. I put this combo
did?
together, yeah.
It looks expensive to me.
Well, thank you.
Was it? Or you don't even know.
The jacket was.
That's what I mean.
Yeah.
We're a professional outfit here sometimes.
Occasionally.
Sometimes, and we do have people that care about. Occasionally.
I did not put this jacket out. I just put the shirt with it.
That's what I mean.
Yeah,
Someone.
I didn't put the jacket out.
Right.
Somebody
Okay.
else did.
TMI. I know, but behind the scenes for everyone, we invite viewers in. We love our viewers. Some have been with us for 30 years. So just so you know, there are people that be thankful that help dress us.
That's right.
Yeah.
Let's take a look very quickly at the Treasury market right now. The 10-year is yielding 4.39. The 2 years at 4.03 at this point this morning. 30 years all the way up at 4.75. We'll continue to watch this.
But it's not fair. With me, it's blue shirt and a different tie. That's all.
But that is a nice combo.
Well,
I like the darker blue.
matches.
That's darker blue than you usually wear.
Really?
I think so.
Okay.
Yeah.
President Trump, Jibber Dabbers is going to join us. President Trump announcing 25% tariffs on cars made outside the U.S. and threatening retaliation on the EU and Canada if they team up to fight the U.S. in territory. So more. I don't know. Don't get a lot of parts from Canada. What are our automakers going to do when they try to order seats from up there, Eamon? They got to immediately start building seats down here or something? I mean, it just seems like costs are going up.
Yeah, I think you're right, Joe. I mean, a lot of people thought this was going to be just on finished autos, but now it's actually on autos and auto parts. The president said his new 25% auto tariffs will begin to be collected on April 3rd. Now, that's the day after he's expected to impose sweeping international tariffs on countries around the world. The new auto tariffs will be applied to imported passenger vehicles, including sedans, SUVs, crossovers, minivans, cargo vans, and light trucks. And they'll also apply to key automobile parts, including engines, transmissions, powertrain parts, and electrical components. Now, last year, the U.S. imported approximately 7.38 million vehicles. That's 46.3% of the nearly 16 million sold in this country. And that's how many vehicles could be hit with this new tax.
We'll effectively be charging a 25% tariff, but if you build your car in the United States, there is no tariff. And what that means is a lot of foreign car companies, a lot of companies are going to be in great shape because they've already built their plant, but their plants are underutilized, so they'll be able to expand them inexpensively and quickly.
Now, United Auto Workers President Sean Fain reacted enthusiastically to this, saying in a statement, "We applaud the Trump administration for stepping up to end the free trade disaster that has devastated working class communities for decades." In the Oval Office yesterday, I asked the president if there were any conditions under which he would withdraw these tariffs or if they're going to be in place for the rest of his term. He said they are 100% permanent. I also asked Trump if these tariffs would benefit Tesla, since the EV maker produces its cars here in the United States, and Trump said that they would. But Tesla CEO Elon Musk posted on social media overnight that that's not entirely true, writing, "Important to note that Tesla is not unscathed here. The tariff impact on Tesla is still significant." Now, the administration is predicting that the new tariff will generate $100 billion in annual revenue for the Treasury, money that will be paid by importers bringing the cars into the country. Back over to you guys.
I didn't recognize your voice yesterday, Eamon. I saw the president answer. He looked over at you. I heard the question, but that was you must have been a little. I was kind of the end.
I was kind of blocked out. You know, he's got the big FIFA trophy next to the desk now. It's the FIFA Club World Cup trophy. So I was kind of behind that and trying to get my questions in over that.
I was surprised at the answer, as I'm sure you were.
What was the question? What was the answer?
The answer was, how long are these going to last? The question was the rest of your term, and he goes absolutely. I mean, he basically said 100% rest of my term. It's not
absolutely 100% is what he said. Yeah. I mean, I was asking if there are any conditions upon which people could get out of these, right? So could foreign countries negotiate? Could the automakers come up with some kind of a deal? What, you know, what's the conditionality here? And he responded that this is 100% permanent for the rest of his term. So I think, you know, this is a president who views these tariffs as a way to restructure American manufacturing and, you know, by extension, American society in some ways, and generate revenue for Treasury against his proposed tax cuts. So he doesn't want to pull these tariffs off. He wants them to be permanent, to have a long-term impact on the way America does business.
Well, Canada already said it's violation of a lot of the USMCA negotiated stuff. Is that true? Yeah. Are there a lot of things in here that just fly in the face of that?
Well, I mean, I think that's going to be for the lawyers to argue out, and then I guess the question is who enforces that.
Right. What do they go to the WTO or something? I don't even know how you fight that at that point.
And would the Trump administration even respond to an adverse ruling from an organization, an international organization like that?
What if you want a BMW? And I don't. But what if I did want a BMW? Would I?
It's going to cost you.
Because I'd have to turn into a really obnoxious driver if I bought a BMW. But
what? That's a stretch.
Yeah. Then I don't know if I could. I'd have to. I have to lessen my obnoxiousness.
You have the video of you. Too.
Yeah, I know you do. Eamon, there's a lot of BMWs. So a lot of these foreign automakers do have plants here. I'm worried about the
my Toyota was made in Indiana.
Right. I'm worried about the parts because you can't parts as parts, but because you can't immediately just open a factory and start having parts. So at least I would think for a year.
Yeah, I was talking to our Phil LeBeau yesterday, and he said, you know, the fastest automakers could respond to this might be, you know, over 3 years, because that's how long it would take to build a plant. And that's, he said, if you do it at China speed, and that's unlikely in the United States that you could get the permitting and the permissions
just
and actually build
the next administration
that fast in the United States.
I mean,
the question is,
the U.S. automakers who followed USMCA, which was signed in the last Trump administration, and followed the rules that were laid out by that administration, are now being punished pretty heavily. That's the crazy part with some of this too.
And one of the questions here is, you know, as you bring these parts in, you know, the Trump administration is trying to make sure that the United States is a manufacturing hub for automobiles, not just an assembly hub, right? They feel that a lot of these car companies have been bringing in basically completed cars and then kind of snapping them together like Legos and then saying we assembled it in the United States.
That's a fair point.
What they want is real manufacturing.
And in a perfect world,
that's why there are these engine rules and whatnot in this tariff.
In a perfect world, it would be beautiful to have, you know, all the parts made here and the autos made here, and you know, then you wouldn't really have to, if you were a manufacturer of parts, maybe you wouldn't have to worry about tariffs. But if you were not cooperating, you'd get hit with tariffs. All of a sudden, everything we farmed out to cheaper labor over the last 30 years, which hollowed out the entire Midwest and just closed towns and factories and disrupted people's lives, all that would be reversed. Right. All that would be reversed. But
that's the vision.
We're going to have, we're going to have AOC will be president by the time it happens.
It's a long-term vision, right? I mean, this is a restructuring of American manufacturing and American society, and you know, this is a vision of U.S. export dominance in the world, right? And another thing that, you know, Phil LeBeau will tell you is that U.S. automakers don't really make the kind of cars that they want in Europe, say. You know, we make big pickup trucks, big SUVs, a lot of things that might not sell in the European market.
Yeah.
So it's not as if we're going to have this export boom immediately because their European buyer is not looking for that type of product. So one of the things you have to do is re-envision the entire product line of some of the U.S. automakers if they want to take advantage of a potential export opportunity. Will the automakers do that? Do they see this opportunity as real? Do they see it as long-term enough, given that Trump only has 4 years in office, and then who knows where these rules are going to go?
And a lot of automakers got better because it was so insular, Detroit, the way it was. And you remember the K cars, K stood for crap. And there were a lot of horrible, with the K, there were a lot of terrible cars. And they had to up their game. I'm seeing comments that say, oh, great, now the automakers, the big three can go back to making cars that aren't competitive with some of the German counterparts or Japanese or South Korea counterparts, and they don't have to worry about it.
All of those international car companies are invited to open factories here as well.
Yeah.
Many of them, if not most of them, already have factories here.
I think they've upped their game. I mean, I drive American cars, some, and my Navigator's great. And you like your, you got.
I got a Jeep Commander.
Yeah.
Or the Commander I got rid of. Now we have the Wrangler.
Yeah, my question is the impact on Tesla too, because that is the ultimate American car company now, right? It's a cutting edge technology. It's brand new startup. It's American made. But even Elon Musk in that tweet last night was saying, we're not unscathed here because they do make a bunch of the Tesla components in Mexico. That seems like that's going to have
I think it's somewhere between 25 and 40% of their components are made in Mexico. So
seems good for Tesla though.
Yeah, but I think they're probably
they seem like a relative winner here, though.
Else. Yeah. I think the big question is going to be the retaliation. What happens next? Because I know EU negotiators, others have been kind of furiously having these talks, trying to figure out if there was room for negotiation to escape some of these. And if we then see the retaliation to the retaliatory tariffs, what that eventually looks like. Those are the unknowns. That's going to be the big question on the economic factor.
In warfare and geostrategic thinking, they call it the escalation ladder, right? I mean, how far up the escalation ladder do you go, and how can people get off the escalation ladder once they're on? That's a real unknown here.
Well, and I have no idea what to expect next week, or is it next week, whenever that comes. And I'm already seeing, I saw CNN had a piece that, I don't know whether it was an opinion piece, but it said Trump is already retreating again, folding again on some of his threats, and it was all bluster. So maybe he did say something like, we may not try to counter all the non-tariff impediments. He said that. He said it's going to be sector by sector. He said it's not going to be nearly as high as what they're doing to us.
He said he's going to be lenient. In the Oval Office yesterday, he said he's going to be lenient. And people are going to be very happy. He's not going to go as far as people thought he was going to go. And I'm told by White House officials that what he means there is he's not going to. They had talked about matching the foreign tariffs and then also matching what they called non-tariff barriers. So things like VAT tax and wage suppression and all sorts of things that they said were also manipulative. Now they're saying they might not go as far as that. So if the calculation on non-tariff barriers would give them, a 70% tariff on Japan, say, hypothetically, they might not go as far as 70, they might go to 50, say. So they're dialing it back, is what they're telling us.
Right. All right. Thanks, Eamon.
You bet.
All right, when we come back, we are going to dig into the market implications of all of this. Our next guest says that the markets are highly dependent on just how aggressive President Trump is when it comes to his trade policy. Right now, though, as we check ahead to a break, let's check out shares. That Dow component just recorded its 7th negative day in a row. It's lost about 10% of its market cap over that stretch. Yesterday, Nike hit its lowest level in 5 years. $65.65 was the close. Squawk Box will be right back.
there's Bitcoin this morning, up over 1% and back right between 85 and 90, right? Pretty close. Paul Atkins, President Trump's pick to lead the SEC. This is a big switch, saying in prepared testimony that if confirmed by Congress, a top focus will be to provide a firm regulatory foundation for digital assets. He says in the past few years, he has seen how ambiguous and non-existent regulations for digital assets can create uncertainty in the market and thereby inhibit innovation. Atkins is going to face questions from the Senate Banking Committee later today.
Let's take a look at the futures at this hour. As we showed you, we're in the green this morning. Not very strong advances, but you are talking about the Dow up by about 70, the S&P futures up by 4, the NASDAQ up by 5. For more on the markets right now, we want to bring in Evan Brown. He's portfolio manager and head of multi-asset strategy at UBS Asset Management. And Evan, you're convinced that how the markets are going to trade in the near future is entirely tied to just how stringent President Trump is when it comes to his trade policy.
Yeah, that's right. I mean, we think ultimately the economy is facing a stress test. And I think the administration knows that too. They're acknowledging the pain. They have these long-term goals of bringing manufacturing back home. But in the meantime, this is, the auto tariffs and other tariffs. They're raising prices on consumers. They're creating uncertainty for businesses. You can do your best as an economist to try to model that out, but the direct effects, but the indirect effects in terms of the uncertainty created and businesses, potentially pressing pause on hiring decisions, on investment decisions, that's harder to model. So we
not
think
to mention the retaliation from the nations that we're doing this to.
Exactly, not to mention the retaliation. That's right. So so we've got a choppy few months ahead, and we'll see how it plays out.
I thought it was interesting. A lot of us have been looking, thinking, okay, next week we'll finally have clarity. We'll see what happens on D-Day, on Wednesday of next week. But your point is that's just the beginning.
I think it's closer to the beginning because you're going to have all of these tariffs announced, and maybe it'll be a maximalist position. I mean, that's generally what we've seen from the Trump administration, put out big numbers and then kind of pull back a little bit. And so I think you're going to see a lot of tariffs on a lot of different countries, and then bilateral negotiations will start, and we won't really know where we are for several months.
So that is a little more concerning because that's the type of thing where business confidence or business lack of confidence, consumer confidence or lack of confidence can really start to turn into a self-fulfilling prophecy of actions rather than just concerns.
It could. The good news is that the hard data, the real activity data is holding up just fine. So the economy going into this is in a reasonably good place. Soft data, you see it in consumer confidence, you see it in surveys of CEOs. It's really deteriorated. Now there's been a big disconnect over the last few years where the soft data has come in a lot weaker than the hard data.
Yeah.
And we've kind of been of the view, watch what people do as opposed to what they say, and that's been the true guide. But there's risk here that the soft data is really telling you something, and the economy is soon to follow.
So what do you do with your portfolio? What do you do with cash you may have at this point? I mean, stocks looked cheaper a week ago when you were talking about maybe down 10%.
Right. Yeah, look, I think the key is being diversified in this environment. Ultimately, we think base case the economy holds up and we'll have a decent year. But you have to.
These levels look okay to you?
These levels look okay, but these levels look okay as long as I have bonds too. I mean, ultimately our view is that okay, bond yields are rising today. They've been rising over the last few weeks, but in the end, we're less worried about the higher prices coming from these tariffs, which we see as more one-off, and I think that's how Jerome Powell sees it, and more concerned about the downside growth effects. And so you want to hedge your equities with having bonds as well as gold. I mean, gold has been on a tear, and there may be some reluctance to buy it because it's up here, but you've got central bankers, like reserve managers around the world buying gold, and that's been really the most dependable hedge in this kind of stagflationary or supply shock where you have inflation up and growth down.
Yeah, I mean, people would look at Bitcoin for something like that, but Bitcoin has traded down when the market's traded down.
Yeah, that's the thing, is Bitcoin works kind of more in theory than in practice these days in terms of its diversification effects. it correlation-wise, it trades more like a risk asset than something that's a real hedge for your equities.
What is your exposure when it comes to U.S. equities versus around the globe?
We're fairly balanced at this point. I mean, we had been riding some of this China and Europe trade, but now we're getting a little bit more balanced. We think that the narrative
because those markets have run up.
Those markets have run up, but now we think kind of this narrative of end of the U.S. Right? We went from U.S. exceptionalism to now no one wants to invest in the U.S. and you got to invest in Europe and China. You should be, just as you're diversified across assets, you should be diversified across international within equities. But now that we're going into the tariffs and now that there's been these big flows into international, we think that those are a little bit vulnerable tactically here with the tariffs coming.
Evan, thanks for coming in today.
Thanks, Becky.
The dream article here, Becky,
What's that?
in a journal, fully devoted to mixed metaphors. There was a Ford executive who kept score and would have the top ones, and his colleagues hated it because they all got caught. We use it.
Catch them.
We love them here, like a walk in the cake.
As these are all of yours.
Yeah, barking up the wrong neck of the woods. This one is, I don't want to sound like a broken drum here, but it's a huge task. We're trying to get our arms and legs around it. Which
Well, that actually makes sense.
sounds kind of kinky. As they point out, holding on, and as we don't want to beat a dead horse to death.
Beating it to death or beating
Dead
it to
horse
Yeah.
to death. Yeah. There's a bunch of them. Check it out. Coming up, and we come up with our own here sometime. Yeah, we do. Not on purpose. I love those. Coming up, the state of Utah taking a novel approach in an attempt to protect kids online. We're going to tell you how local lawmakers are targeting the app stores rather than just the apps that you can get from the stores. Stories next. Later, don't miss our interview with Ro Khanna, California congressman who'll weigh in on tariffs, DOGE, the state of the Democratic Party. We might even try to get some signal through the noise on that recent. Is it already done? We're finished with that already? Squawk Box returns in just a moment.
NBC.
Occasionally, Utah's governor signing a first-of-its-kind law that requires Apple and Google's mobile app stores to verify user ages and require permission from parents for those under age 18 to use certain apps. The law represents a shift, and it puts the responsibility for verifying users' ages on the stores, the app stores, rather than the individual apps. And under the law, Apple and Google will have to request age verification checks when someone in Utah creates a new account. And if someone under 18 opens an account in an app store, Apple and Google would have to link that account to the parent's account or request additional documentation, and parents will also have to consent to any purchases made within the apps. The law is expected to face legal challenges. Neither Apple nor Google immediately returned CNBC's request for comment, but I like this. They probably don't like it, but in a statement, Meta, X, and Snap said this is a great idea, applauded Utah for passing the law. So competitively, I guess.
But yeah, go after them.
They're not thinking about the kids. They're not thinking about how this.
No, I would like to see this too, but I do think the apps should be held responsible. I don't understand why the apps get off scot-free. App stores are one way of doing it, but it's the apps themselves that are like. Why do the app stores have to be the policers?
So which apps are we talking about?
You can look through any of them, from Instagram to TikTok. You can look at any of these
where
apps,
you see
Facebook,
you can see really crazy stuff.
Yeah, like the stuff that shouldn't be marketed to kids, where they supposedly have checks.
See that on Twitter too, right?
Yeah, you can see it on all of these places. But the idea that the App Store is responsible for everything that goes there, maybe. I guess that's the equivalent of saying Walmart, if they're selling porn, they're responsible.
Well, it might not say that they're responsible, but this would prevent it from happening, theoretically, or at least get the parents involved.
Yeah, but any of these apps could do the same thing. With the technology, the abilities that they have, they'll say, oh, it's too hard. It's not too hard. If you were actually making money off of it, you would find a way to do it. You can do all kinds of things with technology that they choose not to do.
Right.
Okay. So I'm in favor of it, but I think it should be ramped up and put out to the apps as well.
Right.
Because they're the ones who are actually originating it. Yeah. And who are hosting creeps on their network. All right, OpenAI is nearing the completion of a $40 billion funding round led by SoftBank, which would value the company at $300 billion, or almost double its previous valuation from late last year. That's according to a Bloomberg report that cites data from research firm PitchBook, indicating a funding round of this size would be the largest of all time. The report says that investors, aside from SoftBank, could include Brad Gerstner's Altimeter Capital Management and Peter Thiel's Founders Fund. OpenAI was last valued at $157 billion. That was in October of last year. When we come back, we're going to have much more on President Trump's new auto tariffs and the impact on investors and the markets. Evercore's Sarah Bianchi will join us. And later, an exclusive interview with former Citigroup CEO Sandy Weil. He will join us at 7:30 a.m. Eastern Time. He's got some very interesting things he's working on right now. We'll talk more about it then. Squawk Box will be right back.
Good morning and welcome back to Squawk Box, live from the NASDAQ market site in Times Square, checking the futures. They're up, which is, we're going to talk about that actually right now because it's kind of interesting that because I was late in the day yesterday. Maybe there was some, I guess the market sniffed out what was about ready to be announced, or maybe it was more basically in line with expectations. These 25% tariffs that the president announced on imported cars as well as parts starting next week, threatening larger tariffs if the EU and Canada team up against the U.S. Joining us now, Evercore ISI public policy chief strategist Sarah Bianchi. Market was down, at least the NASDAQ got hit hard yesterday, but it's up to date. Sarah, was it late in the day when we got this word, or was it in line with what everyone was expecting about the auto sector?
There certainly was an expectation that Trump would hit the auto sector, and 25% seems to be the number that he likes, directionally speaking, but in particular in this space. So I think I guess the market took it in line. Certainly a lot of scrambling for those who follow this sector closely to see really who is hit and how everybody's supply chain looks. Certainly different impacts throughout this sector that we expect, if it stays intact, will be very, very disruptive.
Maybe some of the comments about the big day, Liberation Day, which is April 2nd or 3rd or whenever it is next week, there were some posturing about what is actually going to happen then. And I think you have a better idea of what we might see, but there's still quite a bit of uncertainty about how it plays out. What are you expecting?
Well, anyone who's served in White Houses, and I've been in 3, knows that next Tuesday is still a long way off in terms of dotting the I's and crossing the T's. As you note, the president did say yesterday that perhaps some would be pleasantly surprised. The reality is you can back into really what any number the White House really wants to do if you're counting not only the reciprocal rate, but also non-tariff barriers, currency, and other factors. So it's really up to them to come up with a number here that they can justify. But certainly the expectations are that the EU is particularly in the crosshairs. In addition, India. But we'll have to see. I think really what the market would like right now is just some certainty about how to price all of this, and the notion that at some point maybe we'll stop with these announcements.
Will there be phone calls going back and forth in the next week that could change what finally happens? Is there any way you could see some countries try to either dampen the impact or making promises about what they're willing to do at some point so that that they're not in the crosshairs?
Certainly, you've seen a lot of trips to Washington, a lot of reports on that. I expect that those will continue. In some cases, it's harder for a country or to make an offer. India, for example, there's just a lot of ag tariffs and other things that they would have to get their head around. That's pretty complicated to do. Perhaps some of the smaller ASEAN countries might be able to figure that out, but I don't have huge expectations that there's going to be a lot of pre-negotiated relief. There still is some policy questions that the Trump administration itself will have to figure out in terms of, do these start exactly day one? And again, how do they back into these calculations? And then really the key question is all of this stacked? So do you pay the steel and aluminum plus your reciprocal plus your auto? That's where it really, really can start to add up in terms of the macro tariff rate on these countries.
What about oil in Venezuela? That could have ripple effects. And I don't know whether the administration really wants to see higher oil prices or higher prices across the board. They may say that we need to recalibrate, and we're willing, we've sacrificed a lot of job losses to have lower prices, and that's coming to an end. But I don't know if you saw J.D. Vance on that Signal conversation, immediately said, I'm worried about a spike in oil prices that could happen from this. So that's in the back of their mind. What's going to happen in that sector?
Yeah, so it was interesting to see the president. This notion of secondary tariffs is not something we have seen. And again, I think really what the market wants here is just some certainty. So if we start to see that as a general tool, that certainly is not going to help with certainty. Venezuela itself, certainly a big story for China, a big importer there. As well as the EU, of course, traditionally the United States as well. So they're going to have to figure out how they want to calibrate that. Many of these countries don't rely on Venezuela for a huge percentage, so perhaps they can navigate around this some. But yes, with all of these tariffs, Canada, Venezuela, all of these places that at some point you do need to worry about oil prices. And as you noted, that's long something this president has said he wants to get down, certainly not the reverse.
People say the snap election in Canada was brought about by the tariff threats, and I guess the notion is that it's helped Carney. Do you have a feeling on what happens there? Are suddenly the liberals they snatched victory from the jaws of defeat at this point? Well, what's going to happen up there?
It sounds like that. Right now, I'm not a Canadian political expert, but it does seem that certainly Carney has come out and risen up so far due to these tariffs and the general posture around Canada, the notion that potentially it could be a 51st state. I think they have found a lot of fire in the belly in terms of how they want to respond.
I don't understand that, Sarah. I don't know whether I believe it or not. I don't know, Republicans would never win the House again. You can just forget about that. I don't know how many representatives that state would have, but they'd all vote Democrat. So
yeah, it's definitely not the best path to get to 270 if you're a Republican candidate.
Massachusetts or Vermont and Minnesota on steroids. Stay up there.
Exactly.
I like Canada, but very liberal.
But look, you're seeing a lot of parts of the world respond to the president, right? I mean, the fiscal action in Germany is a response. So this is coming fast and furious, and different countries are responding differently. Certainly the best way, if you were simply negotiating with Donald Trump on tariffs, would not be to fight back and to take a more muted approach, as we've seen with China and Mexico. But there's politics involved, and so some of these countries are just going to get some fight in them.
Okay. All right, Sarah Bianchi. Which three did you work for? Which three administrations?
Clinton, Obama, Biden. So hard to serve in the government and not at least show your. It does tend to tell your political strengths.
So
but
one Republican and two Democrat administrations.
Somewhere in the middle.
Does he not look like a Republican now? Does he not? In most
Clinton?
Yeah.
Oh, absolutely.
Clinton, yeah.
The Democrats could take the Democratic Party could take some lessons from Bill Clinton right now.
Exactly. See you later.
I read this article.
It's cute, isn't it? Yeah.
You left out the best one.
Which one?
The best one of these mixed metaphors. Again, this is the front page of the Wall Street Journal.
I was looking at it,
This guy from Detroit, from one of the automakers from Ford, who tracked every one of his colleagues' verbal miscues.
And they got mad.
They got mad. You might too. But the best one was he has this huge repository of all of them that he's kept. But some people, twice it's made the list, somebody called it a suppository.
Oh, it's a... That's a good one. I don't even like to hear that word. I really don't, because you know what kind of condition you're by the time you need.
Anyway, when we come back,
you can't be shy with those things. You can't. Otherwise, they come right.
Good morning, happy breakfast. When we come back, sports media in focus on baseball's big opening day. This is exciting. This is it. The NBA and the NFL have recently scored some big media deals, but Major League Baseball is striking out so far. We're going to hear what one top media executive has to say about that when Squawk Box returns. Welcome back, everybody. It's a big day. MLB's opening day kicks off today, but professional baseball now finds itself shopping its national media rights after ESPN ended its partnership of 35 years. CNBC's Alex Sherman spoke with former Disney executive and TikTok CEO Kevin Mayer, who is co-founder and currently co-CEO of Candle Media, about how MLB's plan to get a big rights increase may be wishful thinking, and this is pretty amazing. Listen in.
Gravity takes hold on everything at some point. These rights cannot continue to grow at this pace, 2 to 3 times every 10 years is what they've been doing, ad infinitum. Can't happen. At some point, some of them are going to flatten.
Alex joins us right now, and that sounds like the typical job owning you would expect between, the two sides of a negotiation on something like this. But you did some really interesting research. I had no idea some of the differences with baseball, the demographics and things that were out there. Explain why this is.
Yes. So, Kevin Mayer comes at this from a personal perspective in that in between those different jobs you mentioned in his intro, he was also the chairman of a company called DAZN, which is very big in buying European sports rights. And even the most prestigious of the European sports, like the English Premier League, those sports rights have actually slightly declined in value over time.
I didn't think any sports franchise
you wouldn't know in this country
would ever decline in value.
Because,
what happened?
Well, all the big headlines here is that, NFL doubles their rights. The NBA almost triples their rights.
Right.
Well, that's not the case for all sports, and it has to do with sort of the secular problems that are going on in the general ecosystem where there are fewer people watching TV in general now than there were 10 years ago. And so at least for some sports, that has actually brought down the value. Now, it hasn't impacted the NFL, which is still wildly popular. It is by far the most popular programming in this country. And it hasn't impacted the NBA, which is still popular, though not nearly as popular as the NFL, because the media portion of the business for the NBA has stayed strong. In other words, advertisers still love it. It is sort of undroppable programming for the pay TV providers. That is also the case in Europe, but not as drastic as it is in this country.
I don't think March Madness is good for the NBA.
What's the
Just in terms of
logic?
competition?
Just in terms of,
For the eyeballs?
just how enjoyable it is and how
Oh.
much I look. And I've had some people tell me they just said, I still watch it, but they said I can't even watch it anymore, the NBA.
Right.
What is it the no defense or just everything's a three-pointer?
Yeah, I think the NBA has a game problem in the regular season. I think once the playoffs begin, particularly deeper into the playoffs, the quality of the game really picks up. Part of the game problem is yet probably too many three-pointers. I agree with that. Stylistically, the game doesn't, has probably gone too far in one direction. But the other big problem the NBA has is what the league calls load management, which is basically their stars don't play full seasons anymore.
They're injured all the time.
Or they're preventing themselves from getting injured.
Yeah.
So the people that you really want to see aren't playing 20 games out of the 80 games
It's a huge disappointment.
every season.
You're waiting to see.
You bought a ticket, even if you want to watch on TV, you turn in and it's like, that you want to see LeBron James and Luka playing the Lakers, and like neither one of them is playing.
And doesn't local save baseball?
Yes.
Sports Network.
So that is Major League Baseball's plan to make sure they look more like the NBA and the NFL. When their rights come due, all their major rights in 2028, the plan is let's sell the local games as a broader national package, which doesn't exist today, and maybe we can make billions of dollars off that.
Who has the money, who will come into the picture.
Exactly. So that would be appealing maybe to an Apple, certainly to an ESPN, to an Amazon. So that package does not exist today because the regional sports networks own the regional rights. That will be a change, most likely, after the 2028 season.
4 huge games tonight.
4 huge games tonight, yeah. We begin.
Oh, it's madness.
Yes.
I couldn't tell you who's playing in the NBA.
Well, or Major League Baseball opening day. So we don't need to worry about that. 162 games.
It's funny though, the commercials that have like something happens today. It's like I knew my expectations were too high for the Reds. They lose today.
For sure. Well, you can catch up now on your sports on the weekend, because the CNBC Sport a TV show debuts on Saturday at 3 p.m. in the afternoon. So if you get bored of watching baseball, you can watch our debut. There it is.
You didn't mention. And this is on the record.
Yes, this is a compilation of interviews with a variety of people in the world of sports.
Yeah.
So you'll
How many
see
times are you gonna say that?
episode 1, Adam Silver's on, NBA commissioner. You'll hear his thoughts about gameplay actually in that interview, and if there are too many three-pointers, then his thoughts on that.
Alex, thank you.
Thank you.
Squawk Box will be right back. Welcome back, everybody. Encrypted messaging app Signal was used by Trump administration officials to discuss pending military operations in Yemen. Lawmakers have reacted angrily, but this episode is also shining a light on consumer-facing tech companies with potential in defense. Joining us right now is Alex Harstrick. He's a managing partner and co-founder of J2 Ventures. J2's portfolio includes technology companies with both consumer and defense use cases like Aura Ring. And Alex has some experience too. He's former military himself. Alex, let's talk a little bit about what you see happening, what the implications are for these consumer-based companies.
Absolutely. Becky, Joe, thanks for having me back on. So there's no question that the speed of warfare is moving faster than the speed of traditional war-making technology. And so when you see whatever foot faults you might have with the current administration, the real answer is the enemy moves a lot faster than classified systems are able to move, because the enemy is using traditional consumer technology, which is ubiquitous, easy to access, very simple. Open up an iPhone, there's no instruction manual, and yet you can use it to do supercomputing functions. Open up the average defense system, and it is terrible. There are people who will become experts on it over multiple years and still not know how to use it. So ultimately, without casting any specific opinion on the matter at hand, when you look at what we are going to have to do in the future, it's going to have to move a lot faster. And so rather than criticize Signal, I think we should be looking to the administration to see how to embrace that and other commercial programs.
So do you think that Signal and other apps should be used by the government because it's just better and faster and more effective and more efficient than what the government has developed itself?
If you look at any of the problems that we have now with government software, Becky, basically, as you move up in echelon in classification, so confidential to secret to top secret, all the way up, the system has fewer and fewer people who can use it, which means that it becomes worse and worse because the amount of contractors that you can have to make that system becomes smaller. So I would actually encourage the federal government to use Signal or figure out a way to use Signal. I'd go as far as to say, create a $100 million program and say, these are our very, very basic requirements. I need to be able to access this somewhere, anywhere on Earth. It needs to be encrypted. It needs to be unhackable, and open it up to the entirety of the tech community. I think you're going to create something a lot better than the way traditional procurement has been.
Okay, let me just back that up. What you're saying is you think the government should contract these companies to make something that is simply used for government, for top secret clearance, for classified materials. You're not suggesting that the lawmakers or that officials should be using these commercial-faced apps, because there's been a lot of questions about whether the Russians have infiltrated these things. There are questions about whether they can even comply with the laws and regulations that are out there, because all of these conversations are supposed to be able to be recorded for posterity and for history, for FOIA reviews later, for anybody else to go through them. But what you're suggesting is these companies can do it better.
Yes, and it's funny, Becky, you mentioned a lot of pieces that I think are missing in this debate, which is Signal has disappearing messages. It is very difficult for external parties to be able to look at them. Those are all issues that I think can be solved if you make a government-facing version of the consumer app. Now, someone on the counter would say that's exactly how you're going to ruin the app if you make it overly government. I believe that this administration is actually favorable towards trying to figure out ways to make sure that the commercial aspects aren't lost in government procurement. Oura is a great example of this. The company is working with U.S. Space Force among a bunch of different entities, and the core application and the core software have not changed, albeit with more security protocols for federal government use cases. Signal can be the exact same thing.
Alex, did you see how many times Trump questioned whether Signal works? President Trump questioned whether Signal works yesterday. It was weird. It was like, if there's a mistake made, you go on the offense. I know how that works, and it's worked for him his entire life. But what was he saying didn't work? That the journalist was allowed to get in because it didn't work or something? I couldn't even figure out what was he saying didn't work about Signal, or just saying it.
Whenever you're adopting new technology, Joe, you're inevitably going to get into one of these generational moments where it's just going to be a little harder to explain certain aspects depending on what
you're calling him a boomer. You're calling him a boomer, and by extension, you're calling me a boomer.
First of all, Joe, you look great. But what I would say is, yes, there are certain aspects that are designed around making usage really easy. So you add people based on usernames, not just phone numbers, a bunch of other things kind of in the back. These are all going to be usage specific to the app. That doesn't mean the app is broken. That actually means the app is functioning the way that it should, but you need a little bit more practice with it in order to get it right.
Alex, this reminds me of when Blackberries were used not only everywhere for corporations because they were more secure, but by government officials too. RIM kind of lost its way and lost the consumer market at some point, but that was the key behind it. It was supposed to be much more secure and a better way of communicating if you had things that you didn't want people breaking into.
Absolutely. And I don't understand why we can't have a digital version of that now, Becky. There's a couple of technologies that the federal government is a little slow behind. Say you don't take my point about Signal becoming a defense contractor. Well, there are private networks that you can adopt. There's eSIM technology. I happen to be an investor in a lot of these, but I'm not pumping my own book. I just see the way that the puck is moving. If you want to be able to stay ahead of the way that modern war is being fought, again, these are Taliban, Al-Qaeda, insert enemy here. They're using SIM cards, SIM swapping, texting each other, and they carry out effective strikes against the most powerful military in the world, which is the United States. So if we agree that we outmatch them on everything except communication, it serves to reason that you would put a lot more investment into communication to remain agile. And I think Signal, whether they are a defense contractor or not, are used by a lot of people in the intelligence community and the Department of Defense. So why fight what's already happening when you can just adopt what's already working?
Very interesting points. Alex, it's great to see you. Thank you.
Thank you very much, Becky. Have a good day.
Bye.
Pretty smart. Eyes all over still there. It's just after 7 a.m. On the East Coast, and you're watching Squawk Box on CNBC. I had to get it back. Clueless boom.
He didn't exactly say that. Just implied it.
I'm Joe Kernan along with Becky Quick. Andrew is off today. Among today's top stories, President Trump announcing 25% tariffs on imported cars and parts starting next week, threatening larger tariffs as the EU and Canada team up against the U.S. OpenAI nearing the completion of a $40 billion funding round led by SoftBank, which will value the company at $300 billion. That's double its previous valuation almost from late last year. Not you need to know, it's according to Bloomberg. So use that in. And the U.S. could run out of money to pay its bills by late May. That's according to the Congressional Budget Office that said the date when the Treasury Department will no longer be able to cover its obligations will probably happen in August or September. But the CBO said it could be sooner if tax revenue comes in below expectations. And later in the show, don't miss our interview with Congressional Budget Office Director Phil Swigel. That same event where he signed auto tariffs, President Trump made some new comments about TikTok and a possible sale of that app. The president said China may have, at this point, to approve an eventual deal.
Maybe I'll give them a little reduction in tariffs or something to get it done, because every point in tariff is worth more money than TikTok.
A national security law requires TikTok owner ByteDance to divest TikTok's U.S. operations, but President Trump signed an executive order, you might recall back in January, that delayed the deadline for that deal to April 5th.
That's next week.
Yeah, it is. It's Friday. Yesterday, Trump said if there...
Snuck up.
2, 3, 4, 5, yeah, I think it's Friday. Yeah, if there's no agreement by then, he's going to extend the deadline.
It may be Saturday, because my brother's birthday is the 2nd, which is the Wednesday.
It is?
Yeah, so it's Saturday.
Yes, you're right. Definitely. Because the second Liberation Day
is Wednesday.
Yeah,
it's my mom's birthday. That's
oh, nice.
Yeah.
Okay. Oh, that's right. Don't
Yeah.
Just missed April 1st.
All right, when we come back, top stocks to watch as we make our way towards the opening bell, including a big drop for GameStop. We'll talk about that. Squawk Box will be right back. the futures bouncing around this morning. Dow's still in positive territory. It's up by about 45 points, but the S&P just below the neutral line. NASDAQ down by about 20 points right now. Let's get over to Dom Chu. He's got a look at this morning's pre-market movers. And Dom, we've missed you.
I've missed you guys, too. It's good to be back with you guys, Becky and Joe. We're going to kick things off this morning with a check on some of the foreign automakers on the heels of the tariff stuff that happened. Those stocks are reacting to the Trump announcement, of course, of 25% tariffs on foreign-made vehicles and some auto parts. Shares of big European car companies like BMW, Volkswagen, Volvo are taking bigger hits, as you can see in some of the European trading sessions so far today, but off the worst levels of the day so far. Meanwhile, Japanese automakers like Mazda also taking bigger hits as well. They were down about 10% in Japanese trading. Meanwhile, a quick check on shares of Tesla, which have been volatile lately. Up this morning as the EV maker is seen by some traders and investors as being relatively insulated from the effects of U.S. tariffs on its U.S.-made vehicles. So Tesla shares up about almost 1% in the pre-market trade. Now let's take a look at a key analyst note out there. Shares of global oil services giant Schlumberger, SLB, slightly lower despite Morgan Stanley naming the stock a top short-term and long-term pick. SLB slightly lower despite, again, moving that kind of at least call around. They're down by about 1/3 of 1%. The firm did point to the company's planned acquisition of ChampionX as a near-term catalyst. Now, just moments ago, the UK's competition regulator said that merger could result in a substantial lessening of competition, so some maybe headwinds building against SLB. That stock is up more than 10% so far in 2025. And then GameStop is giving back some of its gains this week. The stock is down more than 7% right now, just about 6% in extended trading after soaring by 12% yesterday. The meme stock got a boost after the company's board announced that it approved a plan to buy Bitcoin with a portion of its corporate cash, following a similar move by MicroStrategy. So GameStop shares, they're now going to file a registration, or they just did, Becky, to issue convertible bonds, about $1.3 billion worth. And of course, there may be a dilutive effect. So we're watching GameStop shares on the big rally yesterday and the slight sell-off today. I'll send things back over to you.
MicroStrategy is just strategy now, right?
It is strategy.
Yes.
I gotta
Where
get
were
used to
you?
that.
Yeah.
Where were you? Where's a well-heeled guy like you? Were you?
Were you on vacation?
Were you by chance at the White Lotus over in?
I have not been at any of the White Lotuses in Hawaii or in Thailand or in Italy as well. So I haven't been to any of those White Lotuses.
Well, you're not going to tell us where you were. They can't find you. You're already back. You don't have to. You're not going to get mobbed.
No, the last couple of weeks, obviously a couple of Florida trips, given Future Proof and the conference down there, and then also before that the players.
Scouting
And then
out.
this week, my wife, my better half Becky, is traveling abroad right now, and so I've got the kids on my own. So kind of juggling around some morning assignments.
Yeah, Mr.
Payback, your wife who puts up with all of
the golf.
She
Yes.
deserves that trip.
Mr.
Yeah.
Mom.
I am Mr. Mom. That's basically what it is.
Michael Keaton.
That's right.
All right. Thank you, Dom.
You got it, guys.
We'll see you later. When we come back, Steve Leisman doing some fact-checking on government hiring during the Biden administration. And at 7:30 a.m. Eastern Time, we have an exclusive interview with banking legend, former Citigroup CEO Sandy Weil. We're going to find out what he's working on right now. You don't want to miss it. Squawk Box is coming right back.
insurance.
Well, there's a lot of commentary from the Trump administration about how job growth in the Biden administration was driven by the government. Question is it true? Our senior economics reporter, Steve Leisman, fact-checked the claim and has some surprising answers to this. Good morning, Steve.
Good morning, Becky. We crunched the numbers and found out, yes, it is true. Job growth last year was driven by government and what the Trump administration calls government-adjacent sectors. But the same analysis surprisingly suggests government in historical terms may not be bloated. Here's the numbers. If you add job growth in local, state, and federal governments together with private education and healthcare, it was a massive 81% of all job growth in 2024. Wow. The data crunch for CNBC by Wendy Edelberg of the Brookings Institute.
Well, I said that many times.
Private education, they led the way, responsible for 53% of all job growth in 24.
That's why we went so far.
Government, then state,
that's why we spent $14 trillion. We spent $14 trillion over budget. Almost every job created was from the government. I'm talking about, even the factory jobs, the money that we gave to the CEOs, it just all in all, your tax money paid for it. That's why we had such a high inflation. I was counting up to 40% on some of my inflation. And I lost about 30% profit because of the bastards.
That in a second, Joe. So all these things are actually, some of the government stuff is actually below their 10-year averages. Healthcare
Bullshit.
is the main reason it's higher. So the Trump administration is right. Government, the so-called government-adjacent sectors were a massive part of hiring in 23 and especially 24. But it was mostly healthcare, followed by local government at just 1.9% of total employment, a tick below its long-run average. The federal government was the shallowest well to drill for job cuts.
So when you said it's back to trend, but the trend has been an upward slope
That's in healthcare.
for a long time,
Yeah.
meaning that it's been growing and growing. It's hard to, even if you just put on a pound or two a year over a long period of time.
Oh, I wouldn't know anything about that metaphor.
Me neither.
No,
it does lead to.
First of all, it's mostly healthcare, and healthcare has been this upward trajectory. But you look at it, and they lost a lot of jobs in that period, and they were scrambling to get it back, and they have gotten it back to that upward sloping trend in healthcare.
Is that a reflection of what we need in this country as we age? Is that
it was inevitable, but also a shift of funding, perhaps, from the Biden administration to that. And I want to just acknowledge Joe's criticism before it happens. You tell me if I have this right. One is if we were on the same, that remained on that trajectory, then you might have had a problem with the percent of government hiring.
Massive weight gain.
That's the first thing. And the second thing is none of this says the 10-year average is right.
Right.
It just says here's a benchmark to look at when you're trying to figure out A, where the jobs can be cut, and B, what the right level
is.
Is
it far off a 20 or 30? So that's the 10-year benchmark. What is it over 20 or 30 or even 40?
I'll go back and look for you, but we did from 2012 because we wanted a good chunk of period, or 2010, before the pandemic, and we wanted to exclude the pandemic and then look at it afterwards.
I just say it's like the guy who says, I weighed 300 pounds when I was 20. I haven't gained an ounce. Now that I'm 55, I still weigh 300. And I don't even need to know numbers. I just look at the way things operate, Steve, and there's no incentive for government to be efficient. There's no incentive whatsoever, because if they don't make income and expenses match up, it doesn't matter. They don't need to make. They just
agreed.
Okay,
I don't disagree. I mean,
I don't think government. When I see people talk about, oh my God, but what about these, people, it's not an entitlement. Just like in the private sector, a job, if a company says they got to lay off 5,000 people because they absolutely have to keep the company around.
Right.
Otherwise it's going to go away because they're not, it's bloated for whatever reason. In the private sector, you can't keep existing like that. You need to close your doors unless you downsize. The government has never had to downsize, and it's not an entitlement that people deserve to keep these jobs. They're not coming in. They're not doing anything. They can't mention 5 things that they did in the past week because no one's seen them. The government buildings are empty because no one comes in. That's there, Steve.
First
That's
of all,
there.
I think that's an overstatement.
No, it ain't.
I don't think you can overstate it.
I think this idea that
And
federal workers don't do their job and they're not coming into work.
Go to the DMV or the post office.
Well, first of all, those are one,
I know,
one is state.
it's
one
still
is,
okay. Public.
Yeah.
Public.
No,
Public.
But here's the problem, Joe. We give government the things to do that business cannot do and cannot.
I understand that. I understand that.
Okay.
You're not going to make money at a fire
How much are you
department.
going to charge for a passport? How do you decide if a passport or a visit to a national park?
No,
how
I'm
do you
saying
increase productivity?
it's still grown from 7% of what the economy does to 24%.
No, but it hasn't. That's the point. It's the same 31%. The federal government is 1.9%.
What was it? What was it 50 or 100 years ago?
Well, that's another story.
Well, that's what I'm talking about.
Well, you want to go back 50, 100 years.
I want to go back to where it was not totally overgrown.
You want to
didn't need it.
This guy's a big liberal. He's also a Russian. He's a communist. Steve Leisman. He doesn't want to admit the truth. And Joe's right, 100%. They were hiring 47,000 people a month under the Biden regime. 47,000 on average. That ain't no joke.
Because you decide that you want to send money to vaccinate people in Africa, that's not waste, fraud, and abuse.
I'm sure I could find
that's
it.
A disagreement
I'm sure I could find it at things I approve of, and at things I agree with, and things I don't agree with. I'm sure the same amount of waste, fraud, or abuse is in both.
I think this
By definition
government is a very interesting thing to debate.
It's an interesting experiment.
And I'll get you those numbers on 20 and 30-year averages to see how it's grown.
I'm from the government, and I'm here to help.
Ronald Reagan.
Sometimes the government helps a lot.
It does not. It makes things worse.
The public workers the people love the public workers.
Thanks, Steve.
I hate them.
Coming up, a closer look at the impact of tariffs on automakers. Our next guest says that there are no winners, but Tesla is the best position. Sparkbox will be right back.
You Russian Nazi.
Now for today's Aflac trivia question. On average, how many barrels of oil does a standard combustion engine in a passenger vehicle use in a year? The answer when Squawk Box returns.
I mean, I see government workers every day, and all they do is whine and complain because they have to go back to work. No, I had it made, man. I could drink my mocha and not have to put on any makeup. If I wanted to get something done, I could just walk away from the desk and go do it. If I wanted to go out, have a 3-hour lunch break, I could get away with it. I still get my salary. Of 80 grand a year.
what's ahead. And now the answer to today's Aflac trivia question. On average, how many barrels of oil does a standard combustion engine in a passenger vehicle use each year? The answer? 12 barrels.
God.
If the car is more than 10 years old,
It
the
does
figure
not.
is closer to 15 barrels annually.
Where do you get that at? What's a barrel? My car uses 17 quarts. 14 quarts. That ain't no frickin' barrel. What are they talking about? A passenger car uses a barrel of oil a year? I think that's what they said. I change mine twice a year. Boy, they got me riled up this morning. Da 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 da. Oh, mama, I'm excited. Let me think here. Da 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 da. Oh, damn! You got a great voice, James. So have a good day. I'll be back.
President Trump announcing a 25% tariff on all cars and trucks manufactured outside of the U.S. Joining us now with his view of the impact on the auto industry, Dan Levy, Barclays Senior Equity Research Analyst. Is there any way, Dan, that near term this can be a positive, or even long term, that it will eventually be a positive? But near term, it seems very difficult, even on the big three, even though they should benefit.
Yeah, thank you, Joe and Becky, for having me. Long term, potentially, we have to see how that plays out, but that's going to be a lengthy and expensive process to get there to modify capacity. Near term, it's probably negative. You're going to see higher prices. You're going to see lower volumes. There's going to be a ripple effect throughout the supply chain.
If it was just, what would be good for, what would the big three like? And that's what we care about. I think we don't care about BMW. I guess we want them to make cars here, but what about the auto parts side of things? Things go back and forth across the Canadian border that go into the big three's production of autos, and is everything going to be hit with 25%? Why won't that immediately raise the cost of the domestic production and for consumers?
Yeah, well, I think what we're waiting to see, and the potential saving grace here, is the carve out that U.S. content in vehicles is not subject to the tariff, right? So take an automaker like GM, for instance, that even though only half of its U.S. sales are assembled in the U.S., it still has another, over 30% roughly that are assembled in Canada and Mexico, mostly Mexico. To the extent that the content in those cars is significantly American-made, that's the carve-out and potentially the saving grace that softens the blow here.
Let's say that you're importing something from Canada that goes into a car. Is there a carve out for that? Let's say all the seats in a car are made in Canada. When one of the big three gets, buys the seat from up there, is it going to be 25% more expensive?
So I think we're waiting to see how the parts piece emerges. Right now, if parts are USMCA compliant, and our understanding is that most are, then that is not subject to the tariff currently. I think there's a process that's still underway. And in the future, so long as there is US content, because you have to remember that there's always going to be different pieces of content in different components. As long as the content in those parts is US, that's the potential to limit the tariff expense. But yes, certainly based on the reading of what we saw last night, anything that is not US content is going to be subject to the tariff. So costs are going to go up across the board for everyone.
Well, when are we going to know about the carve-outs?
We're still waiting to figure that out, right? I think this is an evolving situation. Even the tariff itself, I think what some people are missing is 25% is not the end of it. We're still waiting to see next week on the 2nd with the reciprocal tariffs, how much more we have to add on top of that 25%, which could make this a real large number for certain countries.
Okay. All right, Dan. Dan Levy, maybe we'll talk to you next week when we know more. Thanks.
Great. Thank you, Jeff.
All right, when we come back, an exclusive interview with banking legend and major philanthropist, former Citigroup CEO Sandy Weil. We've got some breaking news about what he's working on now. Squawk Box, we'll be right back.
Orlando Resort.
everybody. Let's get to our special guest this morning. In a CNBC exclusive, former Citigroup CEO and Weil Family Foundation Chair Sandy Weil. He is announcing a $50 million gift to establish a landmark new cancer hub that will focus on immunotherapy. This is a partnership among 4 institutions, including Weill Cornell. The Dean, Robert Harrington of Weill Cornell, joins us this morning as well. And Sandy, Bob, want to welcome both of you today.
Thank you.
Thank you so much for being here. We appreciate it. Sandy, this is a new gift, and you and Joan, through your family foundation, have given away about $1 billion since you started doing this. This is a very new focus for you, though. What brought you into this particular region, immunotherapy and cancer work, and why are you making the gift?
Okay, well, I've been involved in Weill Cornell since 1983, so it's a long-term relationship. And I think the reason for cancer is a lot of the work that I've done has been in the area of neuroscience. And as everybody knows, we haven't made any real breakthroughs in that area yet. And when we are making a lot of breakthroughs in cancer. So I thought it might be a good idea, since Weill Cornell just brought on a very bright new person to head up their cancer operation, that we think about creating a partnership with Rockefeller, which is our next door neighbor, and Princeton, which has a great cancer facility, and ourselves to create collaborations and partnerships. And basically, I look like I'm doing the same thing I did in the financial business, doing mergers and putting people together that are like-minded people. And good things happen when people believe in cooperation and not being I, but using the third person.
That's a tall order, Bob, to try and coordinate between these 4 institutions. When Sandy came and said he wanted to set this up, what was your immediate thought?
Well, I've learned in the year and a half I've been at Weill Cornell that this is an amazing man who thinks differently, I think, than a lot of other people. And I would say that when he first brought it to my attention, 3 things come to mind. The first of which is that cancer is a devastating disease. We all know that. And progress has been made, but we need a lot more progress. And immunotherapy is one of the exciting areas where you can turn your body's immune system against the cancer. The second, to something that Sandy said, science has become team-based, and you try to get people from different scientific backgrounds together. And this is a great collaboration of the 4 institutions. And then the third is the power of philanthropy. We know that research funding is never enough. We know that research funding is being evaluated from different sources. Philanthropy is critical. Can it replace what, for example, the NIH and the NCI do? No. But can it complement it? Absolutely. And that's what he's so good at.
And Sandy, just the idea of getting institutions to work together, that's something you did in your previous life with financial institutions. But how do you make it work with research? Because it is a notoriously difficult place to convince people to share, to convince them to look for the best ideas and not get wedded to their own ideas.
Well, we won't do business with people that don't believe in sharing and don't believe in the concept that they can do many more things by working with other very bright people that have different talents and add to their talents. And it's something that I started about 6 years ago in neuroscience with a partnership of UCSF, UC Berkeley, the University of Washington, and more recently the Allen Institute for the Brain joined it. And it's made incredible progress, and people love working together. And we set this organization up the same way we did in California, where the heads of the research of the 3 institutions in cancer plus Ludwig Institute will all work together, and they're going to run the operation, and we're going to review how they do on a quarterly basis with the board, which is going to be made up of the 3 universities plus people from my foundation.
And I guess the Weill Cornell part of that is to run clinical trials eventually. I mean, immunotherapy is so different than radiation or chemotherapy or surgery, the other ways that we can go after cancer. What are the latest developments here? There's talk of GLP-1s. Do you think that those will be helpful down the road?
Yeah, so it's a great question, because one of the real focuses here is to try to understand the interplay between metabolism, things like diet, nutrition, what you eat, and how that makes your immune system be regulated to either go better after a cancer, or maybe have some challenges as it goes after cancer.
But we're talking about more than just don't drink, don't eat sugar.
Yeah, we're talking much more.
foods.
Let's take the GLP-1 story, right?
Yeah.
This turns out to be a revolutionary way to not just have people lose weight, but to address things like heart disease, to address things like having heart attacks, to address
And you
things
think it
like
might
heart
actually work? Your thesis is it might actually work
It does work.
on cancer?
You know,
It looks to be.
And I'm a user of Zepbound, and in the last 9 months, I've lost about 35 pounds.
Wow.
I just had a physical where everything is, all the numbers are fantastic, and as it relates to the cardio, as it relates to cancer, as it relates to everything. And
Was that the inspiration behind this gift? Your own experience and seeing how that helped over time?
no, I mean, it's a new thing for me. 9 months of trying this drug, and the drug it doesn't look and every time I have a drink or a martini, it doesn't say don't do that. And I find I work much better under those kind of circumstances than don't do that thing.
Right. A little more freedom.
And you gotta take this drug, you know, for a long time afterwards, so you don't gain the weight back. And basically, they're finding out things that the drug does all the time for all different diseases, including neuro.
Yeah.
Bob, so do you think that, I guess, a person's, is there going to be an overall immune, is that the approach now, to use an overall, I guess, I call it an antigen, whatever it is that the, what you're using to try to attack the cancer, what it recognizes?
Yeah, that's one of the attempts. It's been really successful. For example,
generalized for everyone, or
certain
take it
kinds of
out,
cancers.
take it out of the person, and then culture whatever you do in the lab to make it totally specific.
Like Moderna is talking.
Like Moderna, or like other people, right?
Both. So the initial forays have been into a generalized antigen that the immune cells seem to identify. There's a great example of people have identified that there are these things on cells called the don't eat me signal, and that sort of backs off for the immunotherapy, right? So what they've done is come up with blockers of the don't eat me signal.
Right.
So now your body's immune system can turn against it. It seems to be most effective in that case against blood cancers, lymphoma, leukemia.
Not solid tumors.
Solid tumors have been a tougher nut to crack, and that's why we're really looking at this metabolism, diet, nutrition interface. Like, people ask our cancer doctors all the time, does it matter what I eat? Does it matter when I eat?
Does it matter if you sleep?
Sleep is a critically important part.
Well, then we're screwed.
Long hours and not eating well.
Sandy, Bob mentioned this, just the idea that you can't replace what the NIH does with what other government funding does for some of this research. But how does that play into it? The partnership between private philanthropy and what the government does spend. How do you see your role? Where does that fit in? And what kind of projects do you try and take on?
Well, if you look at what's happened with the development of drugs in the last 10 years, I would say that somewhere over 90% of the drugs that have come out in 10 years, the NIH has been involved in some part of every one of them.
So you have concerns, either of you, about NIH funding being cut?
I think, the NIH, I think, and maybe correct me if I'm wrong, but they're not the big risk takers that they used to be. That's done by DARPA and others. So I think that it's the job of the private sector to be more of the risk taker and using some of the basic research and taking that to the next level. And it's sort of like a partnership that turns out that really works.
And by the way, this is $50 million that you're giving from your foundation, but you required all the institutions to also raise money for this. I think it's more like $125 million.
Well, I have a concept that I like people to believe in what they're doing, and they know much more about the science than I do. So the only way that I can understand that they really believe that this is a good idea is put up their own money or raise their own money. So each of the institutions has agreed to raise $20 million each. So we start with something close to $120 million.
Yeah, I mean, to get to your question and to build on Sandy's comment, if you think about it, for the last 80 years since the post-World War II era, we've had this amazing collaboration of the federal government, largely through the NIH, research universities, pharmaceutical companies, and philanthropists. All of them play a role in creating this great ecosystem that is America's biomedical research enterprise. Philanthropy can't replace, but philanthropy can do some things because you can catalyze high-risk, high-reward types of projects that then, if successful, might garner NIH support, might garner pharmaceutical support. And so I think that this ecosystem that's been created is really effective in helping to drive the biomedical research enterprise. All of us are putting in. I mean, Sandy told me from the beginning, I want everybody to have skin in the game. And so we are going to put $20 million in to see, and we'll raise that through other philanthropic sources to contribute our part, along with Rockefeller's part, along with the Ludwig, along with Princeton.
Sandy, let me just ask you what you think about the economy, what you think about the financial stocks while you're here too. This is stuff that I'm sure you're still watching very closely.
I do, and unfortunately, when you get addicted to watching the market, it's very hard to get away from that addiction. So I'm not sure that our president has gotten away from that addiction, and it's a good thing to watch what the market is doing. But I think it's very important that I would guess for the last 50 or 60 years, the U.S. government changes every 4 years, management, and nobody has really looked at how over that 50-year period of time, expenses got built up and built up and built up, and it began to make no sense. And we have a $37 billion, $1 trillion debt, growing at $1.5 to $2 trillion a year. I think we have to do something about it, and I think it's terrific that that what Musk is doing. I wish it was done more humanly, but I mean, looking at everything from the ground up, and he's very, very smart. It's the first time it's probably ever been done, and I think that we're going to find a lot of things, and I think especially in the area of regulation and cutting back regulation that really doesn't do any good, just creates more work for everybody, and lots of money is wasted. And I think part of that is going to be some of our recommendations is what we want to do.
Each administration adds on the regulations, and then they never come off.
They never come off.
They never come off.
You add to it, and you add to it, and you add to it. And let's look at Social Security, for example. I think you have a terrific new person that's going to run Social Security. He used to work for me, and I think he's the best operations person I've ever met in my life, and that's what the Social Security system is. And he's also a great manager, and he built a company that has called Fiserv from really next to nothing. And he's just a terrific person, and I think we're very lucky to have him in that job. But I think the real important thing is we have to look at Social Security as a whole. And industry, 25 years ago, made the decision that guaranteeing people what their pension is going to be is a very bad game to play, and you're going to have to lose. And we're seeing that as the costs go up and up and up every year. And what industry did?
Defined benefit stuff.
Yeah, what industry did is they switched from defined benefit to defined contribution. And when people's having 401ks, and when we merged with Citi, they were on the old pension plan. We changed it right off the bat and used the break of anybody that was over 50. We didn't change anything, but the people under that had enough time to work on their new thing. And the younger people loved the 401k because they were in charge of their own future. Nobody was interfering with them. And they can plan for their future, and it wasn't a government thing where you're always worried, is it going to stop?
You said something at the beginning about neuroscience. And you said there's been great strides, but at the same time you said that it's still in the distance, the real breakthroughs. I think it's kind of the last frontier.
Well, I think the distance, it is the last frontier, but the distance is coming.
I was going to say, when I worked for one of your companies, which I don't know how many I worked for you, I mean, but I get confused. Shearson and
Did you earn your way?
I told you I still have nightmares about about not cold calling and things like that. But what it reminded me of, I sold a lot of the stock that was involved in AI in the 80s.
Wow.
It didn't work.
Right.
Everybody lost money. It was called symbolics. It took this long from the mid 80s. What is that? 40.
Think about what
50,
it took.
40 years. But I think neuroanatomy. I think eventually we're going to hit the floodgates will open.
I hope it's sooner than 40
I just don't know when.
Well, AI is going to make
Gonna help with
everything
that.
go faster
It's going to help with that
and cheaper.
a lot. And if you think about it, we've been using AI in medicine since the 50s. You can find papers on
Right.
AI and
Ubers,
reading
yeah.
imaging.
Or Google Maps is AI.
But what changed it is cloud computing. Because now you have the power of computing to actually do that advanced computation that is AI. And so your question about neuroscience, I think this is one of the most interesting areas of science. Because the imaging is phenomenal. And then beginning to not just see what's going on, but to do functional imaging. Like, how does the brain change when we do certain tasks? And can we figure that out as to where the problems emerge? And AI is going to make a huge difference.
It's binary. Either a neuron fires or it doesn't fire. And somehow that allows you to see green and smell. It's the most unbelievable. What's even maybe more amazing, the 46 the chromosomes set up the nervous system. How does that? So even one step removed, life is just unbelievable, is it not? The way it's from 4 billion years of evolution.
And science is helping us figure that out, right? That's the key thing.
It is glacial, though, in neuroscience.
It's glacial if you are somebody who is waiting or hoping.
It is.
That's right.
It's glacial. But how many neurons are there, and how many connections does each neuron have? You're talking
lot.
trillion. You're talking trillion.
I would bet you, if we're thinking about global warming, that the warming of what's going to happen in neuroscience is going to be faster than the glaciers melt.
You're preaching to the choir here, Sandy. Believe me. The things I'm concerned about. That's not one of them. I'm much more concerned about all the nukes we still have, the loose nukes here and in the former Soviet Union.
So speaking of progress, what should we expect in 5 years? What do you expect, Sandy, in 5 years from the money that you're putting into this today?
I'm glad you asked him first. While
You know, I expect a lot, because I think the people that we are working with are going to make a lot happen. They're all very, very smart. They're young, they're energetic. They like working with each other. They respect each other. And if you put those things together and they like it, and they like working together, I think things are going to happen. And I think you're going to see a lot of things happening in the neuro area and in autism and, in a lot of these neurodegenerative diseases.
Well, maybe you ought to donate your brain eventually, Sandy, because at 92 you are, I don't know. Nothing is affected. You know what I mean? What's going on?
Philosophy is,
What's your secret? Huh?
I'm very concerned with what happens
Have you missed a
above
step?
the neck.
Do you like? I try to watch Jeopardy now. I can't remember things that I know. I mean, there's answers that I know that I can't come up with. So maybe
I'm doing more things now than I ever did in the
are you
financial
just as
business.
sharp? Do you ever forget? Are the things you notice about being 92 or not?
Well, my friends out on the West Coast are 30, 40, 50 years younger than I am. And
But you haven't missed a step.
they're all smarter than
You've
I
missed
am.
a step.
Pardon me?
Have you missed a step in
Not
your
yet.
thought process?
Not yet.
Well, it's pretty remarkable. There are lessons here to learn.
That's what I mean.
Our kids are grandparents, which I never heard of before.
Kids are parents.
So we have 4 great grandkids so far and 1 more on the way.
Well, it would be nice to know the difference between you and your anatomy or whatever, and people that at 80 or
65.
well, that's really one
I
of the big
I
trends.
think
Right?
if
We're
you
going to be able to take images of his brain, people like Sandy. We're going to be able to take all of their data. We're going to be able to combine that with data from hundreds of thousands of individuals and get to your point, which is, why is Sandy different than this other group?
Right.
And we'll get insights into that.
Right. Not all dementia people have myelin buildup either. So
it's from and we're still learning that. I think Sandy's right that it's going to accelerate at a pace we've never seen before.
Especially with AI.
Yeah.
AI's got to make a big difference.
And GLP-1s.
And GLP-1 has made
I love
me.
that you shared that. I did not know. Fantastic.
It does look good.
That is an advertisement for it.
It's unbelievable.
Well, I want to thank you both for coming in and Sandy for sharing this announcement with us first. We really appreciate it.
I hope I get a call from the president of Eli Lilly, because I think we can do things to help them too.
Excellent.
And they can help
know
us.
him.
We do.
What?
We can set you up with him.
Okay?
Sandy Weil, Bob Harrington, we appreciate your time. Squawk Box will be right back. It's 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan. Andrew is off today. Among our top stories this morning, President Trump announcing 25% tariffs on all imported cars and light trucks into the U.S., leaving little room for exemptions. The auto stock sinking after that announcement, and in the pre-market this morning as well. You can see GM down by about 6.6%. The president says the tariffs are permanent and will force automakers to bring manufacturing back to the United States. Investors preparing for a high-profile IPO, NVIDIA-backed CoreWeave is set to price its offer later today and then begin trading tomorrow. That offering could raise as much as $3 billion at the high end of its proposed price range of $47 to $55 a share. And Robinhood plans to roll out checking and savings accounts later this year to its paid Gold subscribers. The company would offer them higher interest rates and other benefits. Robinhood isn't an FDI-insured bank itself, but it will work with a partner institution to offer government protection on those deposits.
Let's look at the futures. Haven't seen them in a while. We've got a mixed market so far this morning with the S&P slightly lower. Dow's up a little. NASDAQ giving back about 28 points. That was the weakest index yesterday. Take a quick look at treasuries, which have been really sort of range bound recently. We are closing now in on 440 though, which we haven't seen in weeks. Let's get to Dom Chu with a look at this morning's pre-market moves. Hey, Dom.
Hey, good morning, Joe. Good morning, Becky. We're going to start off with a check on defense-related stocks. Lockheed Martin right now trading slightly lower, just to the, or now kind of just by about maybe 0.1%, on a downgrade over at RBC to a sector perform from an outperform. They also lowered the target price to $480 from $550. Those analysts are citing potential risk for the F-35 international sales dynamic and shifting Department of Defense budget priorities. But RBC does think those same shifting DoD priorities could benefit Northrop Grumman, which is up about 1%. The firm upgraded that stock to an outperform from a sector perform and raised its target price to $575. It was $500 prior, so defense in focus this morning. Meanwhile, auto stocks, as you mentioned, already sinking on the Trump tariff announcements. Now we're seeing how the street is reacting. JP Morgan is out with a note this morning lowering the price target for shares of General Motors, Ford, and Ferrari. They're noting that there's an increased potential for materials earnings risk as their quote-unquote draconian tariffs seem more likely than ever. JPM is also downgrading some auto marketplace names like TrueCar, now listed at an underweight rating, and Cars.com at a neutral. So there's an interesting dynamic, not just in the manufacturers, but the distributors for cars as well. But Tesla seems to be the outlier in autos this morning amid the chaos. That stock is actually up about 0.75% after some recent volatility. The EV maker is seen by some traders and investors as relatively insulated from the effects of U.S. tariffs because of its U.S.-made vehicles here. Some of those parts may be in question that they use, but Tesla, an outperformer this morning, up 0.75%. Becky, I'll send things back over to you.
All right, Tom, thank you. Right now, let's take a look at shares of AMD. Jefferies downgrading that stock to a buy from a hold, citing limited traction in AI, competition from Intel, and street estimates that, in their opinion, are too high. We're going to talk more about the chip sector and pressures facing the industry in just a little bit, but you can see AMD shares are off by about 3.5%. Jeff?
All right, coming up, Congressman Ro Khanna on the president's tariff battle, DOGE, in the state of the Democratic Party. Then later, Congressional Budget Office Director Philip Schwegel on the CBO's latest deficit forecast. Also, the tax agenda from the president. Squawk Box, be right back.
Insurance.
This just, in the last couple of minutes, this development, Wall Street Journal reporting that HHS Secretary Robert F. Kennedy Jr. planning to significantly cut the size of his department. According to documents viewed by the Journal, he plans to reshape the nation's health agencies, close regional offices, lay off 10,000 full-time workers. Those layoffs are in addition to the roughly 10,000 employees who opted to leave the department since President Trump took office. An official announcement could come as soon as today. The documents viewed by the Journal say essential health services will not be affected. Joining us now to talk about probably this, to talk DOGE, tariffs, and his town hall tour with voters across his state, Congressman Ro Khanna of California, whose district lies in the heart of Silicon Valley. Congressman, it's always a pleasure to have you on this morning. I'm I guess interested in what you think of the whole idea of trying to onshore just about everything and sort of rebuild what was hollowed out after 20 or 30 years of globalization. Is that a noble purpose? Can it be done, in your view, Congressman?
I do think it's a noble purpose. I think it absolutely has to be done. We made a colossal mistake offshoring industry after industry, whether it was steel, aluminum, shipbuilding. My only concern is that tariffs is only one tool. We also need a government procurement policy. If you build it, we will buy it. That's what actually Trump did with Operation Warp Speed that led to the development of the vaccines. We need that for other industries. We need strategic financing and workforce development, and we need to focus it on deindustrialized areas. But I support the effort to make us a manufacturing superpower.
Yeah, there's other ways to do it, but tariffs are, do you think they're a kind of a blunt instrument? Is it being done the way you would do it? Do you favor any of these? I mean, I know Biden left quite a few on, the Biden administration did.
I think some of them I do favor. On steel, I favor those. It's actually helped make Cleveland Cliffs and some of our steel companies more competitive. I favor the ones on aluminum. What I don't agree with is the blanket way that he's done it, and also some of the capricious way he's done it. One day it's on Mexico and Canada, the other day it's not. And so if it's a targeted effort at certain industries, that makes sense, but not the way that Trump has gone about it.
I bet you'd have similar comments about trying to, I don't know, trying to cut the waste from, I'm not going to say DOGE, it's just too easy. It already has a stigma attached to it, I think. But let's talk about how big the government is, how much money that we're in debt for as a country, and the notion that maybe we waste taxpayer dollars. How would you get at the waste, fraud, and abuse?
Well, look, John, you're a straight shooter. It's a $36 trillion debt. The Republican 10-year budget that they just passed would add $28.5 trillion to that $36 trillion debt. It is actually $4.6 trillion more than the Biden budgets were. So if we want to seriously look at where the budget is and cutting spending, why aren't we looking at the Pentagon budget that's nearly $1 trillion? That we need a strong national security, but a lot of defense contractors are monopolies. Why aren't we looking at what Big Pharma is charging Medicare? Why aren't we looking at Medicare Advantage that is upbilling, that is billing for patients sicker, claiming they're sicker than they are? There are a lot of big ticket items where we could have real savings.
Yeah, those are, the same arguments that Democrats and Republicans have been having forever. But in fact, I just tweeted something out that said that fraud, waste, and abuse is probably the biggest bipartisan thing that we have. That it's not specific to what my policies are or what my politics are. If it's being levied by the federal government, it probably is inefficient because there's no reason for it not to be.
Oh, there's certain things that are not inefficient. Medicare, the Social Security,
What?
large parts
Medicare's
of
not come on, are you out of your mind? Medicare? And I'm not saying it's Medicare's fault necessarily. There are look around and look at the way Medicare is gamed out by the people that benefit from it, or Medicaid. I think Medicare Advantage might be one of the things that we're talking about, right, Ro?
Medicare Advantage, I agree that they have actually had higher billing for people who are not as sick. But when you look at Medicare, the administrative cost of that program is far, far lower than private insurance. And most people who are on Medicare are pretty happy with Medicare. And that is actually a place where government is more efficient than the private sector. So I do think there is a huge role for government. You look at the Medicaid cuts that they're proposing, that in my town halls, that was the biggest thing people were concerned about, that they may not be able to get care for their kids or for their sick parents.
Ro, Medicaid, because you get, in some states, you get double the amount of reimbursement for it, is being used for after-school programs to teach chess. It started out as something to try to help people, poor people with disabilities, or that, you know, it's turned into this behemoth that covers so many wide areas. And you said a cut in Medicare. It's just a cut in the growth of Medicaid. It's just a cut in the growth of Medicaid that Republicans are proposing.
It's an $880 billion cut in Medicaid that, if you ask people in my state, would lead to possibly hospitals closing. I mean, there were people coming with it. One woman came with her 2-year-old kid. The kid was in NICU, fortunately survived, needs home care to thrive, and then needs to have a nurse go to school with him. And she was very, very concerned about what the cuts would mean. I mean, these are real issues. And the question is why? Why $880 billion out of Medicaid when you could look at defense, when you could look at other parts of the
Isn't
budget?
it out of the increase? Is there any year in the future where Medicaid spending would be less than the prior year?
No, but you have to look at the inflation. I mean, you can't holding something.
You caused that. Your party caused that too. No, I'm kidding. I'm kidding. It's growing faster than inflation, Ro, and it goes up every year. They're just talking about cutting the size of the growth that is expected over the next, what is it, 10 years?
No, but I agree that healthcare costs are way too high, and the way to go after that is to increase residencies, so we have more doctors, increase nurses, negotiate with the big pharma companies to bring down drug prices, make sure that you're reforming the PBMs that are adding a huge amount of costs, go after the fees that hospitals are charging, facility fees, have transparent billing. You know, a lot of times you go in, you get treatments, you don't even know what they're costing. Let's bring down the cost, but don't just cut Medicaid where you're kicking off folks or closing hospitals.
Let's shift gears a little bit, and the state of the Democratic Party. We can throw in Signalgate if you want, because I think it was a mistake and kind of a fiasco, although the outcome was obviously what people wanted, but it could have ended differently. I think that's probably true, using an unsecure network like that. But it does, suddenly I see, as I told Mark Warner yesterday, he had a bounce in his step suddenly, and a lot of Democrats had a bounce in their step. Is that going to be, it's not going to last forever. What's the Democrats do to find something that's going to resonate, do you think, at this point? Because it hasn't. Mid-20s for approval for Democrats.
Well, first of all, let me just talk about the Signal chat. I just don't understand why in the world they're doing it on Signal. I mean, it's not like they have to reinvent the wheel. Every administration comes in, there's a communication of top secret information in classified communication settings. In those top individuals, they basically bring the skiff to you. You can use that anywhere, and so it's just incompetence. But that's not going to be the defining message for the Democrats. One of the messages, very simple, that we're going to protect Medicaid and people's health care. We're going to protect the funding for disabilities. And we don't believe, and we've argued before, in the tax breaks to 83% of which are going to the 1%. We need to protect health care and education. But more than that, Donald Trump has a vision of how to build wealth from the 1980s and McKinley and Polk. I mean, let's conquer Canada, let's conquer Panama. We have a vision, Democrats, of how to build wealth today, in the future for families. I represent Silicon Valley. We've got to invest in technology in different parts of the country. We need to invest in advanced manufacturing. We're going to be a party that builds economic wealth for communities for the future, not the past.
Okay, Ro, thank you. And how many days? We got to decide soon. We'd have to do some fundraising and right, and everything else.
I'm just glad you're not. You're still open to Joe Rowe. I thought maybe after these town halls, you're hearing from your Republican friends, and I'm getting a little too controversial for you. So I'm hoping I'm still going to be part of your picks.
You really think we don't know how Democrats are stacking those Republican? I mean, when they come and you look at who you're letting into these places, they just came out of 9 Antifa rallies, the ones that are supposedly yelling at their Republican congressmen.
Joe, come with me. Come with me on one of them. You'll see. You'll see the folks. We should do a town hall together. You should come. We can get to meet with the folks.
So you go to Republican town hall meetings? See, you're what I'm talking about. You're one of those guys. You're probably in disguise and you're screaming at the Republican congressman.
I was just listening. I was listening to people's stories. I'm telling you, come out with me. You'll hear what these cuts mean for folks, and you'd enjoy it. You should come out to one of them. They're real people.
The last right track, wrong track for what Trump is doing is 46%. It's the highest level since 2004. So I don't know who these people are. I think this is what people elected him to do.
Not on the economy. They elected him on securing the border to lower prices, not on the Medicaid cuts and education cuts.
You're talking about eggs again. Get over to eggs. They're coming down now, bro. We gotta go. We'll start strategizing about 2028. I think we got a couple of months. Anyway, see you later. Thank you.
I'm going to show up and heckle both of you. One of those. All right, still to come this morning, we'll have initial jobless claims data and revised fourth quarter GDP. We've got the numbers and the market reactions straight ahead. Right now, though, as we head to a break, check out shares of UBS, Bank of America downgrading the stock to underperform. Stock is off by about 3% this morning. B of A is citing regulatory pressures likely continuing to drag on the Swiss banking giant. The analyst there estimating that UBS may face $20 to $25 billion in new capital requirements. That stock again off by about 3% this morning. We'll be right back. GameStop shares are falling, giving back some of this week's gains. That stock surged yesterday after the company disclosed plans to invest in Bitcoin, but the shares are falling today, down by about 7 1/3% after the company announced plans for a private offering of $1.3 billion in convertible senior notes. Plans to use those proceeds for general corporate purposes, including buying Bitcoin. So interesting. Announcement that boosts the stock one day, the next day, oh, by the way, we're selling into that.
And then using the proceeds to
buy the Bitcoin you said you were going to buy yesterday. Yeah.
Discord is working with Goldman Sachs and JP Morgan on an IPO and could seek to list publicly as soon as this year. This, once again, is according to Bloomberg, if you were wondering. The communications platform, popular with video gamers, grew in popularity during the pandemic, was valued at $15 billion in 2021. Reportedly held acquisition talks with Microsoft, though no deal ever materialized. Up next, breaking economic news, initial jobless claims and final revised fourth quarter GDP. Squawk Box coming right back.
And make it count.
Former Treasury Secretary Janet Yellen is joining an advisory board for bond giant PIMCO. The board meets several times a year to advise the firm on global economic and political and strategic developments and their relevance for the financial markets. Other members include UK Prime Minister Gordon Brown and former White House Chief of Staff Josh Bolten, in this case, not Michael.
No. We've been watching what's been happening with the futures this morning. At this point, Dow futures are still up, but barely, only by about 13 points. S&P futures are down by 10. The NASDAQ is indicated off by about 60 points. Of course, this does come after 3 days of gains followed by a pullback yesterday, so we'll continue to watch this. A lot of questions being asked around the tariffs and what that is going to mean. We are still waiting on the data because the data is going to determine what the Fed will do as we go through these things. We are just seconds away from initial jobless claims and the final revision of fourth quarter GDP. Looks like right now the 10-year is at 4.38, the 2-year is at 4.02. You've got the 30-year close to 4.75%. It's at 4.74 right now. Again, watching all of this stuff, and Steve, I guess the question is what the Fed's latest situation is, what its latest read on this. And
did you hear Mussolini yesterday, the St. Louis Fed president? He's taken over from this great tradition of Bullard and Poole, the hawkish side. He was hawkish. He was out there saying, look, there's two ways these tariffs affect the economy, direct and indirect. We're going to let the direct pass through, but we have to address the indirect, and if we need to, they may have to address them with higher rates. He was very hawkish, different from how the Fed done it, and we're going to listen to the data from the great Rick Santelli.
Right, Rick Santelli standing by at the CME. Rick, take it away.
Yes, on the GDP, of course, this is our third time around the block. The current level at 2.3, well, that would be the best since the previous quarter when it was 3.1. And if you look at the next week, that'll be the first quarter of 24, which was 1.6. We move up a tenth to 2.4. So 2.4 is our final read. And 1 month from now, we'll get the first look at first quarter GDP. If we look at consumption, it moved down a couple of tenths from 4.2 to 4%. And on the pricing indices, on the main price index, 2.3. We lose 1/10 from 2.4. If you look at the PCE price index, that's a quarter over quarter. And of course, we know at the end of the week, we're going to get more PCE data. 2.6, it drops a tenth as well from 2.7. Now, let's look at what we have on initial claims. 224,000, that's 1,000 less than a slightly revised 225,000, right in line. The best way to look at this number is the last time we were over 250,000 was basically around Halloween of last year when it was 260,000, and the lowest reads that we've had recently are hovering right around 208 and 203. Those were in January of this year. And finally, if we go to continuing claims, 1,856,000. That's about 30,000 less than expected, actually. In the rearview mirror, a slight revision, so from 1.892 to 1.881. Maybe the best way to understand this number is last time it was 1.9 million. That was the second week of January of 25, and that comps back to November of 21 when you start getting readings over that. Now, advanced trade, we know that this number is a lofty number. This particular series on the trade balance came out in 1989, and of course the current number is minus 147.9 billion. That's a new all-time record. We pretty much seem to be going record to record. However, last month now at minus 155 does still claim the biggest deficit this month, a bit lower, minus 147. Those are scary numbers. And we could always debate as to whether these trade balances are a good thing, bad thing. Does it put money in the U.S.? Does it help purchase treasuries? Does it get recycled? There's a lot of ways to look at that number. Inventories. Boy, what a heightened awareness of inventories. And I'm sure Steve Leisman will touch on this because the inventory game goes right along with the tariff game. Everybody's armchair and what's going on. But we did get some big jumps. Now, let's look at retail inventories. They were up 0.1%. And the big news of retail inventories is they finished last year at minus 0.5%. That was the first major turnover to the downside since May of 21. And it hasn't been all that responsive. Where we are getting the big moves is in wholesale inventories. Now, it's up 0.3, but our last look in January was up 0.8. That was the biggest wholesale jump since the summer of 22. And that's what many, of course, are going to focus on. Is this getting ahead of the tariffs? Is this going to be a hiccup if the tariffs prove to be somehow not as bad as we anticipate? Last I looked, Gain, I had 2023 data. Imports on goods and services as a percentage of GDP is probably in the 13 to 14.5% range, just to kind of put a face on it. Interest rates are moving down on this data, but moving down on this data still puts a 10-year at 4.37, which isn't all that much lower if you consider where we were a couple of weeks ago. Back to Joe and Becky.
Hey, Rick, really quickly, your take on the bond market's reaction to the tariff news. How do you think they're taking it? How do you think they're kind of interpreting some of these things?
Well, I look at it a little bit different than many because, in my opinion, what I can actually see when the news hits the wires in terms of movement, it's treasuries react to equities. So equities get nervous, the volatility goes up, many times it goes from green to red, that becomes a flight to safety in treasuries. That's what I see. Now, many, of course, see another scenario. They look at yields moving up the last couple of sessions and say, tariffs are going to potentially be inflationary, even if it's a one-time inflation. I go by my primary theory that when markets get crazy, treasury yields seem to go down on the biggest influence in tariffs, which seems to be on the economy, at least hypothesizing on the economy, and its relevant moves pushing stocks lower.
Okay. Rick, thank you.
What a great explanation.
It is. I appreciate it. I want to hear what he thought about it.
It's, what is it, when the going gets weird, the weird turn pro. That was a quote from Hunter S. Thompson in The Great Shark Hunt, but that's what I think he's saying, right?
Yeah.
Gets weird, I go to the treasuries.
Yeah.
A couple quick things here. Rick is right about this trade deficit, which looks like there's some front running going on. And this is one of the reasons I think the Fed is saying that the whole tariff thing complicates their ability to see what the heck's going on.
Front-running meaning, retailers and others who need these goods are bringing them in early so they don't have to pay tariffs on them starting next week.
Right, you bring it in earlier, you hope to get in front of it. And that's why also you have this bump up in inventories, because you bring the stuff in, it's got to go someplace. You're either going to put it on the shelves. Interesting question about whether the people have this right, if it doesn't end up being a big deal.
Right.
Then they have too much stuff.
You paid to get extra fast shipping here, and then you've had to store it for
Right. The China trade deficit was massive. It was 31 up from 24. So that's a big deal. We're not seeing, and this is good news, all the stuff going on in Washington, we're talking all about it. It's not showing up very much, it would appear, either in the federal jobless claims measure or in Maryland, D.C., and Virginia, at least at this point. Maybe that's because the court cases have stopped some of it. Maybe because people get severance, but it's not showing up. And it's not showing up, it would appear, in a massive. We did talk about there has been an increase, and that would appear from the jobless claims for the private contractors that do government work. That was up about 10 or 12,000 by my count in those 3 districts. But it's not big, and the idea that jobless claims is low and we could be entering a period with more jobless claims from federal government is a good thing, right? In the sense that the job market, the private sector job market seems to be in pretty good shape. So all that's good. Before I came on here, what I saw, I didn't check it since the numbers, but we got 2 rate cuts built in, and the end of the limb, if you think about it, the part that shakes the most, is that 3rd cut.
Okay.
So we're like 49% for December, and that's where we're at. The market's does think the Federal Reserve will cut this year, at least twice, with a debate about the 3rd time.
Okay. You looked into some of those numbers we were talking about before.
Yeah,
government numbers. It turns out it's really hard to dig down.
That's why this story took me a week. Yeah. I did the data, then I sent it to Wendy Edelberg from Brookings to go over it, and she redid the data to make it right and more clear. But the reason why it was so much higher on the federal side in the 50s and 60s is probably because of military hiring.
Right.
And the military hiring there's military personnel and there's civilian military personnel, right. And I can't back those out yet. Bottom line is we are not overstated overstretched as to where we were historically.
But with computers,
Mr. Kearney has great thought.
With computers, we should be at half of what we were. And there's
automation.
Everybody else's.
Hey, I go online, I register my cars and my boats and everything like that online. I get the new thing. I don't have to talk to anybody. That's great.
You know what you can't
do? You get your passport?
You're just
you used to be able to get your passport.
He registers his cars and his boats. You are such a
You need a registration.
I have one little skiff up in
I told you what you had, and I know this.
What?
You got a little dinghy, right? Don't you have a little...
I am not so dumb as to know that you're making a joke here, Joe. I didn't fall off the turnip truck yesterday.
You called it a little skiff.
A little skiff.
You called it
a little dinghy. Perhaps reflective of your own personal insecurities.
When I was a little boy, still.
Perhaps reflective of your own insecurities.
Yeah, exactly. Maybe.
Perhaps.
We think you protest too much.
Right.
Still to
or too little.
Yeah, they are too little. Still to a check on the chip sector. To a check on what?
Oh, Phil, I can't.
What is that thing that was
Still to come, a check on the chips.
Oh, still to come. Thanks, Greco. On the tips, but up next, Congressional Budget Office Director Phil Swiggle on the CBO's latest deficit forecast and the president's tax agenda. Be right back.
Orlando Resort.
The latest CBO report warns that the government could run out of money as soon as August if lawmakers fail to raise the debt limit. President Trump recently told Senate GOP members he would like to add a debt limit increase in his tax bill. Joining us now, Congressional Budget Office Director Phil Swiggle. It's good to have you on, crunch all these numbers, Phil, and I mean, they're helpful. I guess they're not, we aren't ready to actually put them in stone at this point, but let's go over some of them, and then how do they change given the developments from yesterday and Liberation Day next week with tariffs?
Yeah, so as you said, we put out our best projection of the so-called X date when we hit the debt limit. And that's sometime in August or September. There's some big financing needs coming in at the beginning of October. So it's tough to see getting past that hurdle. There's lots of revenue, of course, coming in April 15th. There's more revenue June 15th. We're pretty confident the government's going to get past those. And then, over the summer is the challenging part. And as you said, action has to be taken before then, and Congress can do it in lots of ways and in lots of different vehicles.
Yes, and I guess, do you think there's a chance that they don't this time? Because poor Chuck Schumer is afraid to stick his neck out next time. That didn't work out too well for him in his own party, which what seemed to be something that he was doing because it was the right thing to do.
Yeah, I'll tell you the challenge for CBO, for me as director and my colleagues, is to provide the information to Congress that's, that they need at the time they need it. And the debt limit is especially hard because there's so much uncertainty. And in some sense, imagine if we thought, well, we're gonna, fail, we're gonna hit the limit, hit the X date, but we weren't sure. And it was like within a day or two, what kind of advance warning do we need to provide policymakers so they can take action, and how long does it take action? And the kinds of questions that you were asking, the political stuff I can't address, but you put your finger on the important thing is how long does it take Congress to act? Because the consequences of not acting are really catastrophic.
Do you think with fewer audits and I don't know, if you wanted to try to minimize your tax bite, maybe this would be the time you would do it? Do you expect that to adversely affect the revenue numbers we're looking for this year?
Yeah, so it's also a really good question. We have the activities in the executive branch. DOGE is looking to improve the efficiency of the government, and the DOGE staff have been tremendously helpful to CBO. So we benefit from their activities and their helpfulness to us and OMB as well. If they improve the efficiency of the government, that would help on the revenue collection side, or the efficiency of Social Security and things like that. The volatility can go in the other direction, and change is hard, and it's too soon to know how that's going to shake out on the revenue side.
Can we talk instead of what it seems like we always get through this somehow? I mean, because if we didn't, you don't even want to consider what that would mean if we didn't. Let's just talk about your 10-year debt and deficit projections. I don't know why we were still at $2 trillion last year. If the president gets all of his tax cuts through on all these loans about cars, I mean, there's so many different. That's one of the new ones. Are we going to do $2 trillion again based on what you're seeing? We should be under $1 trillion like we were before the pandemic.
Yeah, it's a historically unusual time, as you said, that the deficit is so wide when the economy is doing reasonably well. And that's the data that Rick Santelli discussed, a few minutes ago. Yeah, the economy is in reasonably good shape. We don't see UI claims rising sharply, and yet the deficit is so wide. Look, there's a long-term versus short-term, and Congress obviously is looking at what's the right long-term tax policy and what will support growth. The short-term is the deficit is really big, and somehow we've got to get from where the deficit is unsustainable to a sustainable deficit, and that's part of the policy debate.
So and whenever you have a 10-year outlook, my problem is it never really seems to acknowledge maybe we could have some growth. Maybe it's because it never really happens to the extent that we wish it would happen. Will it ever be like that where we deregulate, we do, we try to rein in waste, fraud, and abuse? Could we ever see the actual numbers far outpace what you believe because of growth? That's the holy grail. Or is it always just sort of a fool's errand that does it never really happen? Am I just hoping against hope that's possible?
No, it's definitely possible. And, that's, again, the activities of DOGE. That's what they're aiming at. We're tracking it carefully. We're seeing initial signs in some of the outlay accounts of outlays slowing down. But as you said, that's the holy grail, is improving the efficiency of the government, of our spending, having strong growth that is, instead of less government driven and more private sector driven. I mean, I listened to the executive branch, that's what they're talking about. It's possible, it's just getting from here to there, and in some sense, getting through the uncertainty and getting the policies that will support growth in the future.
Phil, what do you think when you hear Congress talking about not using CBO estimates for their budgeting purposes? Obviously, CBO is not always right, but what do you think about throwing those estimates out the window? I think their argument is it doesn't take enough growth into account, the potential for growth.
Okay, yeah, it's something I hear, and I talk to members who tell me that directly, and I appreciate that. I want, if members are, worried about what we're doing or skeptical, I want to hear it and, have a chance to engage. We provide information for the benefit of the Congress. Ultimately, it's up to the Congress to decide, what to do and what information to use. And I welcome all the information, right? There's great outside groups that do budget analysis. I think our analysis is really superb and top notch. But the more the better. That's my feeling. The more information, the better. And we engage with all these groups. So that's basically my feeling on it.
What do you expect to be in the final big beautiful bill? And how do you make any projections, not knowing how that's going to play out?
No, it's a great question. It's something we think about a lot. And for months at CBO, we've been working to get in positions that whatever questions members of Congress have, we can answer them. Sometimes we're there, sometimes we're not. Our colleagues at the Joint Committee on Taxation handle the tax part, which obviously is a big part of reconciliation. We work on health, and some of it is joint with JCT, but say changes in Medicaid policy, that's intrinsically a CBO activity. And we've been working with members with the committees of jurisdiction, outside groups that have suggestions for what we should focus on. We've been working on that for months so that we can be ready to provide the analysis of policy. So wherever Congress is going, on immigration, energy, spectrum, I mentioned Medicaid, anything else, I want to make sure we're ready for it. And that's what we've been working to do, to get our modeling ready.
So Phil, sometimes we hear President Trump talk about, it says his most beautiful word in the English language is tariff. And we hear numbers that the Treasury could reap like $1 trillion. Is it at all possible that something like that could come to pass, or is it a pipe dream? Would it allow you to have more? I'm sure some of your projections would look much better if you could add $1 trillion of revenue into a couple of them. Is it possible at all? What do you do when you hear that from President Trump?
We follow what the president's doing, and we follow the tariffs.
I'm watching your mind work, and you're like, ooh,
yeah,
boy,
yeah. How do I answer that? No, so it's we follow what the executive branch is doing. We follow what the president says, and the tariffs is a hard one because they do change. Maybe it's not minute by minute, but week by week. The tariffs that have been put in place so far and that remain, some have been put in and come off. But if the ones that are in place now, so this is not April 2nd, but the ones now, we're here together, if those are implemented as announced, and there's no exceptions, no exemptions, that would be it's like $800 billion of revenue of customs duties over the next 10 years. And so that's a meaningful amount. It hasn't arrived yet, right? It hasn't hit the Treasury
Is it
statement.
offset by consumers, a tax on consumers? Net it would be $800 billion. What would it really be? What would the benefit really be?
Yeah, no, that is exactly the right question. And before Steve and Rick were talking about that, about the impact of the tariffs on the economy, right? So it reduces the efficiency of the economy. It boosts the price level. We don't think it leads to sustained inflation, but there's a period of inflation that has a negative effect on families and on businesses and business investment. Maybe it leads to higher interest rates through inflation, but maybe it leads to lower interest rates through activity. We're tracking that.
It's a nonpartisan CBO, isn't it? You are a master. You are a master of. You didn't say one thing either side could get mad about. I don't think so. I don't know how you've been doing it a while.
As much as we try.
As much as we try. You've been doing it a while, but we appreciate your answers and the thoughtfulness and everything that you do. I'm just happy that you said maybe growth is something that it actually might be able to happen. So hope springs eternal. So should I be optimistic? We should always be optimistic. All right. Thank you.
Yeah, thank you.
All right, coming up, pressure on the chip sector ahead of the opening bell. We're going to speak to an analyst about NVIDIA and AMD, two of the biggest losers on the NASDAQ this morning. As we head to break, check out the price of gold hitting a new high in early trading. Headed to, could be 3,100 before we know it. Squawk Box will be right back.
report just in the last few minutes says that CoreWeave is planning to downsize its IPO and cut the price, implying a valuation closer to $23 billion than the $30 billion it had originally been seeking. That's according to a report from Semaphore's Liz Hoffman. CNBC is reaching out to the company for comment. NVIDIA shares down again once again this morning, sliding about 5% for the week so far. Joining us right now to talk the chip stocks is Vivek Arya, Bank of America's senior semiconductor analyst. Vivek, first of all, what do you think about the slide in NVIDIA chips this week?
Good morning, Becky. So, last week we came from a very successful GPU technology conference the company had. They outlined a path towards $1 trillion of spending in the data center. They really stressed how the computing requirements of these new reasoning models is going up by a factor of 10 to 100 times. And then they outlined a very multi-generational roadmap that goes out all the way till 2028 and spans across their unmatched expertise in hardware and software and systems. So I think fundamentals are rock solid for the company, but what's also happening is there's a lot of geopolitical worries. There's a lot of angst regarding restrictions of their products to China. There is this new AI diffusion rule that is supposed to go into effect. It was put in place by the Biden team, and if it is implemented, and I think if is an operative word, then we could see the effects of this by May 14th when it is fully implemented. So I think the stock is essentially trying to go back and forth between fundamentals that are exceptionally strong and a range of these geopolitical worries, which we think will get priced in the stock by May 14th, and meanwhile the valuation we think is quite compelling. So we do believe very strongly that the fundamentals will win the day, but over the next few weeks we have to deal with some of this geopolitical volatility in the stock.
Sales to China, is that 10% of their revenue?
Yeah, their overall sales are about 13%, but about a quarter of that is going into gaming, it's going into automotive, into workstation. Those parts are not restricted. So we size that the part that is in the data center that is exposed to China is about 10% of the sales. And even in that, there are parts of the networking business that are not restricted. So when we get down to it, the 8 or 10% that is exposed to China, it's specifically their H20 product. And what's interesting, Becky, is that even under the AI diffusion rules, there are no restrictions in terms of them shipping this H20 product to China. This is an older generation product. There is competition for that in China from Huawei. So it's a competitive market because it's an older generation product. So I don't think it's a given that all their sales to China will be restricted. But when we go through the sensitivity analysis, even if we take the China sales out, even if we bake in the effect of these AI diffusion rules, we still see that the stock is trading anywhere between 20 to 26 times less than its earnings growth. Versus if you look at the Max 7 stocks, they are trading 2 times their earnings growth. So we think it's compellingly valued regardless, but we understand that some of this, news-driven headline, these headwinds have to get over before the stock starts to stabilize.
Vivek, understood. Thank you for being with us this morning.
Thank you, Becky.
All right, that does it for us today. Make sure you join us right back here tomorrow. Looks like the Dow futures are basically flat. We'll see you later. Squawk on the Street begins right now.
Good Thursday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures are trying to hold even as the president announces those 25% tariffs on foreign-made cars and auto parts, waiting for some response from the Europeans. But meantime, yields hit about a 1-month high, the curve steepest in about 3 years. Our roadmap begins with Trump's latest trade target, slapping those tariffs on all cars not made in the U.S.
Plus Tesla and tariffs. CEO Elon Musk says the company won't be unscathed and the cost will be, quote, significant. Yeah, we'll talk some Tesla. And Related's big AI bet. This is, of course, known as a big real estate developer, but they are making major investments in data centers. Yeah.
Let's begin with the president implementing those tariffs. He outlined them during his announcement yesterday.
We'll effectively be charging a 25% tariff. But if you build your car in the United States, there is no tariff. And what that means is a lot of foreign car companies, a lot of companies are going to be in great shape because they've already built their plant, but their plants are underutilized, so they'll be able to expand them inexpensively and quickly. But others will come into our country and build, and they're already looking for sites.
Went on to say, Jim, that he'll add far larger tariffs if, say, the Canadians and the Europeans try to team up to create what he would argue is economic harm to the U.S.
Yeah, I mean, look, I think that we have to get back. This is something I was talking about yesterday, you guys, that you didn't get any immunity if you built cars here. And one of the reasons is because the president is convinced that we become nothing but an assembly plant for expensive overseas cars. So 60 million cars sold here, 8 million.
16 million, right? 16, yeah.
8 million
Yeah.
are from overseas, okay? But the actual cars that are made here, only a small percentage of the expensive stuff, the high value added engines, are made here. Those are imported. So what you end up is that you could say only 25% of these cars is actually American. And that is a big, big issue. And I think it's, look, I think it's very
By American, you mean 100% American. Components and assembly.
Exactly. It's just that it doesn't happen here. So when he says that the plants are somewhat empty, I mean, what he's talking about is that all they do is assemble things here. So the German engines are made in Germany, the Japanese engines are made in Japan, and we get them here. And it just turns out that you can't rely on the figures that you thought, because if we're really just an assembly plant for the expensive parts, well, then we don't really
All right,
have
but
the
I mean,
business.
we're already talking about almost 8 million cars that are actually brought over
Right,
here from
and
other
they're-
places.
those are
So
gonna be
all of those are going to have a 25%
Yes,
tax.
absolutely.
The BMW that's made in
Right.
Germany, the Audi
Well,
that's
that's what
made
I-
in Germany,
Yeah, I mean, this is my point.
the Mercedes that's made in Germany, it's
Right.
25% more.
Correct.
Okay, just
And-
making sure.
Well, I mean, David, I was thought you were going to come back and say, look, the one that's really, really going to be hurt is General Motors.
And it,
that
and
would
it
be
is,
true.
and that's why the stock has been getting hit. But that's because of Mexico and where they have a lot of their
Yes.
production, correct?
Right, and they have far more than Ford. Ford should not be hit nearly as badly, but obviously people are selling all these.
Yeah, Ford generally considered to be about 80% domestic.
Right.
GM is more like 60 to 70,
Yes.
as opposed to Tesla, Rivian, Lucid, 100%.
Well, I mean, I know that we have to, talk about Elon Musk and how, quote, badly he's hurt, but I think this just basically says, okay, listen, you don't get a free ride if you're from Japan, if you're from Germany, if you're from South Korea, just because you build plants here. Because we're tired of you making these kind of faux plants, so to speak, where the easiest stuff is done here, and we don't really require a lot of people. Now, I think what's very interesting is that this is a classic left-wing issue, in that this is the hard left UAW calling for this, and I think it's kind of intriguing that the president is agreeing with the hard left UAW.
Oh, yeah. UAW's come out with statements of support. Of course, they're arguing for high-paying jobs,
Right.
which is going to make the end product a little more expensive, is it not?
Exactly. Yes, it will. But and you know how I feel about tariffs, David. I'm classically pro-union.
I don't know what that means.
No, I'm saying this is a very pro-union strategy.
Right. So you are pro-tariffs, or you're not?
I am pro-tariff, absolutely.
You are
pro-tariff. I hate free trade. I think it's been an embarrassment for our country. It's cost us fortunes. Everybody picks on us. There's just no end to it. And now if my views don't really matter.
Can we write that down, though? I hate free trade.
I hate free trade.
Really? You hate it?
I've hated free trade forever.
You have?
Yo,
I mean, you've been a beneficiary though of globalization and asset flows around the world.
I have said, look, I am a big winner from
Anybody
it.
in the service business has certainly been a beneficiary to a certain extent of free trade.
You want to own the service companies because they're not going to be tariffed.
Which is our economy,
I've been
basically.
saying, I know that you don't get that much chance to watch Mad Money, but I come out against free trade every single night. I think it's just an abomination, and these countries we've been a dumping ground for these countries, and it's time. But again, that's my editorial at the end of Mad Money.
Well, you sound a lot like the president because he would say, I mean, in fact, uses the same language.
Maybe he sounds a lot like me.
You're also pro-consumer, and you have long argued for people who maybe don't have as much to be able to afford things. There's an item last night that foreign-made assembled cars are going to be essentially a luxury item in this country.
I know, and this is the problem: is that do we favor cheap stuff in this country, but at a certain point we also wrecked our small towns.
Yes, we did.
And that's what I'm focused on: the destruction of the small.
I
and
do
medium-sized
find, again, we are entering a new era in terms of what we're trying to accomplish here. It's pretty complex in some ways.
It's really
the outcome is uncertain. And I do find, watching Phil LeBeau yesterday do his great reporting from that Hyundai plant, I was struck by the robots, of course, as so many others were. And you do wonder over time, especially if you're trying to get costs down to become more competitive globally, not just to service a domestic consumption, are we really going to end up with the jobs? Or are we just going to end up with a lot of robots?
Well, look, you're going to have to put a lot of robots in everywhere because people cost too much.
Right. But
That's
isn't
one of Jensen Long's
the
issues.
end game here is to have higher paying jobs that give people a good wage and dignity and a lot of things that you're
You just
talking about.
mentioned our small towns. That's what that's all about.
But I think if you made the expensive stuff here, if you were to make the engines here,
I
those
know,
are
but what if
difficult.
the engines
the
ultimately
assembly
are
is
made-
the assembly is just robot.
Okay. Okay.
Right.
I mean, there's a great piece in the FT this morning about China going through that same issue. They have lost manufacturing because of automation.
Yeah, they have. I mean, look, I think that
meanwhile,
we're very close to having robots with digital twins that are made by NVIDIA and robots.
You talk about it all the time,
Right.
and how quickly that's coming. By the way, the other side, of course, it's never going to happen, but I just pointed out is we could all have $20,000 EVs made in China right now. Let them subsidize the hell out of our consumer,
that is the
basically.
biggest issue of all,
right?
because
And we all get to buy automobiles, at 1/3 the cost.
Well, look, I mean, I think that that's the dilemma of Mexico. Mexico makes a huge number of cars, but they had that backdoor, China, and
But
President.
back to this point you keep making about engines and parts.
Yes.
In other words, now some of it is still exempted under the current free trade agreement with Canada and Mexico.
Right.
But it's unclear to me exactly what is and won't be, Carl, exempted in terms of parts coming from those countries.
Know, right? We don't know yet.
Right.
That's the difficulty. I know that when you look at the plants, say, that are on the border of Mexico, you use an Allison, which was stocks off. Allison transmission, that is made in Mexico, so the cars go back and forth. You make the frame in America, which is the low value added, and then you go make the expensive, high value added stuff in Mexico, and then you ship it back to America with the low value added.
You want to read this line from Morgan Stanley's Adam Jonas this morning? The impacts are so potentially negative that we struggle to see how such measures can truly remain a permanent feature of the U.S. automotive landscape.
Well, I know that if you were to come to the table and say, you know what, we're going to start making the high value added stuff in America.
When's that going to start? 3 years? 5 years?
If I were these countries, I would make it yesterday. I think this is a very tough stance. Now, what I'm surprised at is that David didn't say to me, oh, you're just parroting a particular member of the administration. And I would say it's a member of the administration I've known for 50 years, and I think he's a man of great integrity. Even as he has, that's, oh, sorry.
No,
on this
Peter
issue.
Navarro. I
On
know,
this
he's
issue,
an old
on this
friend of
issue.
yours. Was he a professor of yours at Harvard?
Yeah.
Although he's
Tufts.
Yes, he's a Tufts undergrad, but yes.
Tufts.
Yes.
And then Peace Corps, and then the JFK School of Government.
Right.
His was the hardest class to get into because he was a radical left, and explained a lot of the world to me, radical left.
Understood.
And I'm stuck by that.
Understood. And I know you hear from him all the time.
I mean, we're back to this sort of...
guilty as charged.
We're back to the theoretical discussion of, all right, you have a trade deficit, Jim, with your barber. Does that mean you need to learn how to cut hair to resolve that deficit?
No, but I do think that it's time for these countries to... Look, this is about dumping. It's always been about dumping with the president. They come in and they use our country as just a place. They subsidize their stuff. In the case of China, they subsidize their ports, subsidize everything, and then they dump it here. And I think that that's not a bad argument.
Listen, this is in process. We'll see. April 2nd is obviously going to give us a little bit more clarity, although even there I think we're still... yesterday the president, I watched the press conference, I'm sure you guys did too, trying to understand exactly what it means by being a little more lenient. We may not be as tough as... we don't know what that number is going to be, though.
No, we don't.
We don't.
No.
And the market is still waiting for that.
But let's bring it back to where our viewers can say, oh my God, Kramer's just not parroting Peter Navarro's rap.
Okay.
These are very hard stocks to own. We've had this incredible renaissance. Felt like I should quote Wilf.
I like the way you say that, yeah.
So renaissance in the company in Europe. right? And that Europe, all this strength in Europe, some banking, but it's related to defense because that's, you better go raise your money because we're not going to do it anymore, and autos. And so I am willing to say that maybe we have seen the high water mark in the European recovery, and I thought there was a very interesting rise in the futures not long after the president gave his talk, and I think that's flow back. Not flow maze, which you're probably familiar with, but flow back.
Got it. Okay.
So the European bid is done, in your view? And then,
Yes, I'm saying
and then,
that.
And then what about
Except for Santander.
gold to 30.60 this morning? 10-year, 1 month high, 530s, steepest in 3 years.
Well, there's just so much fear everywhere that I don't think that's wrong. I had paychecks on last night in the small to medium-sized business, but the small to medium-sized businesses, their businesses are doing great because mostly service. But when you poll them, they're all very nervous.
So I should pull my 401k out of the DAX?
Yeah.
Because I went all in, and
No,
I'm
you
kidding.
should.
That's a joke.
But
It is up 13.5% as of yours.
Look, all I can
for
say
the year.
is
Pretty good.
All I can say is that you have gold company executives who are buying gold at Costco.
Gold company executives buying gold at Costco. Why are they doing that?
Well, because it's tremendous value. You can buy it as. I'm actually not kidding about this.
I wouldn't think you were.
Yeah.
Meantime, Jim,
I store it in a safety deposit box, full disclosure, but I buy gold constantly through Costco. It's one of the great. What's better? You get 3% back, David.
Do you
get the
actually
3%
take
back.
possession of the gold?
Yeah, I put it in a safety deposit box, and I get the 3% back, and I'm a big Costco fan.
And the yield on that is?
Well, not everything's yield. Sometimes it's just about.
It's there. You
making
got
a
it.
move.
You got the gold.
It's about making a move.
In case
Dave.
you gotta get out fast.
But here's the problem: gold's heavy.
It is heavy.
If you want to get out fast, it's heavy.
You're not gonna be able to strap it to your legs. It's not like diamonds.
No.
No.
Is it safe, David?
Exactly. Is it safe?
It's so safe you can't believe it.
Yeah.
When we come back, a closer look at the big bets on AI as we anticipate this CoreWeave IPO in the coming days. Take a look at the pre-market.
They killed CoreWeave.
We're going to talk about that as well as we've moved slightly into the red. Stay with us.
and make it count.
Of course, it is continuing to be a very busy week when it comes to artificial intelligence. CNBC confirming, for example, that OpenAI expects its revenue to triple this year. It does have quite a growth rate. $12.7 billion is what they're talking about now. Both Jim and I have sat down with Sarah Fryer, the company's CFO, in recent weeks, and I remember throwing a number at her even only a month ago of around 11 or so billion. She certainly seemed to not shy away from that. So 12.7 billion, perhaps not a surprise for many of the people who own the private OpenAI. This comes as AI cloud provider CoreWeave, which is currently private, is slated to go public. In fact, the IPO could get priced tonight. NVIDIA, by the way, owns 6%. We talked a lot about CoreWeave yesterday. It's a very important IPO for this market, in part for the IPO market in general, and then certainly given its centrality sort of into the theme of the market right now, data centers, which they don't own, by the way, but they have about 32 of them, and what they are able to do for their client base, namely the hyperscalers, when they do populate those data centers with all of their technology, namely the NVIDIA chips, of course, and the GPUs that they have access to. I raised a lot of the concerns yesterday, Jim, in a conversation you and I had amongst some investors that I've been talking to, or at least taking a look at this IPO. They'd hoped for a price perhaps as high as the let's call it the low 50s. I don't believe that will be the case any longer. No. I know there are others reporting on where it may or may not get priced. It's early. It's too early, and I'm not going to give numbers.
Right, it's not.
I think suffice to say, highly unlikely they're going to get where they would hope for originally in terms of the price talk. But that said, we got to wait and see, and we won't really know much until later in the day when you get closer. You know how this works in terms of people actually giving you a sense, and whether you got sort of some of your core investors who are willing to come in for a good amount and happy to step up to a price. But a lot of it comes back to this broader theme that I would raise with you, which is the lifespan of a GPU. And it not only applies to CoreWeave, which obviously has to every year spend an enormous amount on CapEx to buy the latest GPUs from NVIDIA, but it applies to all the hyperscalers and how they're actually depreciating the GPUs they bought last year, or 2 years ago, or 3 years ago, Jim, and whether they're appropriately depreciating them now, because some say the lifespan is only 3 years or 2 years.
See, I know them as 5-6 years. There's a CUDA software that sits on top of the stack. That's an NVIDIA product that makes it so that they have extended life. But I would think if you sat down with the CoreWeave people, they too would actually say, listen, we're not quite sure themselves. So it's not like they're saying, listen, it's 8 years, it's 3 years. We think it's 5 years, 6 years. I want to first of all congratulate you, because you were the first to bring this up.
Retail traders.
And it did impact, which you should. Oh, you're basically just raising points that should be raised, because we don't want people to get hurt. Because there is a seductive nature of the revenue growth here.
The revenue growth, the EBIT growth is very strong. Obviously, it's at the center of the growth trade, so to speak, in terms of what you want, right? I mean, it's all about the growth of AI, and that's what they're depending on.
And there's also
their access to power. By the way, 1.3 gigawatts of contracted power. But there are a lot of concerns here as well.
We've got the
I'm not
power.
going to necessarily go through them all again now, but there are a lot of concerns.
Right, and there's also Michael N. Trader, the fellow behind it, but they're New Jersey, Livingston guy, had been in the Bitcoin, had been in the crypto business, because of Ethereum. And that is something that people think is a taint. I think that these were always used by miners. That was something Colette Kress, the CFO, called out about 5 years ago.
How many minutes do I have? 9 minutes.
Don't forget, we don't know where the car.
Goodbye, Big Mouth. I do love you, Jim. I can listen to you over Jenny, but not first thing in the morning, because all you do is talk gibberish. Especially with this guy right here. Big liberal. Okay. So as we all know, yesterday was not my favorite day. We're at a head and shoulders support right now. Probably one of my worst I only know it myself. I feel like it was one of the worst days I ever had. Not just because I took that loss, but just because I don't know, just because I didn't. We had 2 great days, and I told myself I wasn't going to go in after it big, and I did. Because I had 2 wonderful days. I mean, 2 of the best days that I've had in probably a good couple of years. And that just don't happen. So usually when I have a shitty day, I have to rethink and just kind of. I practically forgot about what happened yesterday. I didn't even think about it all morning. I just concentrated to hurry up, get in here, and kick some ass. So we got a gap support on the SPY at 565, 567.77. We got the 3 sevens. And we have a yin yang, a triple top breakout with a gap. I think I'd love to see 565. And then see if that will probably create some kind of consolidation there. Independence Day, I guess, is what y'all said, coming on the 2nd. We've got a 25% car tariff going on. In 5 minutes, I better go get my drink ready. Get my water wah. Make sure you drink enough water. I just drink water and coffee and creamer. I haven't drunk soda pop, I think, in about 3 years. I had a taste of one last year and about threw up. I don't see how people can drink it. Okay. We'll see what happens on the watch list this morning. Tesla should be doing good. I'll be right back. Got 4 minutes. I gotta get this done. See if we consolidate yesterday's. I like to see a little pullback and then run up. Need my banana. I love bananas. Take care of my sweet tooth. And I got a mango I'm gonna eat today. I was tickled to death yesterday. Valerie Bertinelli put a heart on my post. At least I hope it was her. It had to be him. Only if she knew. I'd stop. I mean, I'd say, baby, let's do it. Let's get married. Got a couple million I'll spend on you. And here we go. We're off to the races. And we opened up red. Tesla's green, 11 cents out of 57. VIX is at 1866. Here comes Pride in the backstretch. Heartache on the inside. General Motors down 325. Good. It's way overbought. Apple at 33. We definitely got a little support here. SPY down $1.29. Pretty good sell-off already. Here, I don't even have my platforms up. Jim! Shit. La 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 la. We got a snake. We got a snake. We got some big long legs on them too. So the March 27th, that's today. Right about now. La 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 boom. La 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 boom. I don't want that one. No, I don't. Get it down. Come on and do it, baby. Remember, we got the bottom of that channel. And right now, Jimmy's looking at the 569s or the 568s. Calls at 124. Let me see where that support level is. I need to put an alert there. Okay, the 565 is what Jimmy wants. Now we're at 566. These are at 116. Get me a nice little scalp in first thing. Today's the 27th. I'm about ready to hit the support. Now that we still got a ways to go, but I might start at 55. Because I can't drive 55. $1.10. Okay, I got my first entry. We're at 120 now. I got 110. Jimmy's wondering if they're looking at the gap. $1.
A trade over the last 3 months or 4 months. But we do have a big inflection point on Monday that I want to put on the viewers' radar. On Monday for the current contract that's going to be out there right now, which is going to be the April contract, Monday is first notice day. So that day that short sellers or shorts that are within these futures contracts can submit a delivery of intent notice. Now, the reason why this is a big deal,
What's that
this is
mean?
actually one of the bigger reasons why we saw a run up basically December going into January. You saw this physical short selling and short covering event taking place where these dealers, major traders out there, the JP Morgans, Deutsche Banks, what have you, wanted the physical gold and wanted to be able to deliver that to their customers. And so that's why we have this massive physical transit between London, Europe, and the United States. And this contract that's going to have first notice day has enough liquidity, has enough open interest for that to continue. And that will be very key, because if it does, Oliver, that could advance prices to the upside once again. That can also put more pressure on GDP for the first quarter, as well as potentially even the second quarter. And that's not really what you want to see. So gold is going to be at a make or break moment here. I believe on Monday we'll start getting those delivery new intent, and if the delivery appetite is still very large and that physical demand is still very large, gold can move a lot higher here.
Boy, I get trader regret with gold more than anything else. Literally yesterday I had a call spread
Oh, I bet
sitting in
gold
my
went up.
platform and I didn't fire it, and breaking out. It's just gold is like, just anytime you have doubts, they never come true for gold. It's just one of the most resilient things. To your point, it's been risk on, it's been risk off. So pretty good.
Boeing's
chart
up
there, but
today.
keep an eye on. Thanks, KG.
Baidu.
Appreciate it very much. Gold taking a nice bid here today. Diane King Hall joins us to look at some stock news. As far as jobs go in the economy, let's maybe talk about XYZ layoffs, aka Block, aka Square, Jack Dorsey's business.
Good deal.
Yeah, this is basically essentially news of nearly 1,000 jobs on the chopping block at Block. This accounts for about 8% of its workforce. This is the news first being reported by TechCrunch that they're making these job cuts here. A few different levels are being affected by these job cuts, and they're saying it's not because of AI, according to this notice sent by Jack Dorsey, not being replaced by AI, claiming it's not for financial reasons, although we know that they did not perform well on their last quarterly report, missing on adjusted EPS. But the layoff is 931 people. The first layer is who are being cut for what's called, quote, strategy reasons. The second group of people, that's the largest group of people, that's 460 people. They say it's for performance reason. So those are the individuals who have a below rating on their internal performance metrics, those KPIs that, a lot of companies stack up for employees that have to reach certain metrics. And the third level is managers. Those are being cut to basically flatten out their hierarchy to what they're being called now the inner core plus 4. Essentially, those are the direct
It's 4
reports
cents
to
off.
Dorsey, and then the levels of direct reports
We'll see if I'm right.
below that. So in other words, to flatten that out, so they're taking some of the managers out. That is a smaller segment of that group. That's fewer than 100 of those layoffs. Again, according to that email, Dorsey denying that these reasons are replacements for with AI or financial reasons, although I feel like the financial reasons may be arguable given their last report.
Okay. Yeah, kind of a tough spot. A lot of competition in this area, though. Probably some things that can be AI'd away. But the market selling it off, I think maybe shows some degree of surprise, given this stock has already been quite weak. Yeah, closer to the low end.
Yeah.
It's true, and especially when you look at how you usually see the performance of a stock after
There it
drop,
is.
you usually see it tick higher because it's seen as
Oftentimes, yeah.
kind of a more efficient
you're seeing some optimization, to use the kind of terminology that often accompanies that, and that is certainly not the reaction today.
Okay. Yeah, good point. Only a couple bucks off multi-year lows, so XYZ looking pretty rough right now. Let's talk some
Going
AI.
in big right here at 80
Headlines
cents.
here. Alibaba, which is up this morning, has got an open source AI model. Seems like stock likes that.
Yeah, they do like that, and it just goes to show that the growth and developments that we're seeing in China are certainly, investors are seeing that as positive developments. So Alibaba is launching this new AI model, the latest iteration. This is Qwen 2.5, Omni 7B. This is a multimodal LLM, so it would process text, images, audio, videos, what we know of the different models like this, say for instance like a OpenAI's ChatGPT model. It would generate real-time text, natural speech responses. It will also have these enhanced interaction capabilities. It's supposed to be fast, just like we expect any of these models to be. It is an open model. The other thing that was interesting about that, it's being positioned as this solution for developing AI agents, and we've heard a lot more conversation about the agentic model for AI and then intelligent voice assistant. So that's another piece of the latest development with regard to this model. It would also be, open for deployment on not just, when we're looking, for instance, on our laptops or desktops, but mobile devices as well. And that's, kind of where we want to see this.
Cam Green,
in terms of the use case,
breakout.
not to be able to just kind of walk around with this.
They got 30 contracts at 92 cents. So I'm gonna.
Shares up more than 1%.
All right. Chinese stocks on the day up 0.5%, so it does look like they're giving Baba some extra love for this. Hey, lastly, here at home, not exactly as encouraging of AI news. Nvidia down 2% this morning. But I don't know, is a shortage a good or bad problem? I guess it's...
I know, that's the thing I was thinking with regard to this. I mean, you have some new news around NVIDIA today, and shares right now down 2%. So
NVIDIA.
That slide that we saw yesterday. I do wonder if some of this is technical in nature. The latest is according to a Reuters report, China's H3C is warning of an NVIDIA AI chip shortage there. They're one of the largest server makers over there. They're not the largest, but one of the top server makers.
I'm gonna sell it right here.
They're seeing that they may have a shortage of NVIDIA's H20 chip. That's not the highest level of chips or AI processors because of the export controls that the U.S. has enacted on chips to China. And so the H20 supply chain is facing some challenges. They think they're flagging that their current inventory levels are basically nearly done. A lot of, we have some geopolitical tension that is, kind of affecting the trade and supply chain. They're adding to this, potential shortage. New shipments were supposed to come in by mid-April of this year, so there is some time, but clearly that, timeline is running down.
Get the rest of them.
Uncertainties about, are the raw materials going to be available for these chips, especially in the face of rising export controls. We had, new countries added to the export list yesterday. One of those companies affected is, a company that NVIDIA supplies chips to. At the same time, China only accounts for 13% of revenue from NVIDIA. So it seems to be hit more, it seems to be hit more negatively on this news. And some of it just may be
Come on, give it to me.
That we've seen.
I want 104.
This year. And also, by the way, keep in mind we do have the AI diffusion rule coming up in front of us, in the sense that although the rule was put into effect, enforcement of that doesn't come till May. I know we still have to worry about tariffs April 2nd, but then keep in mind May is in front of that, and that could impact NVIDIA as well. But again, the context is there is a portion of revenue that NVIDIA draws from China, but it is 13%. And, I think we have to kind of keep that in mind in the context of this conversation.
All right. Yeah, well, if I had to choose, I'd obviously rather own NVIDIA this morning than AMD, with the bearish note there really hitting that stock pretty hard, down 4%.
AMD?
So shortage, a better problem to have than no traction, which is what the analysts said about AMD's role in AI.
Yep.
So thank you, Diane, appreciate that.
You got it.
All right, and China also still a pretty small portion of NVIDIA's earnings there too. When we come back, let's get ready for Lululemon earnings. Could be a fun one.
Lulu
Consumer confidence is
earnings.
low, but spending has been pretty resilient. Stock has a lot of volatility in the last year, though, so it should be a fun trade.
I sold most of them at 104. So I'm trying to see if I can get that or break out.
Empower your portfolio with the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
I'll take 102. There it is, 104. Give it to me.
Opportunities don't stop when the market day ends.
There we go.
Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Say goodbye. I'm out. 104 and 112. I had 30 contracts. And that's a good way to start the day off. Ah, damn! 124. Shit. Were y'all scared? That sucks. Doom. Doom. I don't like the blue. There we go. I don't know what that was all about. Shit. That'd have been a good payday. 133. That'd been a grand. That'd have been
Whether
more
you're
than
an
a grand. That'd been
experienced
$1,200.
or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader?
It's all right.
Our active trading webcasts
I'm
are
okay with
designed
that.
to help you develop a deeper understanding of technical analysis, options, futures,
Jeez.
and more.
Right to the
Best
top of the
you
channel.
can ask
Let me talk about
questions
this.
by chatting directly with.
So it's kind of loud anyway. So I called out 165 support, and I jumped in a little too soon. Right when it hit a little bit before it hit my alert. And I added on at $1 and at 80 cents, and I really loaded up. I added 20 at 80 and 10. I had 5 and 5, so I had 30 with an average of 92, actually 93, 92.5. And I sold them at 104 and 112. Sold the lot of them at 112 and sold 10 at 104. So I could have made 50 cents times 30. I'd made $1,500 on that trade. Had an average of 92 cents. But I'm glad we stopped at the 565. I called that before the market opened. I said 565, baby. I got it back. Oh. Tesla's at the first linear channel. Just a little bit below it. We bounced off of it twice. You got to break that number right there, that double top. Actually, probably a little bit lower. 278 for sure. We had a bounce on NVIDIA. I'm happy with what I made. Almost 520 bucks. Ready to go to the beach. We hit the first resistance at 5,769 is my first resistance on the SPX, and we almost nailed support. I had 5,666. So within $4. I'm gonna go make my coffee real fast and get started on it.
EPS, and then I think, but that's like I said, they guided in January. They raised their guidance, which was just 2 weeks before the quarter's done. So I would expect
Baba's up,
this
double top,
quarter to be
Baba.
Right in line with estimates.
We got double top on
I
K-Web.
think the big surprise will be full year.
Double top on
40
JD.
is what estimates are expecting for 2025. We think they could probably do a little bit better than that. I think that's probably a little bit low. That represents basically 7% growth. And I think
So I practically made back my loss that I did yesterday on that $2,000. So I'm even, not even, I'm back to a nice figure for the week. Don't want us to take it easy here. I think we went down too much yesterday. Usually when you have a day like that, and then you had to pull back today. So now we just hit the 200. So we'll see what happens here. SMA, we could pull back. We're going to find out real fast. Dang, each calls are at 184? Fuck. That'd been 24. Oh my God. 190? I got 112. Oh. That's $3,000 right there. I don't think I'd go buying puts yet. We are at a resistance. That hurts. Some of them others had pulled back hard. The 570s from $1 to $1.17. Go get my coffee made and I'll be back. So I made another 170 there. See if the 200 stays as support.
25% decline and then double that could put us down to 51.50, and that puts us back to August of last year in terms of price action. So that's something you got to be mindful of. It's certainly a possibility. So therefore, leverage longs still need to be very wary of this potential.
All right. Well said there. Yeah, leverage longs can always have to be aware of any potential leveraged anything. Right. Pending home sales were okay, close in line. Yeah. Not a bad number. Basically, the economic data for housing has actually surprised a little bit higher in the past week and a half, and that's encouraging. Even though we saw KB Home get hit on earnings, it just seems like the bear case around the economy is just not strong when you have Powell also ready to cut, it seems like. So that was really important when we got the Fed to help us form that bottom in the stock market, because it was their message that they're going to be willing to cut this year if they need to. And I think that still has been an important part of this stability we've found with higher yields and a firm dollar that fits with the economic data, which kind of comes back to our conversation this morning about bonds being down and the dollar being firm last week.
Yeah, look, I'm just going to flat out say this. I think if you consider, the nature of tariffs, OJ, the United States has not been robbed. I mean, we essentially import goods and we pay for them in currency. Yeah. To me, that's a great deal. We've been doing this for decades. I love that deal, George. I hate when people say that we should change that deal. We don't want to be an exporter. To me, it's a fantastic deal.
It's like getting out of the food chain, You we don't have the power.
We don't have.
Let me give you these pieces of paper, right, and give me all your stuff.
It's basic. Now it's just a digital entry to make these payments. We don't have to sell them gold or exchange gold for. So the bottom line is the United States is a serial runner of trade deficits, and we end up that's a trade current account deficit, but we run capital account surpluses, and so. We get the money back by exchanging bonds for that money back, and we just continue that process. So at the end of the day, that seems like a good deal to me. It's been working well since the early 80s, effectively with running deficits and trade deficits and fiscal deficits. So for what it's worth, that's just my view of what's happening. So if we can get back to normalcy and let the market operate, especially in trade, and of course. All the challenges with business interruption and decision making, that just changes the planning horizon for businesses, particularly now the automakers. Parts are so complex in terms of integration.
Came back to support.
It just creates a big problem. So I do think this market wants to go higher. That's just my view, and I think
you're right too, George.
Around that, and you just stick with the math versus the politics.
We just had a good day yesterday.
Says that restrictions on trade, tariffs are create a negative externality for all parties, and that's just the math.
Okay. If it makes it a negative for all parties, though, then it's almost like a neutral in the long term. It just seems like it changed, some of the. Yeah, but I hear you. George, what are you watching today? Do you want to see Apple go positive? Do you want to see breadth? What is kind of your secret bull sauce that you think would be underneath the surface? Because I'm trying to get as many crumbs as I can.
Look, okay, so, aside from the policy issues, I think right now NVIDIA's got some problems, just the technical pattern. So that concerns me. So that feeds in that narrative of this AI bubble. And so that's something we have to really contend with as well. I think that possibly looking at Tesla, now Tesla's moving higher. Not just recently, today it's moving higher because their U.S. sales are produced in the United States, so they're not affected by the tariffs like some of the other international players like BMW and of course Toyota. But I think that's a positive sign, seeing Tesla move higher. And to me, that says that the market is picking up that this whole Doge fiscal contraction narrative is just all bark no bite. So I'm looking at that as a leading indicator right now, and I'm sure a lot of folks are, as very positive because the news and all the terrorism aspects of their business was so bad. Now it's starting to trend back to the upside. So I'm looking at that as a leading indicator, not just because.
Spy, we got the VWAP.
cut of spending, that is actually going to drain bank reserves, because all government spending doesn't just fly in outer space. It actually ends up in bank reserves. So that's also what I think is happening from the Fed's projection for GDP, because government spending adds to GDP. It's the math. And so with that cut expected, it was already going to be cut because of interest on the debt. As interest on the debt comes down because of interest rates coming down, that's actually going to be less accretive to GDP from the government spending side of the equation. So as the government spending comes down, we have to make up for it with monetary policy. And right now, with the Fed trying to lower rates because they have the inflation problem, we're at this policy pivot. It's a very sensitive pivot right now, contraction to fiscal, expansion to monetary. And that is essentially what I think the market is really looking for, some footing on a policy clarity. And I think that once we get it, this market wants to go higher, but it doesn't mean it can't go lower from here, make a new low and then carve out a bottom.
Well, the monetary side, we've got, that's, back to the Powell part, we've got that one, it seems locked in. So, now we just kind of got to navigate the weird fiscal stuff going on. And by the way, we were talking yesterday with Mike Townsend as well from the DC team, the policy team at Schwab, and he points out that the tax bill is a pretty big deal too. That's getting wrapped up in the debt ceiling as well. So there's another policy thing that could get ironed out in the next couple of weeks. We got to jump, George. Thanks. Appreciate the big picture look there at where we're at in the combination of monetary fiscal policy. And Caroline Woods joining us to zoom back in on Tesla. Though there is a price target cut this morning, shares don't seem to mind so far, Caroline.
Hey there, Oliver. Yes, Tesla shares higher, as you said, despite the overall market weakness that we've been seeing. Could potentially be policy premium. We're also seeing shares of names like Rivian and Lucid higher today. But also notable that it's higher despite some more negative headlines surrounding Tesla, and that includes a price target cut from a bear. So this was someone that was already bearish on the name, but getting a little more negative on the name. So an analyst over at HSBC kept a reduced rating, but slashed his price target to $130 a share from $165. So as you can see here, it's currently trading around 277 plus right now. So expects shares to be cut in more than half based on this new price target, because he says there are no quick fixes to Tesla's problems, saying delays have been a constant theme at Tesla, whereas the competitive threats continue to grow. We see a longer and less certain timeline than the current valuation reflects. So some of those problems that he says don't require or that don't have quick fixes, it's not just a brand issue. He says the seeds for the current sales weakness predate the recent brand issues, but points to Tesla's aging products with limited driving assistance technology that have pressured the company in China. Points to the fact that it has struggled with European fleet buyers, and says the analyst there says that 60% of the new car market is in Europe. Tesla's robo-taxi opportunity is too far away in the future. Highlights a report from earlier in March indicating progress on Tesla's FSD technology is slow or stagnating. It says Tesla basically avoids many of the industry norms, like holding list prices firm, making regular facelifts and model renewals, and says to date has seen only minimal impact, but tougher competition and brand erosion see the impact of its strategy hurt more. So expecting
Don't be bashing our Tesla.
Future, quite a different tone than we heard from, of course, notable bull Dan Ives over at Wedbush last night. He was out with a note basically saying Tesla's future is in many ways the brightest it's ever been in their view, given the autonomous opportunity, FSD, robotics, and many other technology innovations now on the
I'm glad she said that.
Even Dan Ives has said that there could still be some difficult moments ahead, and actually points to the fact that next week they expect a very soft rip the Band-Aid off Q1 delivery number to hit on April 2nd in the morning. Could be in the 355 to 360,000 range, which would be down 7% year over year. So, tougher times ahead. He's still in the outperform 550 camp, so a much different tone. But it doesn't sound like necessarily smooth sailing ahead for Tesla. Now it's up 3% almost today, up 12.5% this week. But take a look, still down 5% this month, 30% year to date, and more than 40% away from.
How are you doing today,
still
punk?
A long ways to go, but there's a winner amongst a bunch of losers today.
Well, might be getting more winners.
You get your winning trade going? What are you talking about? What level? At 57.46. Have you ever used a tick time frame on them? Got to break 57.58 here. 75. Spies back at resistance. I'm gonna go get my coffee made. I still ain't done it yet. Then I'll be right back. I got 2 trades out of the way.
In many ways, I respect that they're trying to figure out the fair value of these stocks, but it's also like, when you're in the wrong direction for so long, and then you cut your price target and it's still, $110 above it. It's like, what are you doing?
Well, it's been the story for Tesla its entire lifetime.
Correct. You're absolutely correct.
And it's always been a high valuation stock. It's always been suspiciously high valuation for a car company. So it's been.
It's not a car company.
It's lived up to the expectations.
Bald eagle.
We'll see how that plays out. But just from a charting perspective, a price perspective, I kind of like this base here recently. I kind of am hopeful that we can continue.
They keep calling it a car company.
I'd love to see the market kind of, as usual, have a little hiccup in March and then return to the bull pattern in April. That's been the historical pattern, and I'm hopeful that it can happen again. A week ago, we were worried that tariffs were going to be all-encompassing and really hurting everything. Start of the week, market really rallied when we learned that the tariffs were going to be a little more narrow. This morning, we're learning where that narrow tariff is, right on the car companies. So maybe the market can get past these tariffs soon. I'm not certain, jobs data is going to be critical for me. But that aside, for Tesla,
SPX, baby.
Here, 220. I think maybe 250 is where it found some support. That's an area where I'd want to get back in. I'd love to buy it. I will sell that put, but the 200-day moving average, Oliver, is at 285. I think if it passes there, it's got room to run to the upside. So I'm just going to be looking at buying a call spread, selling a put, maybe a stock replacement strategy, Oliver, where I can get upside exposure if it does raise to the upside, but just kind of be there ready to buy if it pulls back, and a very small premium to collect here while I'm waiting.
All right. That's a fun idea to sell the put while you buy the call vertical, so that gives you a little extra firepower to it.
Yeah, it's definitely a bullish spread, but it's kind of neutral to the short term. But if we do get that upside run, I want to be participating in it.
Yeah,
but
I like
at
that.
the same.
It's got a little bit more linearity to it than just a call vertical where you're just getting straight capped out.
Yeah, it's very similar to owning the stock, except, Oliver, I'm not going to lose any money all the way down until 250. So it's a stock replacement strategy. I'd rather be in this option.
I'm going to set an alert here at the double bottom.
Stock. For me, if I'm owning stock, I can do it simply by buying, keep the stock, buy the 285 put with selling the 250 put, and then selling that upside call. So it's the same strategy, just synthetically doing it that way if I am long the stock. Just allows me less risk, just kind of waiting here, biding my time until the end of April. Let's kind of see what really happens here in April. Are we going to get more downside? By the way, Tesla just seeming kind of range bound here. If it does go down, that's where I'd want to get back in. And of course, if it does break out of that range, I'd love to see that upside.
Okay. I think that trade makes sense, considering the outperformance to its peers, to the market. Basically a way to express a bullish market view at this point, with Tesla reclaiming that high beta leader role.
Yeah, and by the way, yeah, I think at some point we're going to need these leaderships, these momentum stocks from 2024 to start kicking up again. I think we might just have to wait. We've seen some consolidation in the AI basket. At some point, that's going to bottom. When that does, I think the market will turn around with it. I'm not sure it'll be April. I'm not sure it'll be May. This is a good trade to just sit here and wait, ready to buy it if it goes lower, and just having that ammunition there. If the market does choose April as the month where it's going to turn around, I'm there ready to buy it.
Okay. Thank you very much, Turkey Game.
Thanks for having me.
Rational trade from the Rational Equity Armor Fund portfolio.
Rational.
Let's talk another one when we come back. Maybe going the other way a little bit, but at a different part of the Mag 7. Apple revisiting the short kicks. Coming up, Tony Zhang next.
We'll be right back.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more, all crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Let's stick with the Mag 7 category, but shift to Apple. Tony Zhang joins us to talk some trading. He's the chief strategist at Options Play. Tony, thanks for being here this morning. Thanks for hanging on while we went through that last trade. So we got the bullish Tesla trade in. You got a bearish Apple trade, so we got something for everyone here. Take me through it.
We're currently in an environment where Apple simply just continues to face multiple headwinds right now. I mean, we really have to start off with the fact that, iPhone 16 sales overall have been somewhat underwhelming. Every single data point that we seem to get every single month with regards to iPhone 16 sales continue to kind of show a slowdown in terms of the upgrade cycle for the iPhone, which is meant to be the primary driver of revenue for Apple. And, more importantly, I think the fact that Apple has essentially staked their entire future in augmented reality. At the moment, they're not a leader in that particular space in either the software or the hardware side of things. So I think from that perspective, we're really talking about, current concerns around the product cycle that is concerning, and then the future that looks quite uncertain. And then you put into the fact that they've really fumbled the launch of augmented reality, or I'm sorry, of AI for Apple. This is meant to be the primary driver of the next upgrade cycle for the iPhone 16, and now it's looking like it's not even going to potentially be a driver of sales for the iPhone 17. So, when you're in an environment where there's clearly a slowdown in consumer demand, you look at the macro environment where consumer sentiment is at multi-year lows, we're seeing a meaningful slowdown in actual consumer spending that we've been talking about the risks of for the past couple of years. This is really the first time we've seen a meaningful decline in consumer spending in broad categories. I think when you have shares trading near a major resistance level around this 220, 225 level, and it's trading at a pretty significant premium from a valuation perspective relative to the market, the timing simply just favors adding some bearish exposure here. You know, trading at 30 times forward earnings, it's hard to wrap your hands around those types of valuations when growth is not expected to be any faster than the average S&P 500 stock. And, you know, net margins of 24% is great, but it's not enough to justify that 50% premium in terms of valuations relative to the S&P 500. So I think right now,
every time somebody says Nvidia is too expensive, I'm like, why are we not talking about Apple? Apple's way more expensive.
Exactly, and it doesn't have
I
the growth
agree.
trajectory of Nvidia. It's
There's a lot of stocks that are very expensive right now
so
still.
For those reasons, I think Nvidia actually represents
The
far
arms
better
down at the
value
double bottom.
versus- and Apple actually represents one of the most overvalued stocks within the Mag 7. So that's why I think it makes sense from a timing perspective to actually take a look at some bearish exposure here for Apple.
Okay, how do you want to do it? You want to buy downside?
Yeah, I think right now, you know, we see, you know, with the VIX trading around that 18 and a half level, it really speaks to, I feel like markets are actually underpricing some of the downside risks that we're seeing here in the market. So I actually think right now it makes a lot of sense to be buying convexity, buying options. So I'm going out to the May expiration. I'm looking at buying the 220, 200 put vertical here. Earlier today, you can spend a little over $5.25 for that.
Tesla new high.
Which will give you just nearly a 3-to-1 risk to reward ratio of Apple's below my $200
Broke the triple
price
top.
target here by that May expiration. And that's the type of risk to reward ratio that I like in this type of market environment where it seems like implied volatility has come down quite a bit here over the last couple of weeks, and we want to take advantage of that as option buyers if you feel that the rally here is actually an opportunity to start adding some bearish exposure.
Okay. So the vertical, and you're doing it out to May. So you're giving yourself a little bit of time here. And I guess that also kind of reflects, you know, a couple different possible market outcomes. Because if you're like, when we're talking to Tesla, like you're trading Tesla right now, you're trading beta to the market basically. Whereas Apple has not traded like that. Apple has done unique things in different environments. It was kind of a safety trade for a little bit on the way down. And then there was like 2 days where it just crashed.
Yeah, it's exactly right. It's a little bit of a different, certainly very different beast from Tesla here. But I think that, you know, at the moment, the investors are still being a little cautious right now in terms of their take on the slowdown with consumer spending. And I think they're still seeing Apple as a bit of a safety play here. But I think that's really starting to crumble a little bit. We've seen the multiple on Apple come in a little bit, and I think it needs to come in a little bit more.
I have not understood the Apple as a safety trade in a world where they are more expensive than Nvidia. So I'm with you on that. Thanks, Tony. All right, a rational trade as well. Thank
Tesla
you,
just hit my resistance.
Looking at some downside in Apple there.
Tesla just hit my resistance. This is the one I called in the video, I think. The daily we're definitely below support, the 200 right here at 488, and then we got that
So I'm liking this setup too. We got like on the weekly, one that's the only one that's bearish right now, right at 57.80. And we got to break the 200 SMA. So that 247.20 means a lot this coming week. And if we can break that, we should be able to get this up back up to the 50. Now I've had like 252 for a hard resistance on this stock, and we'll show you why here in a second. With a solid support no lower than that 230 right now on Tesla, and that'll keep this stock bullish. I love Tesla. So see that 267 hitting the 21? We got to break the 9. See how the 9 is respecting. So if we can bounce above that 9, we should be able to run this all the way up to the 21 and probably take some profit off the table and let it consolidate in this channel right here. Long will be 280. If something really happens good, 283.50.
Boom, baby.
For a hard resistance, and that's at the 200 SMA on the daily. Now you take it to the hour, and we did break the 200 EMA, which means that's very bullish. And that's where I'd want to put my support level off the 21, right there on the 1 hour time frame, and maintain that support at 243.12, and this stock stays bullish. Right now we've got an underlying resistance level a little bit lower than that 200 on the 1 hour, and we've got a hard resistance to break right around the 250. So that's why I'm saying about using different time frames. You can see we hit resistance, we hit resistance, we hit resistance, we hit resistance. So maybe the 5th time we come up here, we can break that and start gaining some.
We didn't even pull.
Or we just pull back and take it around 243, and it keeps it bullish.
Yeah, we didn't pull back, I don't think, that 240 area.
Apple's another one that's
I'm going to set my new alert back at the triple top. See what happens next. QQQ's at that resistance that I called out yesterday. What did I say? That was the 50 SMA on the daily or the weekly? It had to have been the weekly or the monthly. That's right to the penny. It might have been the monthly. No, not the monthly. Tesla's pretty bullish. The guy comes out and gives a bearish call on it. Dan Ives says 550 long with trouble. And it's cheap right now. I've secured my profits, so I'm just going to kind of kick back and watch here and get ready to have lunch. And see if it gives me another opportunity. Not a bad day.
The valuation is completely way out of whack. It was trading like a technology company, but you have seen a nice little uptrend over the last year. Did top out at around that 105 level. You actually saw a little bit of a sign of that, Oliver, with that bearish divergence that took place. And until we went below that overbought level on that RSI, that's exactly what aligned with this move to the downside for Walmart. Now, you did see us going into the oversold level. Now we're making higher highs, higher lows for the most part, trying to coil up and break out to the upside. We are flagging here, and we're getting fairly close to that 200-day moving average. Keep your eye out on that one. That's going to be a major area of support for this name. And it also has been able to fill some of the gaps that we had on the upside. Now, the only other gap that we have that has not filled yet, keep your eye out on, is between $68 and around $72. Now, I'm not saying that we're going to get there, but if we were to fill another gap, that's the next big one to try to fill here. Nice little flag, trying to consolidate, hopefully try to break higher here. There's an upside gap between around $89, $90 to around $92. That could also be filled. 20-day moving average is going to be your first area of support, sitting around 88 and a half or so here. So this chart, once again, looks bullish. You have a situation where it just was very stretched when it came to the multiples. You started seeing a little bit of exhaustion when it came to the price action, which shows within that MACD as well as that RSI. And now, if you look at the bottom, that MACD, if that crosses, especially it being this oversold, that's very bullish for this name. And staples as a whole are catching a little bit of attention here in today's session. And I know there's a lot of hate on Dollar Tree, but Dollar Tree's up around 8% today. So go visit that Dollar Tree in the city. I think that's actually a little bit more exciting. Get the adrenaline up a little.
I mean, hey, you walk in there with a $20 bill, you are king in the casino, right? I mean, in theory, but it depends which one you go to. Dollar Tree, usually it's always $1. Family Dollar's not.
No, now it's like $1.50. It's not even a true dollar anymore.
Right.
Inflation.
So maybe the crown sits a little bit lower with the $20 bill.
Yeah.
All right, thanks, guys. Good eyes on Dollar Tree, by the way. Wow, up 8%. So Walmart chart looking pretty good. Seems like it's hard to beat Walmart. Up 80 bips in the session today. We'll see if the Staples bid fades at all if the market firms up anymore, because we crossed positive and we're holding it. Now the question is if we can extend gains. Tesla says buy, because that thing is now $14. A Tesla, 5%.
Buys retesting support here. We'll see if it wants to stay bullish or not. I'm gonna move it above the 200 and above the VWAP. Right there on top of that wick. We're at the top of the head and shoulders on the SPY. Okay, 570s. I sold my 568s. Let me go into the next day. It's getting about that time.
Almost. That's its high from earlier in the week. So if stocks get back to their high in the earlier week, that would be above 5,800. You think that's possible?
I do. I think in the near term, you definitely are having some of the risk appetite come back into the market. You know, the sectors that should be performing well in a rebound, they are the risk-on ones, you know, discretionary technology. The defensives aren't really leading the rebound here. I do think from a technical perspective, short term, sure, can be looked at a little bit constructive if we can get back above the 200-day moving average there in orange. But from a medium and longer term perspective, the markets will continue to swim against the technical and fundamental current for some time. I don't think, you know, we had any senses or emotions of capitulation throughout the route that we saw, which is fairly surprising that a 10% drawdown didn't produce any of the typical capitulation metrics. The only thing that did register into that
Confidence
pretty
capitulated.
oversold area. Say that?
Confidence capitulated.
A little bit. When you look at the AAII, the investor sentiment, which is more retail focused, bears are still above 50%. That's historically elevated. National Association of Active Investment Managers, their exposure index is at the lowest in over a year. So there's some senses of that, but breadth, volume, selling pressures just weren't there.
Yeah. All right. So short-term daily, you think weak highs are possible here, but could we have like a 100-point move today?
Today, I think that would be pretty tough. There's no real catalyst. Then again,
like the catalyst is bears aren't
news
breaking.
flow that comes out, you could get tariff-related news. I think that the formidable resistance in the S&P will be around 5,900. Through price or time, we could grind up into those 50 and 100-day moving averages. I do think the technical picture is pressured and will be into the second quarter.
Okay. Sorry, we lost for a second there. But message received, I think it's music to bulls' ears that the tough resistance is at 5,900. Wow, 180 points above, Let's go back and test it then. That's kind of what I'm thinking, Caroline, after yesterday. Bears should feel pretty empowered because they erased Monday's rally. And so today, with it bending higher right now, I think that's pretty impressive because this is right now is a totally even race for the week.
Yeah, it's the tug of war, I guess, is continuing. If you take a look, the major averages all in positive territory, obviously for the week right now, just not really getting that tech participation. Once again today, we did see the Mag 7 turn positive, but now I'm seeing Alphabet. Well, NVIDIA was always in the red, but now Microsoft joining in the red as well. So basically half in the red. No participation from the chip stocks overall, or the AI trade either. I mean, the only names higher in that space, and just barely, Qualcomm, Adobe, but so certainly not seeing any strength there. It's Tesla, of course,
Apple has
leading the
new
S&P
high.
500 higher, as we talked about. Dollar Tree also leading the S&P 500 higher once again. And
Tesla
sort
new
of
high.
drew some conclusions from that yesterday, but seems like investors really just trying to understand these new 25% auto tariffs on all cars not made in the U.S. Is it the overall car? Is it the parts? Obviously, with the GM, Ford taking parts from Mexico, they're under quite a bit of pressure today. Stellantis under a lot of pressure today as well. Tesla assembles and produces the cars here in the green. We're seeing strength in Rivian and Lucid today as well. So, you know, I was talking about a note from Dan Ives on Tesla. He also was out with a note about those tariffs a bit earlier today, and he basically says that ultimately he thinks it's going to be on the finished cars, but said if...
So on SPY, I called that 565 because if you look at the hour time frame, it's what you call a gap. See this gap right in here? In the bottom of that gap was support, and it stayed above the resistance level right here, this triple top. If you draw that line down, so that had double confirmation that that gap should have held. And then just now, and we just now hit the 63 on that 1 hour time frame. So on the 1 minute, you see this resistance level up in here? This was the old resistance. So once we broke it, it came back and retouched that resistance level. Now we got a new high. So they like to retest the old resistance. A lot of times stocks do. Did you see that, Francisca? Yes. The video was a bargain at 110. the 570s from $1 or at 173 now. La 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 la. It's now lunchtime.
The Jefferies note summarized downgrading shares to hold. They said an AMD has now considerable ground to really cover before their products are complete. They previously had a buy rating, which is why I think there's a bit more attention paid to this note. But they said NVIDIA's chips have a significant performance advantage now over that of AMD's, and this gap should really further widen as we see NVIDIA's upcoming product cycles and a sign of AMD's limited traction now into AI. So they also highlighted that even though we've seen a slump, we've already seen this pre-pricing to the downside in AMD shares, that their feeling is the street estimates still remain too high. They see more downside risk to upside potential near term. And in the most recent results, we've also actually heard a lot of this sentiment echoed by AMD. They gave a pretty disappointing outlook for their data center business recently, also showing signs of how the business is struggling to catch up to NVIDIA. We also have heard now 8 different firms, at least over the last several months, reduce their rating or their price target on AMD. Some of these include HSBC, Melius. Those analysts specifically have actually also cited the
Damn alarms are just going off.
So I think this is fair to say right now, when you look at the worldwide server GPU market, NVIDIA has 90%. AMD has 10% of that market share, so they are definitely, I mean, trying to recapture lost market share, but it's not even close as far as competition. And seemingly this is definitely the conviction and the feeling right now of the sell side, and Jefferies today with the latest update on that.
And if we took a chart and put it over NVIDIA over a long period of time, I mean, someone told me today how they bought NVIDIA during COVID. And I said, good for you. I mean, you know, what a great purchase that was. I mean, if you looked at 1 year AMD even now, what a chart. It's just not NVIDIA, even though we're going to be talking later about NVIDIA and China and concerns about chip shortage. I mean, where does AMD really fit in the competition against NVIDIA, right? You said analysts are cutting back.
Yeah, and I think that's right now everyone's trying to find the next NVIDIA, because with the pullback, I think anytime there's opportunities, you're looking for what's going to be the type of stock that someone bought during the pandemic that made, I mean, such incredible gains over the last several years. That has not been AMD. I think that a lot of speculation has been more close to like your Oracle's, Broadcoms, but I think in this environment, it's very difficult to guess what could be that like 3, 4, 5 times X is a really performer, which has not been AMD. But I think this only illustrates more and more that it's not really going to be a 2-horse race or even maybe a 3-horse race. It's still going to be NVIDIA and everyone else fighting for that remaining market share, Nicole.
All right, Jenny Horn, great to see you, markets correspondent. Thank you. A good look there at AMD at 107.10.
Get ready to squeeze again.
We'll be right back. The Dow right now is up 19.
Spy. We're going to see if we're going to break here. I'm going to go get my soup.
He's Alex Coffee. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
Where are you going?
Schwab.
Schwab.
A modern approach to wealth management.
Trading at Schwab is powered by Ameritrade, bringing you futures and Forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were
Dad.
He really started with nothing. He worked hard, and after he passed away,
Okay, back to resistance again. No resistance. This is the second approach. The 570's dropped about 40 cents there. It's a lotto. There's a 1 minute scout. Tweezer bottom was my entry. Then a double top was my exit. After 3 black crows. Right now I'm eating. Oh, this is a spicy one. This is the one I put red pepper in. I didn't like that one too much. I've tried to follow this girl's recipe. I'll never put red peppers in this again. That's got to be a month old. I'm going to raise my support above the 200.
Wait for that 200 to hit again and go big again. On the SPY. Close to the VWAP. We're slowing down in volume. RFK wants to shake up the health department and cut 10,000 jobs. I'm good with that. Liberals might not like it. Well, it bounced off the old resistance, actually higher. We'll see if it wants to break again. We're now back at 172. If we break, I'll jump into 171s. These are lottos. I'm still playing lotto just because it's so strong.
really want to play a put, but I'm not going to do it. Double top. Ooh. That's not what I wanted. Bam, 570.81. So it went up $1 from my first exit. Well, my third exit. I'm at traded 5 trades so far today. Higher lows, 1, 2, 3, 4. But I'm going to count the 3. Ascending triangle.
An area of support. Now we have seen a little bit of a pullback, and we're trading once again right at $200, and we are also trading at that 200 period moving average, 200-day moving average. So we have some confluence right now. There is a bearish cross between the 20-day moving to the downside and the 200-day going to be above that. So that's something to be mindful of. But we are consolidating. We do have this wedge pattern that we kind of broke out to the upside on. We do have that MACD cross once again bullish, RSI bullish. Upside resistance, $220, the first one that I'm looking at. Next is going to be $230. And if we do break down to the downside, looking at 185.5 as your next area of support. So make a break for this name right now, but it's good that we're
back at support again.
Resistance as an area of support for right now.
571s are at 87.
All right. Thank you both so very much. Great big three today where we looked at Alphabet, Advanced Auto Parts, and Amazon. Joe Tegay and Kevin Green, thank you both for the big three. And now it's time to get some insights in the news shaping the markets. We welcome in Michael Pinto, President, Founder, Pinto Portfolio Strategies. Thank you for being here. Some of your thoughts of we had 3 days of gains, we pulled back, and are we trying to rally here today? People keep asking me.
571s at 87.
All over. I mean, what do you tell them?
Well, first of all, I'll tell them that the recession is not imminent. It's not, tomorrow or next week. But we have a very, very weak economy. Don't forget the bottom 4 quintiles of consumers have already been wiped out because of inflation. And the market is the most expensive, overvalued market in history.
True.
Statistics. If you look at total market cap of equities, that's a percentage of GDP.
I've been saying that for months.
Price to sales, if you look at negative equity risk premiums, it is the most concentrated and overvalued market in history. So it's very, very dangerous. So we have certain factors here that will send the market lower, in my opinion, over the course of this year.
Scalp these real fast.
Liquidity is drying up. If you look at the positive real Fed funds rate that we've had for well over a year, if you look at the reverse repo facility, which is now virtually dry, it's out of dry powder, the Treasury General account has been drawn down. And it was $800 billion, now it's just about $200 billion. So we're running out of stock market liquidity. The middle class has been wiped out.
God.
We have massive asset bubbles that are hanging on by their nails.
This guy's Mr. Happy.
I wouldn't be surprised if we had a significant market correction, if indeed we do get the recession, maybe 2 or 3 quarters from now.
And do you buy on those dips and such? Do when you have these pullbacks or a recession, is that going to be an opportunity going forward? You know,
Typically
because when you
recession-
look back to what 2008, you can look back to August 5th of last year. Those ended up being pretty good buying opportunities.
Well, I'll tell you, there's a huge difference now between all other times when the Fed came to the rescue. We have a huge problem with inflation. You know, inflation has been above the Fed's target for well over 2 years now, and by the Fed's own admission, 4 years, and by their own admission, it will be above the target for 6 years. So if we do get to 2% on the core PCE price deflator, it'll be
Okay, I'm going to take some profit here.
That'll be a north of the target. So we have a big problem with inflation. We also have an insolvent condition here in the United States. If you look at assets minus liabilities, it's an insolvent condition, unfunded liabilities included in that. And you're talking about...
He's speaking the truth, that the market is way overbought still.
$2 trillion deficits, $6 trillion deficits if we do have a recession, because that's where they usually go to. So you might have a huge problem in the bond market if we have another recession. And if the Fed comes to the usual playbook of, hey, let's go to ZIRP, zero interest rate policies, and let's...
There's 102.
Trillions of dollars, like we always do, to bail out asset bubbles that are collapsing, to bail out banks' assets. And then you say, well, what happens to the long end of the bond market, Nicole? Does the bond market
Out 102
respond favorably to such, profligate money printing and borrowing and spending? I don't think so.
So that trade was
what I'm trying to say is that,
870.
if you want to lose half of your money, the average recession market drops 37%. The last two were 50%. So, not including COVID. So look at 2000 recession, and you look at 2008, the global financial crisis. So if you want to lose half of your money and wait 5 years for it to double, to break even, that's okay. It's just not okay for me and my investors.
Right. So what do you tell investors now today? I mean, what should they do? Should they be selling? Should they be repositioning a portfolio?
So I'm an active money manager, and what we own right now is a tremendous amount of short-term treasuries. So you can get risk-free 4.25% on overnight T-bills. So it doesn't really pay to go way out on the yield curve yet. I intend on buying more treasuries on the long end as this recession becomes manifest. We also own the unloved, the Mag 7 stocks. Outside of those stocks, you can find a lot of bargains in low volatility stocks. They're actually up on the year, so we own a lot of those.
So that's my third scalp up here at the top. And Sue just made a point. See how it's kind of rounded? I want it to come down and hit these two support levels. I need to bring this one up a little bit. Got to keep it above that 200. We're at the 63 again. I don't know if I want to take another chance on it. This is a good spot. We're at 85. I guess I could. But hold to 63. Prepare ye in the name of the Lord. We got a double bottom here. I'm going to move them up to 570. Get ready. Randy. Okay, we could hit the 200. This was kind of set up early, but we'll see here. $0.98. Scalp number 4 from the top. Still a little risky, but I'm in it. Back to 98. Bears might start coming in here. Off with their heads. Well, the Fed can't do everything. There's the 200 right there. See how strong this is.
Is with us. Thank you, Billy, for being here. Great to see you. You were listening to our last guest. Were you agreeing or disagreeing with a lot of what he was saying? I mean, what's on your mind this morning?
Well, Nicole, after hearing him and all these other pundits who are really saying the sky is falling, my advice to everyone out there is take a breath and just chill a little bit, and let's think about exactly what is going on. Tariffs are going on imports. Did you realize that imports are only 14% of GDP? So we're not talking about a large chunk of GDP here. And
Very good.
Everything's about the autos. And
I'm with it. I'm with the Asian guy.
Auto purchases are only about 3 or 4% of total consumer expenditures. So again, we're not talking about a big ticket item. It's much less than what we spend on housing, which is like 33%, much less than we spend on food or healthcare. 16% for healthcare, food is like 13%. So we're not talking about big chunks of the economy right now. And I think the real source of excitement out there and concern for the market, and rightfully so, is what everyone's calling uncertainty. But it's not uncertainty about tariffs. It's uncertainty about whether President Trump is really going to be able to achieve the things that he promised, to reduce the size of government, reduce taxes, deregulate, and then more importantly, for the near term, get foreign investors to invest in the United States, produce more stuff here so that we don't have to import as much. So he's trying to restructure the U.S. economy in a very short period of time. And I think
And that could be a mistake.
Whether or not he's going to be able to do that. So there, I think we really need to get some perspective on things, just chill out a bit.
I understand. Are you concerned about a recession? Are you concerned about the end of the year sort of being a time where the Fed will have to rush in and, cut emergency style?
Yeah, Nicole, everyone's talking about recession because the Atlanta Fed, which I also keep my eye on because I think they're one of the best around at getting a handle on where the data are pointing to for current GDP, that minus 1.8 number. But they put out a notice saying, hey, look, because of all the weirdness with gold and how they are unable in their model to separate gold imports from the rest of imports, they said if you try to do that, their estimate for first quarter GDP is zero. So there isn't a recession really in the books right now, even with the Atlanta Fed.
Yeah, they're selling it now.
Why is it that the first quarter is weak? Because all this tariff talk has got people saying, hey, if I'm going to import stuff, I better import the stuff sooner rather than later. And so we have a surge of imports going on there right now in anticipation of future tariffs. So we have a mechanical weakening of GDP. If you look at what we call gross domestic expenditures, C plus I plus G, remember? Those numbers are hitting somewhere in the 2.5% range, which is well north of anything that's considered dangerous territory. So I don't think we are in a real slowdown right now. And insofar as there is a slowdown, it's in consumers. And your previous guest was very right to say 60% of consumers out there are really running hand to mouth. 80% of the consumption growth we've seen over the last several quarters has been financed by about 20% of the population, mainly like our viewers who have wealth in assets like stocks and real estate and pension funds. They're the ones who are able to draw down their savings and maintain a pretty strong level of consumption out there. But insofar as the aggregate consumption is concerned, it's still pumping away at about 2% or 2.5%. So it's really going in real terms at a fairly fast pace. It's outpacing the growth of income, and that's where I think the danger is. Income growth just isn't catching up with where consumption is.
Understood. At this point now, what do you tell investors who may see volatility in the markets because of the tariffs, who may be worried about recession? You make the point about the autos being a small part of what people spend in their household over 1 year. But the big picture is maybe some people are concerned overall. What do you tell those folks who are investing and probably invested in the stock market?
Oh, absolutely, and as I am. and I think one of the things that I'm trying to do is saying, do I really believe President Trump is going to be able to achieve his objectives? And if I have some uncertainty about that, then the profits that I am anticipating with the NVIDIAs of the world and the tech investments might actually be delayed more than was previously priced. So we are seeing the drawdown in markets right now and repricing of when these future profits are going to show up. But so far, if you have any kind of confidence that we are going to be able to achieve the targets that President Trump is promising us, even some of it, I would say that right now, look around for bargains to buy and gobble up some of the things that you think are going to
You're a very smart man.
In a Trump economy.
73 cents.
An economy that is lower taxes and less regulation.
Okay. And at this point now, when you think about what President Trump is doing ahead of midterm elections next year, do you think things may change the picture a little bit between now and next year, election time?
Very good, Nicole. That's exactly the point where I would be looking at. He's got between now and the time Congress starts to shift his focus on the midterm elections to get what he needs done, which is why he's rushing so much. If the bureaucracy of the government starts to slow him down, and he is not able to get the reforms promising, especially the tax cuts and deregulation that he still hasn't started yet, then I would worry. And you're absolutely right. The minute the midterm elections start, it's over. The momentum he's built up has got to carry him through the last 2 years, because after that, he really is lame duck. And no new policies will be put in place. So whatever is going to be done has to be done between now and the time Congress starts to shift its focus onto the midterms.
Okay. Any final quick thought? I mean, are we concerned about the dollar?
In fact, that was going to be my closing remarks, which is to say, if you're really scared about the effect of tariffs on the U.S. economy, check out what's happening to the dollar. Tariffs can change where it is that we buy stuff, right? It makes some stuff more expensive and other stuff less expensive relatively, because domestic stuff is going to be relatively less expensive now. So if we start to buy stuff at home, and foreigners see that our prices at home are lower than they can find abroad, they're going to be buying more U.S. stuff, and that's going to strengthen the U.S. dollar. And I think if we keep our eye on the aggregate dollar and where that's going, that's a good indicator for where the overall
cheap now, son.
Okay. William Lee, Bill Lee, Chief Economist over at Milken Institute. Thank you so much. It was great to see you today.
Thank you for having me, Nicole.
Appreciate it. All right, coming up, Disruptors. George Silas is standing by. He has a highlight for NVIDIA. So the shares are down, as you know. But what's next? Let's check it out. He has an example trade as well.
Jimbo, you're in the green. You're having a good day. Yes, I am. Let's win today. Yeah. Oh, yeah. Check out the 5-minute, yeah. There's two-headed snake. $567.38. What's Tesla doing?
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage.
IWM's coming down to a head and shoulders.
Minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere, on any device for free. Only on the Schwab Network.
It's not really that big of a run today for it to be those options be up like they were.
Welcome back to Trading 360. I'm Nicole Petalides. We're live on the floor of the New York Stock Exchange. We're looking at stocks that are on the move. Diane Kinghall, host of Morning Movers here on Schwab Network, is with us to take a look at the automaker stocks. Of course, President Trump has been out with the tariffs, 25%.
Yep.
Looks like they're really trying to push for permanent tariffs. There's so much that goes into it.
It's true.
Tell me what you're looking at.
You're seeing the automakers get hit really hard off the back of this announcement.
Good deal.
Tariffs, and it's not just on autos; it's also auto parts. So it's the imports, right? Auto imports getting hit. So that means the automakers are taking a leg down. GM is getting hit the hardest today.
Very good.
GM right now
It's
down
way overbought.
7%. The pressure is because it has the most exposure to this in terms of where their cars are produced. A lot of that exposure in Mexico for GM. Stellantis is down as well. You're looking at Stellantis down more than 1.5% at the moment. Earlier in the session, it was getting hit a little harder than Ford. And Stellantis actually has more exposure than Ford, although Ford right now down more than 2.5%. The way analysts look at this is, look, this is difficult across the board. Barclays saying, quote, this is a more draconian outcome than most anticipated. There are no winners in the absolute, only relative winners. So again, that may be why you're seeing the pressure increasing on Ford, even though it has less exposure. A lot more of their cars and car parts are made here in the U.S. Deutsche Bank analyst saying, in our coverage, quote, Tesla and Ford appear to be the most shielded given location of vehicle assembly facilities, although Ford does face incremental exposure on import engines, right? So that's one part and one component. So, we know that tariffs are, the goal of this is
Spies at the VWAP.
manufacturing, steering, consumers to American-made cars. But many of these vehicles, the parts are also imported. So that's one of the challenges and why you're seeing so much pressure across the board on these car makers today.
All right, so look, I mean, the one good thing I read is that Tesla may have a little bit of a leg up because it does some production here and there. There was a call from HSBC today.
That's right, that's right. So you're actually seeing shares of Tesla move higher today after it did lose some ground yesterday. And so Tesla right now managing to shake off this analyst activity around HSBC. HSBC actually lowering its price target on Tesla to $130 a share. So that's signals significant downside from where we are today.
Spike VWAP.
Because I guess in the context, as you mentioned, Nicole, in the context of these tariffs and the draconian measures that are hitting the automakers, Tesla would be more shielded, like Rivian. Rivian makes, so Rivian and Tesla would be the ones that would benefit from these recent moves, given the more exposure for GM, Stellantis, and Ford.
Yeah, I saw Dan Ives over at Wedbush was actually hoping that this is a negotiating tool and maybe the tariff number will be revised a little bit lower. But I saw multiple reports about car prices going up by the end of the year between 6,000 and 12,000, depending on which report you read. Thank you so much, Diane King Hall. Great to see you. Appreciate it. And now we turn our attention over to the disruptors. George Silas is here, senior markets correspondent. Take a look at NVIDIA. Of course, the shares are off the highs. We did have a Chinese company, H3C, warning of NVIDIA chip shortages, according to a Reuters report.
Prepare ye in the name of the Lord.
Yeah, so I mean, I'm looking at a stock, Nicole. If you look at it year to date, is down 16%.
I got 567.38,
on a year-to-date basis,
but I don't know.
irrespective of earnings, and
I'm kind of taking it easy right now.
which is still tremendous.
Don't want to ruin a good thing.
60%, this year, fiscal year 25, in terms of growth year over year, and even earnings growth around 70%.
This could be it though.
But really, what's going on? There's a lot of course, challenges to their business, potential slowdown in demand for AI chips and data centers.
Move the calls up.
What Microsoft has really told us. But at the same time, they've got some challenges with China and regulations. There's obviously export controls, which are encumbering.
Oh, there they go, the 568s. 118,000 contracts.
Total sales in that
I'm going to go get me a hot chocolate.
Everything for NVIDIA.
I'm looking at the 568s.
You did mention HC3.
Let me go the next day.
A Chinese server company, and they've been declaring there's a huge shortage of chips. They're H20 Hopper chips, which are the new architecture chips that NVIDIA is providing, and they're due to two factors. It's really due to export control restrictions. The other thing is that Chinese regulators have been restricting the deployment of those chips because of regulatory concerns from the energy efficiency standards, which is kind of unique to this situation. So if you look at the news that's coming out, there's expectations by at least mid-May that the Biden administration's what are called AI diffusion rules on NVIDIA's export controls will essentially be manifested into an actual ruling. So I think what's happening here is we're seeing weakness in the markets, we're seeing weakness in NVIDIA, a lot of headline risk, but at the same time, there's a catalyst coming up mid-May.
All right, so look, if the catalyst is key, I like that you mentioned that. So how would you go about an example trade today?
Yeah, so without taking the guesswork out,
George.
the market certainly could go higher from here, but it also could retest some of the lows. And so we can structure a bullish trade going out to May, but what we're going to do in this case is take the guesswork out of where the market's going to go, let's say, the next couple of weeks. So I'm going to structure a long call.
Tesla got 280.73.
It's an April-May combined contract, and so what I'm going to do is essentially I'm going to be selling the out-of-the-money 125 April contract. I'm going to use the proceeds to finance the in-the-money 110 call option contract for May, which expires in about 50 days. So altogether, this would cost you about $8.50 or $850 a contract. So in essence, it's bullish. We capitalize on a break-even at the very least at 118.50. If you do hold this trade through the April expiration, the profit is basically unencumbered, but the stock has to hit at least 118.50 by May for this to break even.
All right, George Silas, thank you so much. It's great to see you. Appreciate today's disruptor, NVIDIA. Thank you, George. Coming up next, our 360 round, we're going to take a look at Lululemon ahead of the company's earnings report, the shares have been under pressure this year, down about 10% going into this print. People like the idea. It had a good holiday season, but is the stock price maybe too frothy? We'll ask our guest.
Ooh. Watch the SPX here. I might go for the SPX. That's a nice little sell-off right there.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading
It's
questions.
57.25s.
Complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Welcome back to Trading 360. It's time for a 360.
Yay, go,
round.
baby.
A lot of the retailers have given guidance has been a little bit tepid. What will Lululemon tell us this afternoon? And that's what a lot of
It'll tell me that I love you.
is the guidance. Shares have been down about 10% this year, more than 50% off the lows though from last August. So that's good news. Let's take a look here with our panel. Greg Portell is here, Senior Partner, Global Markets Lead at Carney, and David Schwartz, Senior Equity Analyst, Morningstar Research Services. Thank you both. David, I was reading through your Morningstar report. I saw over the last few months you've been raising your target of fair value, and you have 2 stars on Lulu. So you liked what you saw during the holiday season, but you don't like it so much at $341. Your fair value is lower at this point, David. Tell me a little bit more.
Yes, my fair value estimate on Lululemon right now is at $315. So I do think it is a little bit overvalued. Certainly it has been much more overvalued in the past when it was at its all-time highs around $500. It's been quite volatile over the past year. The stock was very weak in the first half of 2024. Then
God damn it.
late in the year. And as you mentioned, it's been up and down recently. But you know, Lululemon did pre-announce its holiday sales back in January, and the report was strong. I'm looking for 11.5% sales growth for the quarter when it's announced today. And I also think that the product lineup coming out this year in 2025 is going to be strong too. So there are reasons to be optimistic, but I do think it's already reflected in the stock price.
Yeah, and Greg, what are you thinking here? I mean, could this be a winner? There's a lot of competition.
There's a lot of competition. We've seen that even though it's an unstable consumer market, some of these retailers have managed to navigate through it. And if you look at Lululemon's history, they seem to be able to have with some of the management decisions they made, some of the merchandising decisions, they've been able to navigate that uneven consumer demand and post the type of results that investors like to see.
So at this point now, when we think about what the consumer is doing, will they, Greg,
do head and shoulders
enough when they do have money in the wallet? Because it sounds like they're going to be pinching the purse. And I know you'll be listening for guidance. What do you want to hear from the company?
Okay, guidance is definitely what we're all interested to hear how they see the market. But we've done some work with our Carney Consumer Institute that has looked at the stress consumers are under. So it's less about confidence, but it's how do they feel and how do they react to that pressure. And what we're seeing is they're starting to make alternate decisions between what's a need versus what is a want. And the key question for a brand like Lulu and many of their lifestyle peers is, are they able to capture enough consumer attention that they fall into that want category? You know, we have a group of consumers that want to feel good about themselves. They want to feel like they're dressing in the right way. And a key for a brand like Lulu is to make sure they're on the right side of that ledger.
You think so?
You know, David, you're looking also and talking about what a big footprint they have abroad. China helps them, and international markets helps Lulu a lot, right? Do we see that being still strong, and is the innovation good enough?
Yeah, I think it is. Look at where Lululemon is opening stores right now. Most of its new stores are being opened in China. The company also has, I think, a lot of potential in many countries in Europe. as well as other parts of Asia. If you look at the European countries, many of them only have a handful of Lululemon stores, so there's room for many more. And in China, there's certainly room for thousands more potentially if you look at what some of the competitors have. But Lululemon is exposed to economic conditions in China and elsewhere. So far, Lulu's growth has been so strong in China that economic problems there haven't seemed to be a big impact. But certainly we could see a slowdown in consumer spending in China that could affect Lululemon's growth there.
Yeah, and what about the other athleisure names? Are there any sort of retailers or
That guy needs some sleep.
more higher?
You don't look too healthy.
David?
Yeah, you know, there certainly are some that are undervalued. Nike would be at the top of the list. Nike's stock price has collapsed essentially in the last year, and my fair value estimate
Talk
on
about
it is
ugly.
$12. So I actually think Nike is extremely undervalued right now. Nobody really wants to own it, it seems, but this is still the strongest company in the sportswear industry overall, and I do think it will come back. I also think Under Armour is quite cheap. Under Armour, like Nike, has problems right now, but the stock, I think, already reflects that. And I think there is an opportunity for value investors that are willing to look.
It had a bounce today.
I saw a deal recently with Under Armour and gloves and
Come on, you idiot.
the NFL, which I thought was interesting. So what's your final thought here, Greg, in the landscape?
We really want to listen to how management teams are planning to navigate through the uncertainty. There's no doubt that the consumer's under pressure. There's no doubt that the markets are going to be volatile. And at this stage, we want to really understand and look at how those management teams are navigating, because they have the power to produce the type of results that we need to see. And it's all going to be how they navigate through.
All right, Greg and David, thank you both so much. Greg Portell of Carney and David Swartz at Morningstar Research Services. Good to see you both. Thank
One guy's scared looking, don't you think, Miss T?
Trading 360. I'm Nicole Penelides. I'll see you at 2 o'clock. Download our free Schwab Network app. It's available in the Apple App Store. Tune in 24/7, schwabnetwork.com. I'll see you at 2 for the watch list. Join me then. Fast
Don't
Money
leave.
is next.
Don't give me Jenny. Oh no.
Schwab Bank Investor Checking, the checking account built for investors, named high.
All the excitement's kind of gone in the market.
Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security
Better
features.
sell this thing or buy another one.
Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in
We'll see if it holds a double bottom. If not, I'll get out.
Funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor
Right
Checking,
here.
a checking account built for investors.
Join me, Oliver Rennick, alongside Schwab Network's options experts as we explore the second derivative. Gamma On is a brand new limited series to take your trading skills to the next level. Subscribe to Schwab Network's YouTube channel now.
Come on, you beast. Do-do-do-do.
Cut the cord on the way you get market news. It's Market on Close.
3.60.
Join me, Oliver Rennick, for the biggest earnings coverage and insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern. Available anytime, anywhere.
If this doesn't hold, I'm going to stop out. I'm at 360 and
Only on the Schwab.
460.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Come on, baby. I'm at 410.
Fast Market here on the Schwab Network. I'm Tom White. We've got a great lineup for you today. We'll discuss markets, we'll discuss tariffs, and then we'll have some option strategies. We're going to cover GM, which is down sharply over 7% on the back of that report yesterday out of President Trump with 25% tariffs on autos and auto parts. And then we're also going to discuss AMD, which was downgraded today. Bear market territory for that one. And then, like Folio, they're going to have consumer sentiment data in Lululemon. That stock's been under pressure over the last year or so. They report earnings after the close. All right, now let's take a look at the major indices, which are off of session lows and off of session highs. It's been choppy today. The S&P 500 now down about 0.2%. The Dow Jones Industrial Average off about 140 points. Go. NASDAQ
Break it.
100. Tech sector down about 0.3%. And the Russell 2000, the small caps, off nearly 0.5% in the choppy session. As I mentioned, to help me break down all this market action, let's bring in my co-host, and that's Kevin Green, senior markets contributor here on the network. Yeah, Kevin, maybe a little whiplash here today. Initially when these tariffs were announced yesterday after the close by the president, markets sold off. They came in today, they're flat, then they were lower again, then they were higher, hitting session highs. Now we're back in the red. I mean, I can't keep up with this.
Wow, them 568s are getting cheap again.
Actually, if you look at the lows for the day and the highs for the day, we've already seen about a 1% range so far. We opened up and flushed to the downside here. Tom saw some buyers coming in at around 56.70, and we were actually looking for.
I'm gonna move to the next day,
expanding. Saw tech starting to,
which is Friday.
Outperform or try to recover some of those losses here, but we kind of stalled out at around 57.30 on the S&P 500. Now hitting a critical area at around 5,700 here. And I think the market is just trying to.
The 572s. Oh, come on, baby, break.
I think that's going to really try to drive the price.
This is my average. I got 460 and 360, and they're now at 420, 430.
That gap that we had from Friday.
Shut up for a second, Kevin.
I thought that was a pretty decent test, but maybe actually going in and trying to really confirm that some buyers are down there.
Can we break the 21, or should I get out of them?
Rally, but this is something that's
not take the risk.
To kind of recapture some of these losses.
Yeah, I think that at least in the near term, those one-way moves that we've had over the last 2 years with little downside are maybe out the window at this point.
Don't silence me, Jimmy.
Back above the 18 level.
Oh God.
Stuff that real so slightly. So
470.
There's a lot of fear out there at this point, but let's expand this conversation. Bring in our next guest. That's Nathan Peterson, Director of Derivatives at the Schwab Center for Financial Research.
Always clean this,
Nathan,
Jim.
your take here. We've had some weakness over the last,
Jim Howard.
Couple of weeks.
Go ahead.
Volatility, but it seems to be that the market's getting comfortable with the headline risks that we're seeing and the 25% tariffs.
Yes.
So she said that that's something that she had never refilled for you. So she was just kind of wanting to know where you need this for specifically.
Oh, give me a second here. I have a little bitty rash on my butt. And that's what I got it for. They gave me they put a prescription in for the hydrocortisone 2.5. That's what they gave me. I went to the pharmacy and got it. And I was just seeing if I could get it stronger. She said she didn't feel that. She didn't put one in. She did.
little bit to solve instead, because I've got that report from somewhere else and it worked very well. Yeah. Yes, ma'am. Yeah, just a small rash. It's almost gone, but I just want to, I like how that stuff works. I almost used the whole tube that she gave me. Yeah, yeah. And that works, and then if I ever have any other little big sores or rashes, it really heals it up fast. But I don't go hog wild with it.
If she lets me know that she's put that in, I'll
Yeah.
give you a call to let you know.
Well, I'd really appreciate that, ma'am.
All right, you're welcome.
Bye-bye. Okay, we're at 540. We're going to the 200, so this is where I want to get out of it. Bingo. 540. Watch it run more. Let me get back in it maybe. 540 and 570. I sold the first one for 540. We're at 640 right now. I'm out. I'm completely out. Don't ever doubt the wash. So I went back to the 200. I sold my first one right before I got to the 200, then the last one right when I broke the 200. I have a feeling the room thinks I can't trade anymore. Might have to retire. I feel like a loner in here now. All because I had one bad day. My reputation's ruined. It's all right. I've seen it before.
Blood in the streets type of sell-off here. We haven't had one for a couple years now, Nate, and that kind of makes me nervous about the direction for equities and our rally's going to get sold in this type of environment.
And that's, yeah, I agree with you, Tom, and I have the same sense that, 22 was too high given the uncertainty. Take the S&P down to a forward PE of 20, 10% correction. It hasn't manifested in the hard data, not to the extent to where the slowdown in growth, like a significant slowdown in
Snake
growth, is
breakout,
justified.
pull back, double
We are
bottom,
seeing
boom.
some uptick in, some recession
To the
odds,
200
and that's
EMA.
putting on the table. I don't know what the odds are of stagflation, and I know that word is becoming more prominent in the press. But gosh, we sure don't hope for that. Our last bout with stagflation was in the 70s.
No, it
The
wasn't.
PE on the
It was
S&P
with Obama.
500 at that time was 7. If we talk about the R word, recession, if those odds are creeping up, I know.
I disagree with this guy.
Was putting 50 to 60%.
I talked about stagflation a lot during the Obama years. Wages did not go up with inflation. And they just kept printing and printing and printing and printing and printing and printing. And the wages did not go up. We went from 9 trillion in debt to 20 trillion. In his 8 years. And that's not counting unfunded liabilities. They were a lot higher because of Obamacare.
It's been in there. And then also this technological revolution, not just AI, robotics, etc., that allows for potentially higher growth in the future and therefore justifiably higher PE right now. So if you begin to take some of these pillars away, then it gets harder to stand. And so AI, it's still a question mark. I'm not sure that it's dead. If you look at, the likes of, you either stand on two camps. Yeah, it's basically, an internet bust all over again, and we oversaturated, overspent on all the hyperscalers. Or you sit
And it was
in
a good trade.
Dan Ives, Gene Munster camp, who still believe that we've got several years in front of us in terms of a mega bull market. So it would be nice for the bulls to see some of that confidence and that sentiment improve around AI. I'm not sure exactly what that's going to take. Maybe we have to wait until May when we get NVIDIA's earnings. But yeah, this is just a lot of cross currents, as Kevin says, that the markets are having to deal with. So, with the VIX at 18, if you're concerned about this type of volatility, you're concerned about a growth slowdown, there's a number of ways that you can protect. There's not just protected puts, there's callers, there's put spreads on the S&P, there's call spreads on the VIX, etc. So it's something that you could consider if you have those concerns around the market.
Yeah, I mean, the S&P is still down just about 7% from those all-time highs. The NASDAQ 100 down about 10.5%, and the VIX sitting at 18. I mean, it doesn't seem like there's fear in the streets at this point. But KG, you look at the push into gold. That has me scratching my head because that's kind of that warning signal where, I don't know if it's, against inflation or it's just people positioning, central banks positioning into gold, hitting on record highs again. Because nobody's going into treasuries right now. Those are falling, and those yields are rising.
Yeah, the gold trade, traditionally looked at as risk off, and then it was trading as risk on. Actually, if you kind of look over the last 3 weeks, 4 weeks, do a comp chart between the S&P 500 and gold, or actually before this pullback that we actually had about a month ago or 2 months ago, they were pretty much trading in tandem. We'd have up days in the equity markets, we'd have up days in gold, and vice versa. And so it seems like this is not only just a crowded trade on the managed money front. You can see that from futures positioning. You also have the central banks buying. You have the repatriation trade, where we're seeing the physical moves from London and from the EU in general.
So on this last trade I did, I took it at the right shoulder, and we broke out a little bit. I called it head and shoulders, and we broke out a little bit. Then we created a two-headed snake with a double bottom. So we had the channel. Let me move this over a little bit. So we had the channel from here to here. We had the snake, and then it broke out of the snake, and I jumped on it right here thinking we were going to hold that head and shoulders. Then it pulled back, and I bought the dip at a double bottom. That's a double bottom. Double bottom. Boom. Now they're back to 690. I got out at 680. The second one. And I sold one of them before the 200, and then I sold the other one after the 200. EMA. So if it breaks this resistance up here, I might get back in. And look at the 557.30s. We're at another resistance right now. You think we're going to break this?
Caroline?
Yeah, weakness across the board for the big three, but GM definitely the worst performer of the big three, and actually the worst performer on the S&P 500 today. Shares off earlier lows, but still down more than 6% right now. Now down about 10.5% year to date, 22% away from the highs. So this, of course, comes after President Trump slapped the 25% tariffs on all cars that aren't made in the United States and certain car parts made outside of the U.S. as well. The goal, obviously, is to bring more manufacturing jobs back to the U.S., but it's complicated by the fact that the big three, including GM, obviously get some parts, especially from Mexico. Trump said there's absolutely no tariff for cars that are built here in the U.S. The tariffs will come into effect on April 3rd. Initially, they target fully assembled vehicles, but that will expand to include major auto parts by May 3rd. Of course, earlier this month, on March 5th, Trump did give the big three that 1 month exemption from his 25% tariffs on Mexico and Canada for vehicles that comply with the USMCA, the North American Trade Deal. But it's clear, based on this reaction, that automakers were hoping for some better news last night, or maybe some carve-outs based on the reaction. I noted GM's 6%, 6+% decline. Stellantis down about 2%, Ford down a little bit more than that. And of course, Tesla shares rallying today. Tesla makes, assembles all of its cars here in the U.S., so much more insulated from those tariffs, much more protected from those tariffs. I've seen quite a few. I should also note that Rivian and Lucid also are higher today. I've seen quite a few analysts weigh in on this. Deutsche Bank said, talked about Tesla and Ford being the most shielded given the location of their vehicle assembly facilities. They did say that Ford faces incremental exposure on imported engines, but that GM has the most exposure to Mexico. RBC called the tariffs a potential disaster, but a low probability one, actually. It says they would be so destructive to the auto industry, but doesn't necessarily think that they will hold. Dan Ives also expressing some skepticism. He's over at Wedbush, of course, about if those will actually go through. He thinks that they'll actually only end up targeting the full vehicle versus the parts. But he said if these initial tariffs, if they hold their current form, are implemented, they'd have a hurricane-like headwind to foreign and many U.S. automakers, and in turn ultimately push the average prices of cars up $5,000 to $10,000 depending on the make, the model, and the price point. He says it's almost an untenable head-scratching number for the U.S. consumer. So the White House says the tariffs will result in over $100 billion of new annual revenue to the U.S., but it could come at a cost to both the automakers but also the consumer. So definitely some uncertainty still around these, but putting pressure on especially the big three automakers here.
Yep, and expect more commentary from Canada, Mexico, the EU over the next week. All right, great stuff. Thanks to Caroline Wood, Senior Markets Correspondent here, helping us break down that story. KG, I'll go to you first here on this one. I mean, give me your take, because GM was actually not doing too bad. They were buying back shares. They were raising their dividend recently. But this is definitely going to hurt.
Yeah, it is going to hurt them, and they'll probably start reducing production before anything else, right? In order for them to try to offset some of these costs, and it's going to be very hard.
We're back at support.
Here in the United States.
So if I was to jump in, it'd be now. Maybe. I want to see where that line come from.
Windows Defender has temporarily disabled your internet connection and computer for suspicious activity from Facebook. Please do not shut down or restart the computer. We have detected that you may have clicked on a virus-infected article on Facebook. Please call our support before your Facebook account is permanently suspended. Windows Defender has temporarily disabled your internet connection and computer for
Yeah, is this Windows security? Yeah, it says here. Yeah, it says I got a virus on Facebook. Huh? What do you want to know? Yeah. It says Facebook malicious activity detected. Yeah. Let me see here. Yeah. Yeah. Yep. Yep.
On the keyboard, left side, left-hand side, the first key on the top is escape, ESC. Do you see that key?
Yeah.
Press that key for like 2 seconds and then release.
Yep.
Now, left-hand side of your keyboard where you see the escape key in the very bottom left side corner, extreme left, do you see the control CTRL?
Yep.
Next to the control, what key do you see?
Windows.
Windows key, right. What you need to do here, you need to press the window key only and hold it down, don't release. And while holding the window key down, you need to push the letter R to Robert. Windows plus R. Now what do you see on the screen, lower left and bottom corner, sir? What do you see now?
Nothing.
Try again, press the window key, and while holding the window key down, push the letter R as in Robert.
Letter R, yeah.
Now do you see any box called down?
Yep.
Alright, where it's left and lower bottom corner, right?
Excuse me?
Run, type the name of the program code. What it says run, type the name of the program.
It says open. Type in your program.
Right, I can see the pictures off. In the box, inside there, you have to type first letter C as in Charlie,
One more time.
C as in Charlie,
Yep.
M as in mother, and D as in David.
What is that?
C and D, correct?
CLV.
No, C as in Charlie, M as in mother, M as in Mike, and D as in David.
V. I can't hear you.
D as in Delta.
Victor.
No, D as in David. David, Delta, David.
B.
D for dog.
Yeah.
Got it? So, what did you type
CMB. And David. C and D. Yeah, I thought. Okay. Yep. This is CMD as in David. Yep. Is it my user's name? Another one to come up. Yeah. Nancy what? Yep. 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 Yeah. No, it just says Jim Howard. Whoops.